Good morning. It's March 23rd. I'm starting a little early this morning. We might be about to get material news on BBY that answers all of our questions. So figured I'd start streaming. I think this rally this morning has been partially in anticipation of that, as well as what came out in the 8K here already. So I'll pull the 8K up here. Basically, the warrant holders, the way I'm interpreting it is the warrant holders are waiving their right on the floor price that they previously had. So further evidence that the warrant holders are friendlies and want to see the stock go up. Zoom in on that a little bit. But as well, in the same 8K that was released this morning, they also have this. Where is it? This little section, which this could read they're going to release all non-public material by 9:30 this morning. So, or it's just referring to this filing itself. I'm not too sure. I'm gonna quick share the stream though. Yeah. What? Morning Chop, morning Next Sparrow, morning Tainted, morning Steven and Bad. Taco Thursday. Yeah, that's why I started the stream early. I'm still getting set up here a little bit. I was watching it and actually have an order for another 6,500 shares if they're gonna release something. The way I'm reading this is they might be releasing something this morning. Sorry, there we go. After this that they've already released, which this is very bullish from what I can tell. So basically waiting for the stock price. The fastest way you're gonna know when something's released is that little ticker right there. So it's either gonna rally up insane or potentially have a little drop. I say a little drop because I don't think there's a whole lot priced in right now. Maybe this last 8% this morning, but I don't think there's a whole lot priced in for basically bullish news. And usually I feel like when news comes out, it's on the half hour or the hour, and I think that was even part of this run up right here, because right about half hour when news didn't come out, it started to sell off. So might see it start to rally back up before 9. Basically, it could be all of our questions answered on BBBY coming out within the next 45 minutes. But to summarize what this filing does state that they released this morning, other than this this part, initial jobless claims came out, by the way. Jobs are stronger than estimates. There's actually a tweet that summarized it pretty nice. Or even mine, never mind, I'll just do BDD. What? I shared it here. Discord has been annoying the last like couple months. Not connecting, it's crashing. I go to share stuff on it, it never connects. And then I share it, and since it didn't connect, it says it looks like it's shared, and it didn't actually share, and I have to try and share it again. That's, I don't know what's going on with it. You guys having that problem with Discord? Is it? Here it is. Bed Bath & Beyond. Oh, that's not a good one. Entered into a letter agreement relating to that certain warrant to purchase Series A convertible preferred stock. Well, I mean, you can read it here. It's just the legal say or whatever. The waiver is limited to the term of the warrant explicitly waived in accordance, effective as the time. This is talking about. Okay, so here basically. Effective as of the time both the company and the holder of the warrants shall have duly executed and delivered this letter for the period commencing on 9 a.m. March 20th through and including 9 a.m. April 3rd. So that was the time period they had, right? For to stay above a certain price. The limited waiver period, the holder hereby waives the occurrence of any price failure. So it waives the occurrence. So basically they're waiving that right of it dropping below that threshold. Waives the occurrence of any price failure that has occurred or may occur during such a limited waiver period. For avoidance of doubt, the limited waiver shall cease to be further forced in effect after 9 a.m. Or maybe this is just saying, this is just reiterating that it's going to be ended on the April 3rd. I don't know. Now that I'm reading that. Yeah, because now it's saying it should cease. Or now I'm seeing it ceased to be further forced in effect after 9 a.m. on April 3rd. So maybe it's still in effect till the 3rd. Oh. To me, I mean, I don't really care. I don't really know. Like, I feel like as far as a squeeze and like a trade, sure, Cohen would probably get the most retail behind it, give it the most initial momentum. But if it's a friendly actor, like it doesn't necessarily matter. But yeah, I'm not even sure. This last sentence makes me think this isn't even saying anything. It's just reiterating the terms they already had. And then the part about them releasing non-public information is very interesting. So that's right here. The company hereby represents and warrants to the holder that by no later than 9:30 a.m. Eastern Standard Time, that's today, that's 45 minutes, the company shall have disclosed all material non-public information, if any, provided up to such time by the company or any of its subsidiaries or any of their respective officers, directors, employees, or agents by the filing of a current report on Form 8K disclosing the existence of this letter. So that seems like they're going to come out with another 8K before open, disclosing all non-public information, right? In addition, the company acknowledges and agrees that any and all confidentiality or similar obligations under any agreement with respect to the transactions contemplated hereby within written or oral between the company and any of its subsidiaries or any of their respective officers, directors, affiliates, employees, or agents on the one hand, and on any of the holder or any of its affiliates on the other hand, have terminated. Yeah, so this is the end-all be-all, it seems like. Basically all of our questions answered, like make it or break it by 9:30. I'm not even like, even if it's, I don't know what could even be necessarily bad news. Like if it's not Icon or Cohen, I don't know what would be bad news. I guess more dilution. basically I'm saying the price is so low and it's sold off so much from bankruptcy that there's nothing priced in to the upside. So even if it's not news that we're hyped about or whatever, I don't think that'll even cause much of a sell-off, if any. Price jump, but it's red. Okay, so yeah, here's a filing that was released this morning, and I've got the, where is it? I have the investor relations page open to see, but the quickest way to be able to tell will be literally the stock. And then I've got an order for 6,500 shares. So if it is Cohen or Icon, I think, or one of their entities, yeah, I probably will be averaging in. This was a reply 3. It's preferred warrant waiver. If I'm understanding this verbiage, potentially all questions will be answered before opening bell. Yeah, BY News for sure, Ace. They've released a filing this morning. But in that filing, they're basically saying they're going to be releasing another one before market opens, disclosing all the information. Any non-public information will then be public, which is my understanding of this. I did watch some of PP show last night, yeah. See, it was a Gerber, baby. BY to purchase Tesla. I don't think that's what they're going to disclose. But usually filings and stuff are released on half hours or hours, so I think this was a little run up for it to be released at 8:30. It wasn't. My next guess is it's going to be released in 7 minutes. 6 minutes at 9 o'clock. Yeah, if it's going to be on a half hour, that's it. Let's release it right at opening bell. BY has a lot of volume. The IV has stayed super high. Well, they say it's going to be before market. They say no later than 9:30 a.m. So, it's going to be before the bell. We're down 20% due to Hindenburg research? What research are they doing that caused it to go down 20%? Icon, Volition Capital, RC Venture, and GameStop to buy Baby for $2 billion in cash and $1 billion in stocks. Very specific request you have, John. I'm not smart enough to have such specific demands, so I'll just go with yours. Yeah, that's what I want to see too. That exact thing. Alright, 4.5 minutes. You can keep going on about HST. Host hotels. Yeah, just weird pre-market stuff. Yeah. Kept flushing, broke that floor, broke that support. You want to see it hold this 15 level, or you're going to keep coming down 14.5. That's the next major support there. hold there. Maybe that 14.25. You have this line here. Did I draw this for you? Probably. Yeah, I broke through that line, so that bounce is missed. This is actually what I told you the other day, I think, when I was looking at it. It's the first trend line you want to bounce on. If it doesn't, look for that next support. I don't know if you guys can read this at all, but I'll leave it up here if you can. Could zoom in a bit on it. Isn't it? Wrap. Word wrap. I shared this on Happy DD. It's on our Discord too. I can put a link for it if you guys want it also. Alright, 3.5 minutes. Yeah, block shares sink 20% after Hindenburg discloses. Oh, their short position. Just them disclosing their position causes a sell-off, which is common, but it's crazy. Short it and then distort it, but you don't have to distort it. You just short it and then release public information of your position. DBD is severely undervalued. At the edge of the flat earth. Alright, let's see, 2 minutes potentially. Heard of this one? Bank. Looks like it by that chart. This Dorda. What? Market's up 0.5%. That jobs data didn't seem bullish to me. Where'd that release? It's pretty close to expectations, I guess. Okay, 1 minute 15 seconds. Got an order ready. I mean, maybe we're interpreting it wrong, and I don't know. It seems like that's what that says. Are you awake enough to get a thumbs up? Are any of you? Just kidding. 16 of you are. Thank you so much for those guys. I started a little early just because this BBY news. So it's coming down here. Let's see. Let's see. 30 seconds. This would probably be when it would be released. Unless they're not going to do it on a half hour or hour. Or I'm interpreting this wrong. It's nothing's coming out. Pull up. I thought I had it up, but I don't. Yeah, I've got the investor relations page up. Or no, let's see, 8K. I was refreshing it this morning. Yeah, still just the one. This one right here. There's 9 o'clock. Stock hasn't moved. Not seeing anything. Give until the end of the minute. Okay, so they're not doing it on a 30-minute or on the hour, it looks like. That is interesting. Maybe write it, mark it. No later than 9:30 a.m. That's today, yeah. The company hereby represents warrants to the holder that by no later... Wait. This is saying they're going to release the information to the holder. Is that what that's saying? The company hereby represents and warrants to the holder of the warrants. Notice closed. Is that what that's saying? I'm a holder of sorts myself. Yeah, 9:30 Eastern, so we have 30 minutes. It says no later than. I'm just assuming it's going to be on the hour, half hour, but at this point it's not. Maybe on the 15-minute. But am I just reading this wrong? Is this saying they're disclosing to the holder? Wouldn't the holder of the warrants already have that information? Since it seemed like a private sale of their warrants and it wasn't a, it's not on a tradable market or anything. Disclose to the... I don't know, you guys can see the filing here. What do you guys think? I don't... I mean, the news that this filing has, to me, is bullish in itself, for sure, and I think that's part of the reason we're seeing this rally. It was this last paragraph that made it seem like another 8K was coming out before open. But maybe this is saying it's disclosing all non-public information to the warrant holders. Goes to holder. I'm not sure. Other people, I think, were interpreting it the same way too. I wasn't sure initially, and yeah, and then that was my second thought, is maybe they're just talking about this actual filing itself. It's 4 or 5 words in the first. Where does the first sentence even end? This whole thing is a sentence. Oh, right here. By filing the current report, inform AK's closing existence of this letter. I know, that's what I was thinking. ChatGPT always says it's full. Yeah, I put the link there if you guys are in ChatGPT, see if you can translate this. Charles Schwab says it could run out on, could ride out a run on deposits. Oh, I said run out of deposits. Ride out a run on deposits. Shopify deepened its partnership with Google to bring Google Cloud's search, discovery tooling, enterprise brands using commerce components. I don't. I'm not. No, nothing new. Just this first initial 8K, and I'm trying to figure out if this is saying there's going to be another 8K releasing information, or if this is talking about this 8K, or if this is talking about information that the company is releasing to the warrant holders. Not quite sure how to interpret it. The way I see they're telling us who the warrant holder is. With this, I don't know who it is with this. Yeah, I mean, good pre-market volume, good price action, but that, I mean, that's most likely from what's in here, which is bullish and signs of a friendly warrant holder, as far as I can tell. This is an 8K. I mean, yeah, maybe it was emailed, but yeah, via electronic mail. It's still an 8K though. I mean, you can read all this part of it, but this is just the legal jargon. This is what matters, this little section right here. Ladies and gentlemen. So yeah, this is what what's in the AK. And what's bullish that we know of already is right here. But then I also second guess myself on this part, because this also kind of seems like they were just reiterating the terms they already had in place. Or is it saying that, because it says it's effective as of the time both the company and the holder shall have duly executed and delivered this letter. Okay, so there you go. So it is of this letter for the period commencing on 9 a.m. through 9 a.m. April 3rd. Wait a minute. Can't think too much yes. The holder hereby waives the occurrence of any price failure that has occurred or may occur during the such limited wait period. Okay, yeah, so it is that. It is that. This last sentence threw me off, though. For the avoidance of doubt, the limited waiver shall cease to be of further force and effect after. But it seems like they're waiving their right. The warrant holders waiving their right of the price failure clause that they had in there. We might not getting all of our answers this morning before 9:30. Depends on how this is interpreted, this last paragraph. Yeah, this might just be liability disclosure type stuff at the end here. I'm not sure. That's what this is down here. So this is in the kind of the body of the email, so I don't know. Do you actually have him on the line? That's true. We could just ask investor relations. What does this mean? The question is, are they disclosing all non-public information today before 9:30? We could probably get investor relations though. Well, I don't think they have a chat, but we can maybe email them. I mean, we'll know by 9:30, I imagine. Also, does this mean that they are? Does this mean that they are not under the price failure requirements that they were on before? Will cease to be in effect after 9 a.m. on April 3rd, though. That was already in the filing. Even Webull and news outlets get stuff wrong often. And if they don't understand it, they just put it in there. Same thing I do. If I don't understand, I'll just tell you what it says and not interpret it for you. And that's all the news I've seen on this release so far this morning. They basically just put it in there and not interpret anything because they don't necessarily know. My bats out order the new AK. I don't know why they would have this filing if it's nothing new. If they're just reiterating what's already in the contract. So there's got to be a reason for this filing, and it caused price action. It makes me think that that whole thing is waived. See. Well, I'll just keep going here. I'm gonna put a link for the Discord. If you guys aren't on there, welcome to join. And I'm gonna pin it. It's now 9:15, my normal start time. Thanks for your like there, I appreciate that. And yeah, that filing, we have it on Discord. I can link it again if you guys want to read it. GME is down 3.4% pre-market here. Still finding support from yesterday's lows, so I'll see if that holds. Yeah. Just nice consolidation. It's like a fixed stock. Chart and BBY, like, it's not. It looks like it's flattening, but there's no bullish signs yet. This is an engulfing candle. The downside. Our MACD is bullish, but this thing's just 100% news dependent, it seems like, until we get maybe another cycle, which that could be a couple months at least. So yeah. Okay. Twitter fell on 9:30. That last paragraph could just be referring to that filing itself. It also could read that they're disclosing all their information to the warrant holder, which could be good or bad. Down 6% the first 3 months, not bad at all. That's true, we still have GME's 10K that hasn't come out. And this BYAK for no public info. I think I'm winning, Drew. 9:30 make it or break it. I guess 9:30 will have an answer on what that last paragraph said. If they were saying that they were going to release something before 9:30, or if that was what they were releasing before 9:30. About 12 minutes to open. US adds 14 Chinese entities to red flag list. Shopify deepened partnership with Google to bring Google Cloud search discovery tooling to enterprise brands using commerce components. Block shares dropped 17% on a Hindenburg report of their short position. The banking crisis hasn't fully played out, so it's too soon to call market bottom. BlackRock strategist Gargi Gaduri. FRC is up 8%. Nice. Pulled out of BBY this morning? You sold? Did you buy it this morning also? Borrow fee on GME is still in the 30s. We had that rip yesterday. It did drop down to 25%, but it's back to the 30%. Morning, Mahmoud. Ahmed. Oh, you closed all your shares? You take a loss? Your 21,000 shares? 20 Daisy. I get what you're saying, Ace. I get it. He's got a different strategy, different plan. Come back in. Woo. Well, 8 minutes open. No new filing, but the filing we got here seems bullish. If what I think it's saying. Ford has applied for a patent to remotely repossess cars after missed payments. Yeah, I saw that. Yikes. Credit Suisse says 571 million of notes validly tendered. Okay, here's Hindenburg's report. Hindenburg research says our research indicates that Block has wildly overstated genuine user counts and understated its customer acquisition cost. Wow, they're calling them frauds. We are short shares of Block. Yeah, jobless claims was 191,000. Estimates were 197,000. Continuing jobless claims were 106, or let's see, 1,694,000. Estimates were 1,690,000. Tainted. I don't know if we're gonna get any new AK. That's maybe not what that is saying. Oregon Donero? Big pump? No, might bounce to yesterday's levels, but no big pump yet. Thank you guys for your likes. Started a little early today because of that BBBY filing. Got 29 of them. Well done. Well done. Those are some groggy thumbs. It is up 5% at this point, pre-market. Think it's coming? Usually, I feel like filings don't come this close to the bell. But I'm ready. I'm ready for it. Matei, are you on YouTube chat? Your name's Matei on Discord. You say it seems to me that they remove the price failure plus reverse split so they can dilute more. I don't see where they talk about removing the reverse split. And I don't see it as bearish because it can go lower, but they are still stuck in there, still stuck in it, then they can't cancel it. So that's why I just see it as bullish as far as removing the price floor. It seems like the market does too, based on this pump. Happy money wakes up early. Trying to make gray hairs brown again? The reverse effect, that's awesome. Oh, we are going to hear a bell. I'll turn it off before the bell. BBBY coming down a little bit more. Jason, I don't know if we're getting another filing before 9:30. So you can breathe. You may breathe now. Oh, GME did flush there. Down 5% pre-market. Predictions? Without a new filing, probably the same thing every day. Flat. Hopefully. Not every day, but the last day or two. SPY moving up, and GME did a flush through the support there. Kind of strange. With all its volume on GME, though, it's kind of moving on its own, which is good. Yeah, I mean, there's ways around them finagling different tools to not cover. But we definitely see, I've seen it with reverse splits where there's price action before, during, or after. And I would presume it's from shorts getting out. So I think typically, not typically, but with heavily shorted stocks, often in recent history we have seen price action from it, which is the only thing that really matters to me. And if yeah, it seems like it would be from shorts closing. What's casino time? Yeah, 30 seconds. So yeah, we either interpreted that wrong or they didn't come out with it, but I'm assuming they were either talking about that filing or that was talking about disclosing non-public information to the warrant holders, which seems strange that they would put that in the filing. So probably not that. All right, there's the bell. See, we didn't get a bell. This was weird. The other day we had a bell on TD. So SPY's opening up 0.8%. Wow, that little move there was quite significant. GME opened up down 5%. See what the volume's like on GME today. Very curious on that. Max dropped after the run. Soaring higher than my ego after a round of golf. What's that X-ray? SPY's moving up. Up almost 1%. Put some lines in here. It just broke pre-market high, I think. Oh, close to it. BBBY kind of flushed out of open. GME with good volume in the first open minute candle there. Not like yesterday, but good. Is there? Yeah, we didn't get the filing, so I think that was maybe talking about that filing itself. That would be my presumption. OXD is up 36%. Phase is up 15%. Birds is up 6.5%. Snap is up 5%. Yeah, Wizard, you can sell one strike cash secured puts. You could sell monthlies or weeklies if you want. There might not be much premium on weeklies though. I am closing out of these covered calls, or just this one, I guess. It's up 80%. So I'll close out of that one today. Maybe I won't. You can do the 50-cent strike. The thing is, if you're 50-cent strike, there's hardly any premium on any shorter dates. So that's why I would do the one strike. And then you can decide at the end of the week or when it expires if you want the shares or you want to just keep farming, theta farming and collecting premium. You can either roll it or let it get assigned if it's below that $1. But the cost per share that you get is going to be the same whether you short a one strike or a 50-cent strike if they're in the money at expiration. If that makes sense. So you're getting the same discount more or less on either one. As far as the 100 shares you have, I mean, you could sell covered calls on it if you wanted, but that, that's going to limit your upside. So if you're trying to hold for some big gain, I'd be careful selling covered calls on BBBY right now. But you never know. I mean, we could go on like this for months. Hey, furs. Yeah, that is interesting. So I guess it was talking about that filing potentially, or that they're releasing non-public information to the warrant holders. Tops is up 4.5%. GNS is flat. Down 7% on XXII. This thing's not repeating yet. Still holding that support, which is good, but not doing the same things back here yet. You just bought XXII. Open door, almost 10%. Not bad looking. Scaling in. Scaling, that's the way to do it. GME is down 2.83%, but climbing up here. Gosh, that's annoying. Cover call I open, I can't close it because I don't buying power. Margin sweeps for futures, or I'm not even trading futures, I just have a position and it's just I guess I'm holding it. Yeah, I guess that was the AK they were talking about. The wording was strange, but Coinbase global shares down 50% after SEC threatens to sue company over crypto products. SEC is going to sue Coinbase? Oh. But for no reason. AK's morning was the AK promised in the letter. Disclosing. When you talking about the letter, that the AK was. Hey, Kuro. The YouTubers, yeah. Yep. Yeah, so you're saying that the wording in that was talking about that filing itself. GME's moving up here. Down 2%, but moving up. Volume is much less than yesterday, but I'd say much more than the day before still. Yeah, we're at 1.1 million already. AMC is rallying up a bit. Yeah, we might get a move with on GME with AMC. AMC going. LoxD 64%. Going crazy. Does have that RSI divergence there. Might be a nice pickup. Hard to tell how big of moves these are because it's so cheap, but yeah, it's a 150% move from yesterday's low to right now. Kind of coming down, rejected that 395, the pre-market high, didn't really break that. GME looks like it's moving with it. BBY, we did get the filing this morning, which seemed bullish, but it's given back a lot of the gains now from pre-market. Still up 2.7%. Put a lot of eggs in the AMC basket. A quarter of the Scottish guys? Are you still doing like voice to text or something? We've got a good price on AMC. Dude, the sell-off yesterday on SPY was crazy. LoxD 77%. Wish I had buying power for this thing. Yeah, I mean these moves on it are massive. was 250, 300% that move. 80% there. Oh, I see what you're saying. Yeah, people don't subscribe. I'm not sure. I take it as bullish, yeah. Basically, the warrant holder gave up some rights that they had when they signed the agreement. So gave more rights back to BBY basically on the floor, the price floor. So that's how I took it. I broke that high now from pre-market. And that support from back there. 397.37 is kind of the next level I see, which is a little ways up here. Volatility. Big drops yesterday, now we're rallying back up. Big gap up. That was very lovely, X-Ray. In a very sad way. Lovely and sad. Net gas up a little bit, 1.5%. GME is moving up here, high of the day. Seems like it's following SPY actually. Termination of confidentiality. Was that in the filing? So you're... Would that be that last paragraph? What you're thinking? I don't know. Saying that now that non-public information can be public. I've not even thought about that interpretation of it. So, yeah, maybe we'll be hearing some news soon then, from whoever's able to talk about it. Diamond hands gripped, emotions high, GameStop stock flew up to the sky. But market forces proved too strong, and now my dreams are shattered and gone. Box D 70%. Starbucks is up 13%. One of those Chinese IPO ones. Bluetooth's up 50%. How's Owl's Baba Play? Yeah, doing well. Gap up 4.5%. Nice. Buy moving up here. Box D holding up. Open Door moving up. Almost 13% there. Phase. Gap up and sell off. Awesome. Might be at a nice level on Cosm. Maybe a triple bottom here. Let's buy with a red candle. Bird's up 13%. I think some more insiders were buying this, which is one of the most bullish things basically you can get with the stock. To Greater Toronto. Yeah, insider buy. GameStop's future bright and bold. Our story one that will be told. To those who doubted, we now say we'll keep on holding. Come what may. Things will rise again. It's only a matter of time. You're gone. Is that the news on Box Diggs point bankruptcy? Nice. GME does have gaps down. Yeah, I mean the gap it made by earnings. I don't think there's another one below that. No, because that's it. So yeah, just this gap back to 1835. Which it's filled some today, just with its open. We did break through yesterday's low. Funny. Starbucks ripping up here. Eye's actually holding up now. Just wicked that red candle. Back on the grind. It's like SPY wants to keep repeating March. See if GME does also. Or maybe the whole March move was just all after hours. We've gotten to our price target of 27. Morning, Christopher. That's the thing, we've never seen it like this. We haven't seen a gap like this. Not since years ago. When we did, it just was followed by crazy rips. Not been from earnings. This is all unprecedented. Fine, I'll turn back on 200. Yeah, it did a little bit. 50 test, maybe 1992. Currently, maybe 1940. Ah. GME just hanging out here. Volume's pretty good on it though this morning. Coming down from yesterday's volume for sure. Got 1.7 million so far. Bed bath volume. It's like less than yesterday. Yesterday, I remember it gapped up with GME and then it sold off during the day, so higher volume on that sell-off. Another day to hold this level would be good though, this 80-cent area on Bed Bath. Yeah, so I would, depends on your plan if you want the shares or not. Even if you don't, I would probably still sell the one strike cash secured put on it. And then if it's if you don't want the shares and it's still in the money, just roll it. If you do want the shares, just let it get assigned. So I wouldn't do this week, not enough time. You do next week's. You do the dollar right here. You receive, you know, $23, $24 to open it up. And then take $100 worth of collateral or cash to hold that position. And then next week, if it's, you know, if it's below $1, you would just roll this to the week after or the week after, wherever you want to. And basically you just keep rolling it until if and when it comes out of the money. Or once you decided you wanted the shares, you would just let it get assigned. Hurting on it, Kuro? I'm hurting that you have AMC. Infinite bull trick. What the hedges you're doing? 77% on box D. Birds up 10%. GME with the red candle there. Same with SPY. That gas moving up a little bit, but we won't even talk about it. Oh, the UN is a publicly traded company. Yeah. I think demand destruction is, yeah, recession, all that. It's going to maybe keep that gas from a big rally, fortunately. So I'm not going to hold for crazy numbers on this thing. It does still look like it double bottomed here. Did give us an engulfing candle to the upside, so still kind of hopeful for a bounce. MACD's bearish, so red under the 9. Like to see it hold and rally. There's still a big supply of nat gas, and of course demand is down. The winter wasn't as cold, and energy demand's going to be down with, you know, high interest rates and recession. So yeah. Popcorn gonna bring in the bugs. Money printer, baby. Yeah, they're selling their popcorn at like Walmart now, right, or something? What I heard. U2 is up 10%. Yep. Awesome. Buy with the little double doji there, see if that's a reversal or not. Starting to waver. Whoa. Oh. My monitor shut off? That was weird. My monitor like shut off, but it was still displaying what was on it. Whoa. Yeah, I guess there is news. Bed Bath & Beyond investor Hudson Bay preserves fundraising deal even as stock dips below. I guess that was that AK we already saw. That's what it's talking about. Hudson Bay preserves fundraising deal even as stock dips below $1. That's talking about that 8K, I think. Applications for mortgages to purchase homes are down 44% year over year. And yet housing prices are still increasing. high can Box D go? High. You see the range, like last time it started rallying, made up here, what, 77 cents was the high? So Don said this was on bankruptcy news. I'm not sure. Chart though looks pretty nice. We've got RSI divergence here. A lot of volume on these last 2 days. MACD hasn't flipped yet, but that RSI divergence is alive and well. But it's probably pretty sketchy if they're rallying on bankruptcy. Potential bankruptcy. Cost of borrow went up on GME. See. Yeah, there you go, 39.5 from 30.8. That is neat. Luxury popcorn stores. I&M featured on Zip. Chart looks nice. They in the potential to receive some approval or something. How's it gone down in Zillow? Yeah, February, let's see, was it February? Year over year, housing prices declined for the first time since like 2009 or something. So, but that's really not even, that's nothing. For the 100 to 200% increase they saw in 3 years, just to have a tiny decline year over year is minor, man. Monitor polarizer glitch. Oh, maybe it was the backlight. No, it's weird though. Like reset, like went black and then showed the logo of it. You know, as you boot up your monitor. Strange. Mocking AMC. I'm just talking about it. Try to keep my mockery at bay. Buy moving up here. About to make a new high, it looks like. Cost to borrow on AMC is the key. Not the popcorn in Walmart. Sorry, I had to do it. Maybe. The Zillow estimate on pricing is, you can't really base it on that. It gives you kind of a very broad general idea, and sometimes it's totally off. The data they pull for that is comps and recent sales, but they don't always comp it right. Sometimes they'll throw in a comp that totally throws off the numbers. There's a lot of specific factors to your house. Sport? I watch some sports. I can run to 397. Yeah, looks like it wants to. There you go, Weeble. There you go. Finally updated that high. 397.37 area is where I have that next resistance. Up 1%. Wow. No, there's people in here in AMC. Totally stoked. Thanks guys for your likes. We're at 36. Had some bullish-esque news on BY this morning, caused a little rally, but it's given back most of it so far. Still up 2.25. SPY making a new high on the day there. XD gave up some. It's still up 65%, consolidating up here. Oh, birds. Birds are starting to get a little squeezy. 17% on that one. That's on news of insider buying. And they're expanding to Toronto, which I don't know if that would cause a rally. Starbucks up 17.5. Got resistance up here, 3.5 range where it's getting close to. Open doors basically there also at resistance. Boot 2 has maybe another $1 to go before real resistance. Cosmo Kramer. Maybe triple bottoming here. Noticing on my shares, GNS is up 4%. It's been respecting this support pretty well. Double bottomed here the other day and had a big bounce and then kind of sold it back off, but looks like it's still wanting to stay above that 2150 area. Not sure why XXII is not repeating the pattern. If this doesn't, I guess, yeah, if it flushes through here, I'm going to close out of my shares. But there are still RSI divergence down here, and we do still have these prior supports, so it still could make its move. Yeah, birds, that's kind of exciting, 18%. I sold out my shares on birds, somewhere up here, I think. It was higher. But I still have options on it that I'm slinging. GME, basically flat from open, down 2.5%. Pretty good volume, nothing like yesterday, but more than the day before. SPY's weakened down. BBBY also coming down a little bit, up 2.15%. 81.72. SPY kind of reversal candle there. Red to green. Heavy negative balance. Down 90%. Isn't AMC like the IV on those are high, right? Why don't you sell covered calls? Yeah. You still have that as a gift. It sucks for buying options, but for covered calls, that's nice. GME, even with the rally it had, the IV is actually still quite low. Yeah, I mean, after a 50% move on weeklies, it's 150%. Next week, it's 100. Look at that. Week after, this is another sign to me that this thing's been fixed. I mean, it really hasn't had the move to warrant a huge IV boost, I guess. Bigger than what it got. So, I might be topping here. Inverted hammer, lots of big wicks up there. We're just consolidating before more rallying. Of course. Of course. Yeah, I think GNS is still going after it. We haven't heard from them, but they're definitely prone to move. And I haven't heard of any share offering or anything either, so that seems pretty bullish. He's not letting up. You know, on a recently IPO'd company, we've been down to 30 cents, and now it's at, you know, it was at $8 almost. It was at $5, and now it's at $2.50. Not offer shares once you've had that kind of increase is kind of interesting. Bullish. I mean, you know, he thinks it's worth more, and offering shares probably fuels the shorts. So birds 19%. Wonder if my options will get filled on this. That would be neat. That ugly SPY chart, man. Looks like a chair pattern. Curious if GME gets a cycle or not. Still really don't know if it's in that pattern. Oh, home sales came out. Open door still moving 16%. Box D consolidating at the high. Buy kind of climbing up a little bit. Syria and Saudi Arabia have agreed to reopen their embassies after ties cut more than a decade ago, sources tell Reuters. US new home sales, actual 640,000, estimates were 650. So that's kind of bullish, right? Less homes were purchased. Bullish for the market. Holy crap, yeah, why is Netflix up 9%? Weird. Price target increase or something? Nvidia has had an insane run and it's still going. Look at these little candles up here. 3%. Where's the resistance on this thing? Probably making its way to 290. 290. It's not showing much conviction. We have such small bodied candles. Just gaps and small bodies. I'm not sure on GME. I think it could have a continuation. Depends on how they're interpreting that, the filings, the earnings. If they're seeing it as positive EPS because they basically are just selling through their inventory and haven't really stocked back up on it. This is all just on the fundamental side. As far as it's repeating a cycle or something, it doesn't seem like it. At least not yet. We were expecting a bounce and a move up to, I thought 25 actually. And but I thought it was going to be reminiscent of, you know, this kind of stuff during the day and not from an earnings gap up. So we got the move. It's in a different way. It's so strange, so funny how that worked out.
This $23 level, and you know, and all of a sudden 20's gone. So
SPY's ripping up here actually. New high there. GME kind of coming up some with it. 397 is kind of the next spot I have on the SPY for resistance. Oh,
Amen.
GME got a little poppy there.
Appreciate it.
Little pop.
Having a good morning here. Stocks having a good morning too, though. It's one of those buy everything days so far right now. Bonds are up,
Little
stocks
pop.
are up, gold's up. Bitcoin's up, VIX is down, and Nvidia's cranking right now. It looks like technical breakout is happening on the stock. Kevin Green, our senior markets correspondent, taking a look.
Yeah, GME's moving up there.
Bull note on Wall Street, a couple extra bucks added on to Needham's forecast for this company. Kevin, how come?
Looks like that little breakout on SPYs
they have actually
waking GME up pretty good.
$100, and that's from $270, and they keep their buy rating on the shares here. They are very positive when it comes
that's true. I mean, there are a lot of options in the
NVIDIA
money
to grow their data center business,
so
as well as
you could see effects on that
the
like next
gaming
week.
Side of the business has been facing over the last year and a half.
Not crazy,
but
that
it's going to abate.
yeah, all these
they're going to gain greater traction
6,500
in
at 20,
markets as well. So they do believe
2,800 at
the greatest
21,
growth engine is experienced
400 at 22,
as
so
as hyperscalers start to increase their
kind of have a little gamma ramp
here.
going up into the 25, 26.
You know, Oliver, this is kind of a fundamental story
30.
as well. From we talked about the technicals, but the fundamental story here is they've actually just released several different product offerings as well as partnerships to try to basically, I wouldn't say corner the market, but be a very significant leader in the AI space as this chat GPT, generative learning and all of that.
Diamond Head, DHHC. Rallied, halted,
segment of the business, if
resumed,
you will, all the
rallied,
hype
halted,
is starting to come
resumed,
to fruition when
rallied,
it comes to a lot of
halted.
these businesses that are trying to utilize AI to streamline their business,
Things up 100%.
So, you are seeing a little bit of a fundamental shift for this company. Now, it is trading close
check
to
company.
a resistance
Is this
level that's
a
very
SPAC?
significant at
Yeah, this is a
$287.
SPAC.
So it's going to be a very interesting setup
Who
to see
are
if
they
it can
going
break
to
through on a significant
merge
amount
with?
of volume and stay above that area. That could
Must be
continue
some
the
news
trend
with
to the
that.
upside here. But from a fundamental standpoint, it is trading at 55.86 forward earnings. That's actually at the higher end of the range. But when you look at some of the steps that they're taking to try to capture some of this market by reinventing some GPUs and then also working with
Nirvana up
AWS to build the
9%, Snap
infrastructure
9%.
needed to train these machine learning models and things of that nature, it does.
GME, yeah, did just get a pop
for the
with
most
SPY,
part,
but that was it.
potentially put some of the fundamentals by the wayside,
Down
even though it does look like it's
1.5%.
expensive compared to others within the marketplace.
1.15.
There's a reason to be a little bit bullish on the stock here. If you're
Bed Bath is
in the belief
holding up.
that a lot of these new technologies that they're rolling out will gain
2.5%.
traction here.
Kind of bouncing
Okay.
on that 82
I mean, this is a
cent.
pretty big move up to one-year
level.
highs. Hard to imagine the
Stop it with the
chip
Elon Musk. You've said that
sector
before.
not following, as you've talked to us about the SOX or the SMH and the potential for a breakout there. They're trying right now, really trying to push
And
up
that's
to
when I stopped
highs,
talking.
3,200 almost on SOX,
Just kidding.
260 on
No,
SMH.
thank you, I guess. That's.
Do you think they're a real novel, new
I've gotten that often, actually, Ace.
data
It's really weird.
points or
I think it's been
theses
from
in
you
this,
mostly, but
analyst
it's done
note
at
in
different
this
times, so
latest
I'm not sure.
NVIDIA breakout, or
Just
is
to
this
mess with
more
me.
just kind of the same story, the same leader we've known? It's just the trade is back on.
Cosmo
I believe
Kramer.
it's the same type of note that we've seen from other
Broke
analysts.
that resistance.
So there's nothing that's really novel about their perspective on the company here. Obviously,
Hodler
everybody is
instead
really
of the
into
holder.
the ChatGPT generative AI space at this point in time, and it is capturing the attention of not only just consumers like yourself or myself, but businesses. And even though we are seeing a little bit of a
looks like it is
slowdown,
finding this
for
bottom
some
here.
companies, they're changing their spending
Cosmo.
habits, their budgets. They are recognizing the opportunity to streamline their business with utilizing this type of technology, and that could also
SPY
cut
still
down
climbing up.
labor costs, which
Tesla's up
traditionally
almost
is the
4%.
highest cost for
Getting
a
back towards
company
200
as well. So
level.
we
Wow.
might not even see a pullback when it comes to this space,
198 on
whereas
Tesla.
enterprise spending could be adjusted in other areas of the marketplace, right?
Apple,
so I think
1.5.
that's where a lot of
These
this,
stocks would make you think
bullish,
nothing's going on. It's
hype
great.
is coming from here, and we'll see if it's going to stick. I mean, we've seen
Microsoft.
trends before, right, Oliver? I mean, we've
Yeah,
seen
they're all
this
just bumping.
several different times. If it's going to stick, it could be very significant. But
Nvidia
if it doesn't, and if it
3%.
just fades out,
SPY's ripping
that
there.
could be very detrimental for the
Netflix
stock as
almost
well.
9%.
Okay. All right.
Tops.
We will watch and
AI's up
see if
9%.
NVIDIA can lead.
Some of you guys had
lead
AI
the group to the
positions, I
Holy
remember.
Land, because it certainly looks like it right now. Market ramping
Maybe that was
up.
Al.
NVIDIA doing the thing that it does when we get these
Ops might be at a nice spot.
risk-on trades. Pretty amazing stuff.
SPY almost hitting that
Really back to
397.
form here,
AI.
and analysts don't want to miss out. So
I didn't
price
like
started
this
keep
chart.
getting pushed up here.
Still don't really.
Thanks, Kevin Green. Let's do some trading with Scott Bauer, CEO at Prosper Trading Academy. We're coming up on 52-week highs for NVIDIA. Scott, it seems like this market really means business here.
Juggernaut. This stock has obviously
typos in
been
the filings?
great, but something I'm looking at is what
New high on the day on
Kevin
GME.
That's a big
Only down like
area of
0.5% now.
resistance just above here. You know, somewhere in the 280,
298, 45 and stuff.
285 area here.
Yeah, let's see what's
So
after this
I
level.
think that the stock has had a little bit too much too quickly here, even
Maybe
with all
here.
of the upgrades, even with all of the
398,
positive
34.
news here, Oliver. To me,
Yeah,
it looks
45.
like it's ready
Basically,
for a
yeah,
pause.
we'll see. It might be
I'm
a
not
little
saying
level.
It's going down, you know, retreating back. I think it's just
Basically
ready for
just
a pause. The
giving
RSI
back all the
is getting
losses from
pretty
yesterday.
expensive on it. So I'm just going to sell a simple call spread, you know, where I'm stopped out if something happens. So I'm going out to next week's expiration.
Maybe you
I'm
haven't
looking
said
to sell
that.
the
I'm totally
280,
kidding because I've gotten that a
285
lot
spread.
over the years from
$1.75
different people
is probably
just on
trading a
YouTube.
tad higher than that right now. Break even 281.75 at expiration next week. If this thing blows through, I'll make some sort of adjustment here.
20% on
but
open
I
door.
think it's wise to look at a stock like this that has just absolutely led the markets, right? It really is the one that everything is following here, and respect that resistance area. Now, if it breaks through that resistance, watch out. I mean, this thing's going to, you know, probably 310, 320. But to me, that's what I see here.
I like that point, and I do see when you zoom out on the long-term chart, the technical potential for resistance that you're describing, basically right above kind of where we are right now. So how do you go about that? What type of trade makes sense when you are trying to fade a bit of a rocket ship move here on the trailing basis?
Yeah, so again, I'm just going to sell a call spread.
Okay.
Premium levels are pretty high. So this 280, 285 call spread of next week, you know, I can get $1.75, maybe even close to $2 for that. That's a lot of premium. And again, if this goes against me, I know my max risk. I'm stopped out, right? I mean, that's why I always trade spreads and not just one-offs. I am stopped out, and if something happens, I'll probably make some sort of adjustment here. But again, I've got to respect the volatility. I've got to respect the longer-term resistance area that's up there. And again, if it breaks through, we probably see 310.
Yeah, BY, a little bounce here. Drew, are you swinging?
For, you know, literally holding.
You day trading 20,000 share position on BBY?
If I held it to expiration next Friday.
Got it. All right. 280 and the 285 call spread.
Not a bad idea. I mean, we were talking about this before when it used to do those after hours moves often. Hasn't really done it lately, other than
it's kind of
yesterday with GME and now this with the filing.
In front of the firing squad, if you will. But again, anything I do, Oliver, it's always going to be completely risk defined, which I think is so important.
Absolutely. Selling the spread to the upside. Thanks, Scott Bauer.
You got it.
CEO, Prosper Trading Academy. Markets are ripping right now. Day two, very bullish from NVIDIA across several other big sectors. Not a lot is getting left behind here. Some of the safety trades are lagging, but for the most part, it's a broad rally that's underway right now.
Buy coming down here, wicked up to that 39, close to that level, 39.7, hit 397.21, real close to our 397.37. See if that's where it rejects today. What Fed meeting? We had it yesterday. 25 basis points. XD came down some, up 47%. Open door still ripping, 21% on this thing. Bird 17, Carvana 10. Mega Cap's probably selling off some too with this move. SPY's coming down here. Yeah, Coinbase is down 15%. Square's down 16%. Silvergate's down 10%. FRC is up 4, almost 5%. Awesome. Hey trader. Bought the dip on Square. Alright. Yeah. If you like it long term, I've got it my long term. Not picking up really anything right now for it, but if I thought we'd bottomed, I would probably buy that dip also. UWMC has held up really well. High interest rate environment, I guess, would treat this good. Got some 5 short calls on it. Huh. NS is positive 8%.
Some point. He didn't say those things, but the language clearly indicated that, and you can very easily see that.
Yeah, Netflix is having a pull. I mean, Microsoft, Apple, they're all crazy.
Absolutely not.
Microsoft's up
We've
2%.
talked, you and I, quite a bit about your guys' products.
Apple's still rallying.
Try and
1.5.
guarantee outcomes to some degree by kind of buffering
Netflix holding
downside risks. Of course, the last year in a bear market, that's exactly what
it's up
people
9%.
wanted. If we do get this type of bullish response, does that change the products people are going to be looking for? They can buy
level
everything
24?
again? Because I got gold up, I got bonds up, Bitcoin, stocks. This is like the everything rally back, y'all.
Strong
Who needs
resistance
to
level?
buffer anything?
I love the enthusiasm. I love the enthusiasm. And
Wow,
I
we're
think
wicking
the wet
both
blanket,
sides
but
here.
Right now you still have
Red candle maybe trying to go
rates
green.
that have come up, right? I mean, we're looking at
Big wick to the top,
5.1%
big wick
by
to
the
the
end of year.
bottom.
That's the projection from the Fed, right? The market might be getting ahead of itself a little bit.
They have
thinking
red to
about
green on that
the
5-minute
rate
candle.
cuts coming as soon as this summer. I don't think that's going to be the case. The Fed has much more to lose in cutting early than they have to cutting late. So we're going to keep seeing that. And with that, you're going to have more volatility in the marketplace. There's no doubt about that. And if you look at the projections for 2023, there's a very, very wide spread in different outcome projections for what the market is going to give or take in 2023. So when you have a span like that, you can count on more volatility to come. There's no question about that.
The volatility last year stemmed from the bond market. Right now we've got yields plunging over the last 3 weeks surrounding this bank situation. How do you guys, when you're designing products and talking with clients about products, factor in the way bonds hedge stocks or lack thereof? Because last year they did a very bad job hedging stocks.
Yeah, they did for sure, you know. So 2022 was relatively unique. You would say that was a tail event. So it's not the expectation that we'll see many of those in the, you know, in history, if you will. But as it relates to the equity market itself, when you have this kind of wide spread of outcomes, you know that you might be right if you're a bull. You can be a bull today and a bear tomorrow, right? But if you believe that the market might be ticking up, you can participate in the ETFs that I know we've talked about a few times, right? Our buffer ETFs. You can participate in all the returns of the equity market up to a certain level, or a cap, if you will. But at the same time, most investors are not super bulls. They also need to think a little bit about what might go wrong if their forecast is wrong. So if you're a bull, but you still have some reservation and some risk management in your portfolio, which I would argue most investors have or should have, in a buffered ETF, you can still have a placement that gives you a buffer on the downside, or 10% or 20% on the downside, so that you have a risk mitigation, if you will, something that will absorb those losses if you're wrong, if you happen to be a bull at this time.
APRT looking pretty good over the past year. Is that the flagship example of the strategy you're talking about?
Well, we actually have a whole lineup. So for each month, we have a separate ETF, right? So you can decide if you want to have this cap and buffer structure in your portfolio over, up to 12 months. But you can be as short as 1 month, depending on which one of our ETFs you're looking at. And that's kind of the beauty of these products. They're structured, but they're liquid since they're ETFs. You can buy them at any point in time, and you can decide which one has the most attractive cap and buffer trade-off for your portfolio.
I see, and looking at the July here as well, so it's interesting. It seems like you are embracing sort of the active manager to some extent that might see something happen in the short term, wants to respond to it. Is that kind of the idea, to be fairly active with these products?
You can be, but you can either be strategic or you can be active. You can trade as often as you want. I mean, you can own them for a second or two, or for decades, right? It's up to you. And but the point is that you can buy them. If you buy them on day one, you have 365 days in the case of our 12-month product. We also have a 6-month product. With the 12-month product, if you put $1 million in on day one and the market goes down by 10% or less, then you still have $1 million at the end of that outcome period, minus the fees of the expense ratio of the fund itself. But if you have a cap on that particular product, and that might be in this current market environment that's highly volatile, rates have come up, you might have a cap up to 20%. So if the market rallies by 15 or 20%, you still get to keep the gains, so to speak.
And the expenses, the fees associated with it, I guess your main competition would be somebody buying an option or some other type of hedge. Is that kind of where you have to think about as the competition to some extent?
Well, so we have, yeah, and if you want to buy and trade options on your own, you can certainly do that. It gets a little cumbersome for most advisors and investors to keep track of everything that's taking place. So we do that for you in our ETF, right? You don't have to worry about the tax consequences and the trading and the expiration of options and so on and so forth. And for that, we're charging a fee, to your point, and the fee that we're charging is 74 basis points. It happens to be the lowest fee in the industry for these types of ETFs, these buffer ETFs on the S&P 500, and part of that is because we do it in-house with our own trading team. So as you know, Allianz has been trading options contracts, managing risk for decades. So it's our bread and butter that we're providing in an ETF wrapper at this point for the broader public.
Got it. Johan, before we let you go, like the product talk, but also you guys have done a recent survey about American economic anxiety. I thought a couple pretty interesting findings. Tell me about it real fast.
Yeah, it is pretty interesting, actually, and we've seen it relatively consistency. It's this anxiety of the American consumer, if you will, or the average American person, if there is such a thing. We see now that about half of Americans are starting to either decrease their contributions to the retirement accounts or stopping them completely, and about half of Americans are actually taking money out of their retirement account, and this is because they have short-term expenses that they have to pay for. So the underlying undercurrent here as it relates to the market and recession risks is that you now see behaviors changing dramatically for American consumers. When you start taking away from your future to pay for the present, it sounds a lot like, you know, the mismatch of some banks that we've talked about, you know, recently. That's when you can start some bigger cracks developing.
Got it. Interesting data. Sounds like there's still quite a bit of issues that we're dealing with here. And a good comparison too about kind of borrowing from the future, assuming the cash keeps coming in. Johan, really interesting convo. Always good to have you. Appreciate it.
Appreciate it, Oliver. You have a good one.
Thank you very much, Johan Gran, head of ETF strategy at Allianz Investment Management, with the case for buffered ETFs to still hedge some of that potential volatility here. Markets haven't made any new upside since we began that convo. We're about at the same level. NASDAQ almost 2%, so we're still grinding away here. S&P 500 just below 4,000 right now in the index. We'll be right back. We got charts. Two on the mind of the chart master, the persistent rally in First Solar, and a bank under some pressure here. M&T this time, as another analyst slashes their expectations.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
Optimistic here on this, Alex. Pretty big price target hike.
Yeah, actually, it's kind of interesting. This is
Sorry, guys,
I
had
would
some
say
phone calls.
a catch-up type of an analyst release.
Kind of consolidating now. It's going up more.
A little bit on maybe
rally.
something that's
FCU was grilling by U.S. lawmakers.
Rating from Barclays. They do raise their price target, but when I say this is more of a catching up to the price, they go from 162
I think BBY is going to probably
230.
test the lows again from yesterday.
Reasonably wasn't that long ago. It was around 162. So this is just maybe a monthly, quarterly type
They're
update.
banning TikTok at 10 a.m.
Stance is relatively the same in terms of they don't like it any necessarily better than the peers, but they're not saying to bet against it. Obviously, this has been a tremendous area of strength for the market with all the energy price turmoil.
Oh, that came out at 10 a.m.
last
maybe?
year, and then of course tremendous investment from fiscal spending into this alternative energy space, of which First Solar is one of the headliners for.
Oh, net gas numbers came
Some of
out.
the things that I thought were interesting from this particular
Right at
Barclays
estimates.
analyst, so within this report, Oliver, they
Not
say excluding
great.
India, the
Wish it
analyst
was
estimates that
bullish.
First Solar's gross margin should hit 30% over the duration of the
We're
firm's
talking First
forecast
Solar.
period and could continue to widen through the end of the decade.
Oh, they face Congress
if the
in AM today.
company
Oh, wow.
continues to provide visibility for flattish selling prices in the outer years. So just talking about how this is basically a growing area. Dave, they can just keep prices where they're at. They're only going to be more efficient when they're doing this. They're only going to be able to make more money as this scales up, not less. It's just going to come down to demand and where those price levels ultimately find themselves as we get more and more mature in this industry.
To your point about the analysts kind of getting run over by the price of
Quit
the stock,
ASAP.
they had it way too low, and now they're basically playing catch up.
Birds holding up.
Yeah, I would say so, but again, you got to keep in mind, if you go to the middle parts of last year,
22%.
before the Inflation Reduction Act really sparked excitement and solar stocks in particular, this stock was about $80. So that 162, and again, I don't have the exact date that was the time that they put that price up. That would have been a double from just last summer.
Yeah.
Okay, it's 3x now. Basically, their price target would be about 3x from where it was last summer. So, although it got run over by the price action being a little exciting,
It was still right because they said it was going to go up.
they said it was going to go up, but also at some point, even if you're bullish, it gets a little bit tougher and tougher to keep ratcheting that price target up when this thing just keeps skyrocketing.
I mean, 28% this month alone. What? Wild stuff. To Alex's point, a few big events in this stock's history. Earnings here last summer seemed to really start this chart, and then the Inflation Reduction Act kind of was the cherry on top, I guess, to keep this thing rolling.
28% this year, tried 263% off those lows there. That's a wild here.
Yeah.
And this chart is looking pretty strong still. I was kind of surprised. I thought maybe we might be in for some pullback or some slowdown here, but we saw kind of the reverse situation of what I was describing on our last chart. We had a bull flag pattern here. So we had a change in the fundamental story. We had earnings. We had a gap up of about what was it? A nice gap up there, about 15%, and then we rose more. We had this period of falling prices.
Pie chart is so ugly without extended hours.
Right on the money at the yellow 21-day EMA, and then we had a breakout
Up
to the upside
1.3%
again.
though.
Now we haven't actually completed this move here because we haven't broken above those old highs yet. That's what you'd want to wait for and see if we're in for
BBBY, is that a
further,
competitor?
bullishness here. But that 230 price level is still about 16% to the upside from this point. So they seem to be thinking it's still got a bit to go here. And looking at RSI, momentum has fallen off a little bit as this bull flag pattern has kind of played
Snap,
out
but
here.
they rip
Not
also.
really surprising, but you'd want to see
Morning,
a break
Tasty.
above that 70 level once again,
Like Snap's got
especially if it
more-
happened with the break
has had
above the
more
old highs in price.
sympathy
That would be a
plays to
good
bad
sign
TikTok
for bulls
news.
here. Once again, I threw up our standard deviation channels on this chart because our moving averages weren't a ton of help. They were kind of far below where current prices are. The 240 level is where the
6,500.
+1 standard deviation channel could come into play here. And the fact that
GME is
we're only
now
near the
green.
+1 standard deviation
Little
channel kind of
pop
speaks
through
to
there.
the volatility in prices here. This is a reading based on its own price history, so that would be a fairly extreme point there to reach. So look for some potential resistance there. Support around the 200 level, 199, 200 based on that yellow 21 EMA.
Wow, pretty nice. Okay. This is,
Good
we
snap
couldn't
entry
pick
range.
two more opposite charts for this morning.
I asked a while back.
M&T down in the dumps and
Yeah, I saw that on Fidelity.
high, flying to the sun.
It's not a federal thing, though. It's not just a Fidelity
Thanks,
thing,
Alex
right?
Coffey, Rick Duquette, chart master team, nice work.
Getting back to that
Coming up,
resistance.
Let's, get a check in.
If it breaks through
on
there.
Capitol Hill.
GME's
Not
also
Janet
getting
Yellen,
out
though, and
1%.
not Jerome Powell. This
Things
is
just
TikTok.
woke up there. They were talking about First Solar. Yeah, GME's totally fixed. There's a spot. Look at that blow through the top on SPY. Holy smokes. That technical break just like SPY, the squeezer. 398.34 is the next little zone I have, and it's almost there on that one candle. Look at that thing. Whoop. Elevator. Pay safe. Yeah, GME's moving up with it as well. Mara, Netflix is almost 10% now. Mara's up 9.8. See what GME does at that pre-market high, 24.40-ish. $24.48, next stop. Squares gaining momentum to the upside? Yeah, look at that, big bounce. Even BBY got a little action up to VWAP. Tops, almost 12%. Redfin, 12%. Came out of nowhere. Well, I'm stuck in the debit spread I made because I don't have buying power to close it. Oh well. It's a nice little gain on this one. Like 823 max gain. We have a close over 25 by Friday. Even that gas got a little bounce from it. Riot's up 15%. Yeah, I think these crypto stocks could rally. With banks failing, I think crypto's going to keep rallying, and Riot, Mara, these ones might be crazy. One's kind of at a resistance, but it'd be a good trade the upside regardless. Still holding out up there. TikTok hearing? I'm listening to the TikTok hearing.
Like papaya seeds,
good,
which don't work. And so if people searching for information on safe abortions went on TikTok, they could get devastatingly incorrect information. Another study showed that TikTok was had a hydroxychloroquine tutorial.
Oh my gosh, this is just full of loaded, just a political stunt. I'm not listening to that. Further here, Jen A.
40 lean bullish. One leans towards more
Jen A.
rating, one's neutral. But
Jamie up 2%, getting a lot of push from SPY here.
Yeah, really does seem
about
like
at that pre-market high.
I've joked before that the TikTok user base isn't old enough to vote, so I think that's why like DC has got this kind of bipartisan aggression towards it. But
It's up to you. I mean, again, it looks fixed, Ace, so it's fixed. It rallied on good fundamentals. Thanks, TJ. Appreciate your dono, man.
You have TikTok, but I do
help with the buying power. We're getting there. We're getting there.
That was a good video, but I mean, TikTok, I'm not cool enough to have a TikTok, so yeah, I don't know.
All right.
Thank you, TJ. Much appreciated,
right now,
man.
It does look like it's the proxy play for this.
Let's get
4%, continues to run. Certainly would help them if they lose a competitor, but interesting case made from the CEO here, trying to distance himself from.
Yeah, with GME be
government.
fixed.
We'll see if the market. We'll see if our regulators believe it. Thanks, Jenny Horn.
You know.
All right, let's get our panel in here.
Won't necessarily sell off
Nick
the rally from the earnings.
Tillister with me. Nick's a financial
and it very well could continue to the upside.
Markets correspondent. Hey, GT, get us started here.
Let me go test this, please.
Today. What gives?
Kick nuts.
I think it's effectively a rally based on a pause. OJ, if you look at the federal funds futures going out to the May contract or May meeting, there's actually a higher percent chance that they're not going to move on rates. So I think we're seeing a manifestation of the expectations that the Fed is probably under quite a bit of political pressure, I would say, to deal with the banking issue. I think that financial systemic risk right now sort of supersedes what's going on with inflation. So at the very least right now, if you look at 2-year yields down today at about 3.9%, that effectively tells us that the market is expecting at least a decline of 75 to 100 basis points by the end of the year. So I think this is a pause rally. I wasn't too convinced by the Q&A yesterday. It seemed a bit of a wishy-washy back and forth between Powell and journalists. I think the issue with the FDIC over umbrella deposit coverage is in question because, again, Treasury Secretary Yellen went back against what Jay Powell said in the Q&A about the deposit insurance. So that was a little bit ominous, and I think that's why we sold off yesterday afternoon. But nonetheless, I think the market is expecting a pause, and that's why we're seeing a continuation rally today.
All right.
Jimmy broke that pre-market high. I'll move up. 3%. There you go.
It seems, no matter how much Powell tries to dissuade them of that. What do you make of that?
Sounds great. Thanks, Ace.
Yeah, I agree with what George said. I think yield curve is also helping equities in general. You're seeing the 30-year up a bit. Yield-wise, you're seeing the 10-year down a bit. So, we're still obviously, there's massive inversion out there still, but a little bit of a move to normalize the yield curve, which theoretically helps every financial institution, every institution out there. We get a normal yield curve. Everybody's a little more comfortable with that. Also reflected in the VIX today. Right. So I'm personally surprised after that Q&A yesterday, which felt like a big set of non-answers, more so than maybe I've seen in a long time. I'm surprised.
Breaking that high there.
We may crack that 20 handle today. So I think we got almost up to
what handles are you cracking?
20, almost 28 last week with the banking concerns, and now right back down to 20 on what to me felt like a very long set of non-answers. Right, we don't know.
I broke that high at 398. Wow.
With the credit crunch, it's too soon to tell with what happened with these banks. I think the one thing that stood out to me,
even with that sell-off yesterday, I was still thinking we're probably going to rally.
Bank run for
continue this rally and continue this March.
Clearly the Fed's going to be focused on that.
And that's
but
good news for GME.
You're right. The market wants a cut. It's
399 back to 400 maybe.
We didn't hear that.
It's up 1.6% to SPY.
Increases may be necessary, right? They're not willing to take their foot off the gas. And we're not sure what they're going to do to actually increase, the credit availability if this credit crunch were to get worse. It doesn't seem like they're just standing there with the door open, ready to
I'll talk about it once this guy's over.
Financial institution that needs it.
I know what I'm thinking.
That puts more weight on the government and Congress, and that's a scary proposition. So I'm personally a little surprised to see as big of a rally today, and the VIX coming in so much, just given the fact we didn't really get a lot of information. We didn't get a lot of answers after this one, and I guess we're expecting a pause now, and that's why we're up. But I think if data comes in hot, that's still not off the table, which would mean they'd have to maybe even swing back and bring those cuts around sooner if a recession were to happen. So a little confusing to me on why we're up so much, but you do see some big, almost 10% movers, some good earnings, some big information out there on the home sector. So there are some definitely positive forces, but just not all that clear to me after that press conference yesterday.
Fair enough. George, how much do you believe that stock prices impact the economy as a sort of financial indicator? Powell did address that he doesn't obsess over some of the financial conditions indexes because he believes they are pretty closely tied to stocks. And I wonder if that's a mistake and if it's part of the reasons why we've kind of gotten in a little bit of a pinch here, because
I don't know.
It seems like the stock market oftentimes
maybe because you've gifted so many subs or memberships, I'm not sure.
Agent of tightening or loosening financial conditions, particularly over the last couple of years when people were trading at levels.
Maybe because you've been a member for more than a month.
Engaged in stocks.
I don't think you have, though.
True.
Well, I think it's an important barometer. I think it's a barometer from the standpoint of the transmission mechanism, the wealth effect from at least the household sector. But you also think about the bank sector. I mean, equity declines is really constraining their ability to raise equity capital to deal with deposit redemption. So that's where we're getting that negative feedback loop in the banking system. So I think there's a direct impact with the equity in the banks and their capabilities at the very least. In many cases, a number of banks that may still end up going into receivership under the FDIC, which is fine. That's to be expected, especially those that have mismanaged their interest rate risk and didn't hedge it accordingly or appropriately. But I think at the end of the day, the financial conditions have certainly tightened, and it's not just exogenous. It's not the Fed impacting monetary transmission. It's endogenous now. I think the credit quality of banks' lending is going to be constrained because they're going to be mindful of who they're lending to going forward. And that's, in effect, de facto, tightening outside of what's going on with the federal funds rate. So right now, I think, there's the other positive behind potentially this rally today is the balance sheet. Even though the balance sheet increased $300 billion in the last week is a function of lending at the discount window. It's not utilized to buy long-term treasuries like traditional QE.
Oh, interesting.
I still think it's an implied QE. And I think that's one of the other reasons why we're seeing such a nice rally today as well.
We are on the move. Rip in here. No, thanks, guys.
That's interesting. It's a little different, but it is still like quantitative easing. Yeah, on GME, like it's fixed. It's still fixed. We haven't seen anything like we've seen before. So, if your PTSD is kicking in, we just rallied up 50%. It's gonna get rug pulled. It doesn't seem like that's necessarily gonna happen. We're consolidating and in a range that the market sees as fair value. And it's quite possible it'll continue to rally. These other times when it's been a top, it's been clear. It's been super crazy volatility to the upside. And then it's even given us a trigger by halting. A lot of these tops were halted. And that was literally this top. So, yeah, we haven't seen that yet. So I don't think necessarily that this rally is over. But that said, maybe we won't get that crazy rip rally, and then the halt move anymore if it's fixed. So yeah, member for 1 month, Money Crew, Shikaka. 20 more quarters of growth, maybe break even. Yeah, I guess this is your second month. How did you just pull that up? Waited with the announcement of the 10K for today's AK Bobby and left in confidentiality.
The ego on you.
What does this mean? Oh, you became a member again. Double member. What the heck? Oh, you can add a month before it expires, maybe. Yeah, that's the thing with the memberships. They don't like auto renew.
The ego on you.
Thanks, Donero. Thanks, Ace. 13 months. Dang, Don's now. He's flexing. He's flexing, dude. Thanks, Donero. I appreciate it, man. Yeah, Donero, I think you were our first member here. Definitely our first member. So yeah, I appreciate it, guys. I don't even know what's going on here. But yeah, I guess you can extend it longer. Definitely. I think Donrow just, he wants to stay a member, but he's just too lazy to do it every month. So it's really just laziness. He's like, I'll just give him a year. Don't have to think about it. No, thank you guys. Though. I really appreciate it. Big T Donrow. Crypto moving, SPY's moving. We're getting a lot of rally here. We're all long-term members now. Yeah, SPY breaking out to the upside even more. 399. It looks like it's definitely going to hit that 400 today, or around there. Here's auto renews. Oh, so this was a full-on flex then to just add 13 months. Or are you just able to show that? I don't even know what this is, you guys. Did you just renew it, or are you just showing your membership off? You're just showing your membership off, aren't you? That we just said we normally go back down. Yeah, I know, but that's after we've had a cycle and there's been clear signs that it's just way too frothy and parabolic. If you like, quote S3 partners, and oftentimes a halt. So this rally is on something different. This isn't on a rollover of swaps or whatever. They're naked short position that they're rolling. This is strictly on earnings from what I can tell. And so the stock is responding differently. You know, it's holding an increased value. Now, not to say we won't, you know, we can't fill that gap at some point, like we could, but we just can't think of another stock other than Tesla right now. But to give you kind of an earnings continuation, I don't even know if there's ones in here. That wasn't it. What's a good earnings continuation chart? As an example. So like when you have an earnings beat and then just kind of rallies from there. I mean, you could even say like rallies between earnings. Sometimes you get a whole just bullish trend from earnings to earnings because of the earnings. So this one I think was because of a split, but maybe it's because it beat and then it just rallied after, had a continuation. Can't even find an earnings continuation chart here. Kind of even this one. So gapped up after earnings from earnings, sold off for a few days, and then had a continuation. Just kind of kept rallying. That was maybe on the split too. Also, dang it. Even here, was a gap up on earnings and kept going, but those are all lined up with the charts, so it's harder to tell. But it also, Ace, I mean, you're positive on it, so you have to think about that. You're up on your play. You said you didn't want to have this much exposure, you want to learn more, whatever. Like, so you have to take all that into account. Or you could just sell cover calls on it at the money. The split fixed GME, what always wanted, yeah. The cost run line, yeah. I mean, as a CEO, as a chairman of the board, they don't want to be considered a meme stock. They don't want a super volatile stock. They want to attract long-term investors and have stable growth. So, yeah, it's absolutely what they wanted. They wanted it to be fixed. What we wanted was it to be fixed, but with a massive short squeeze. And instead, maybe we just got 5 or 6 smaller short squeezes while it was being fixed. Each of these cycles. Maybe. I don't know yet. Let's see, I go to 24. Oh, what, like right here? Yeah, this was not from earnings though. But that being said, I mean, the macro environment, macroeconomics of what's going on right now in the market is not. Today, it's maybe favorable. SPY's ripping and stuff, but there's definitely headwinds to the stock market just being bullish in general. So. You take that into account, you know, money's not flowing, interest rates are not low, and to do well in a recession, it's as a stock, it's going to have to be either a value play or some sort of defensive, or and even those, it's not going to be crazy growth. So GME, like, you have to have some kind of tempered expectations on crazy growth in this macro environment. Growth as far as the stock goes. BBBY is holding up pretty well today, up above VWAP, 3.5%. Good. Showing off the membership. Do it every milestone. Oh, that's cool. I didn't know that. Auto member. Thanks, Ace. Appreciate it, guys. Yeah, and you started to do the scale out. I mean, you could do the scale out again, but really, you should try covered calls. Just because your brother that manages your money does covered calls doesn't mean you can't also. Like, the IV is finally higher on GME. It's not crazy, but it's finally juiced some. If you're thinking of selling anyways, that's what I would do basically. SPY 399.01. What is this? 1.75%. Even I was saying, I think we're going to continue to rally. And then after that sell-off yesterday, I'm like, I don't know now. This is weird. So this is even kind of surprising to me a little bit. Wasn't too sure. I mean, the trend was still up. It seemed like we're still repeating March. He said 25 basis points, which is what we're expecting. So market's going to keep rallying. And then in his statement, from what I understood, it seemed like he was saying maybe pause next month or next meeting. But then the Q&A, he was pretty hawkish, saying there's going to be no pauses. So, and then that one guy's question, I think, is really what kind of set off this trend down. That led Powell to say no pauses, but it seemed kind of conflicting to me. ChatGPT. That's from when they only saw the numbers from 2021. Since ChatGPT is delayed a couple years. Everything feels weird. Everything is green. Where's Netflix? Netflix is up 9%. Microsoft is mooning at 3%. That's a huge move on Microsoft. Apple's 2.3%. I mean, frickin' Birds is up 15%. Everything is weird. Redfin's up 14. Riot's almost 20. Jeez, look at this thing. Yeah, this is crazy. Mara's got to be a lagger. This thing's got to start going bigger. This will probably catch up, I imagine. We're even getting a little pump from the banks. Came into this blind, learned things along the way. You're so fortunate to not be down huge amounts of money if you came in blind and didn't know what you're doing, basically. That applies to anybody and everybody. Collapse is here. Yeah, I don't know if Powell was speaking up, but I'd have to go watch it again, I guess. We were listening to Stock Market Live and kind of what he was saying too, so. Leaps coming in on BBY? No way. What leaps? There's a rejection on that 400 level, basically. 399.29. GME started selling off sooner, but basically break even. Yep, break even right there. So 23.90. This gives it what, a market cap 7.2 billion. So even with their numbers, this still could be considered overvalued probably, comparative to the rest of the market. my other turntables. Yep. Well, no, before the COVID and all that, wasn't PAL always bearish? Wasn't it the PAL put? That's always what you did. You did say it was a 3-week play. I know, but it should have started moving up, I was hoping. Yeah. This isn't what I wanted it to break this low. I might jump out of this, honestly. It might be setting up another divergence with back here. This is giving me flashbacks of HKD when it broke the low and I jumped out, and then it ripped the next day. I'll give it end of day and see. But yeah, the play was supposed to be it's just repeating this move, but new low on there is not horrific. Unless if we'll see. I'll give it a little bit of time. Somehow listening to YouTubers kept pointing me the right way.
That have at least
well
one
done.
drug in
I don't know how that happened, but well done.
Or level 3 approval status, because those are the majority of the names
2 and 4 strike, I like that.
And have a drug trial date in the next 2 years. If you focus in on a diversified portfolio of those names and you just get one takeover.
Yeah, a lot of that soft yesterday I think was just from that question from that guy, and then Powell's response.
Now, the baby boomers. You know, when we watch the labor force participation rate, people are like, is it ever going to go back? Because you have the aging population.
Exactly, and there's not enough in that younger demographic.
Well, great people, you're well done, you've done your job.
That goes well, a lot of folks would say, for biotech and such.
Absolutely.
Kevin, wonderful to see you.
You as well, Nicole.
Being here.
Cinemark's up 9%. The best theater stock to own.
Asset management. Plenty more to come right here on Trading 360. Our 360 Spotlight looks at bond market volatility in light of the Fed's rate hikes. Our disruptor, Coinbase.
Whee.
We're going to talk about the action.
Oh, you lost big on Revlon.
Heavily on this name. And 360 round looking at Darden Restaurants.
Well, for losing a lot on Revlon, I'm impressed you have the stomach for going on BBBY, as a lot of people compare it. Even though I don't necessarily, I mean, I see, of course, some of the similarities, but
Boeing and Amazon, three
I don't really think
big
it's the same.
names. We'll check it out. Coming up next.
Ignite. Yeah, I don't need to guess who got into Revlon. I traded it very shortly. Once it broke some technical levels, I was like, I'm out. I'm out. Ops. AI. Baba. Where's Al? Stoked. Said this was his second biggest play this year other than GME. We'll play the initial run. Yeah, I definitely had volatility to make money on it. GME with a bounce. Buy still grinding up there. BBBY 3.5%. GNS is up 2.5%. Still holding some support down there. This hideous chart. Good to see. Wish some of my birds contracts would fill. It's up 15%. Let's go. Yeah, GME got a little bounce. It's consolidating still. It came down a little bit. Could still continue to kind of fill this gap, but positive EPS is good. CDB, thank you for your donation, man. I really appreciate it. Layman's turns. Oh, jeez. That's a loaded dono. Layman's turns with the BY, AK means. I've heard different interpretations of it. My initial was...
Let's get nuts!
Let's get nuts. Let's see. Did you get all that? Oh, I was muted. Whoops. I'm just playing. Yeah, so it seems like the price threshold that the holders of the warrants had in place in the contract, they've now gotten rid of. So less liabilities, less responsibility of BBBY to the warrant holder. That's kind of how I read it. And then the second part of it seemed like that could have just been, well, actually, who was it? Jan in here was saying that that was actually giving the warrant holders the right to then disclose of non-public information. So it could have been that. It could have been just talking about that filing itself. Thank you. Thanks, Mahmoud. Thank you for that donut, man. I really appreciate it. Ace Ventura. Yes, I will explain everything in Life Universe and everything. Not loaded at all. That's totally legitimate. For $10, I will do that.
Let's get nuts!
You guys. Yeah, Don, did you see the filing? I was hoping you had some insight into it. Price drop below Hudson Bay's agreement. They were able to keep the agreement intact for a little while, but the price needs to move up or the agreement's in jeopardy. To me, it looks like they waived that, though. Yeah, that's what some other people were saying. The last paragraph on the filing was, thank you, Ace. Thank you, Mahmoud. Sorry, Mahmoud. Very generous of you guys. Sorry. Get a little Ace Ventura gift going. I'll pull up the file and we'll look at it, but here's the meaning of life, the universe, and everything. There you go, right there, Ace. Yeah, let me get the filing and see what's going on with it. This, yeah, SpyCon rejecting that 400, GME moving along with it. Bed Bath up. So here it is right here. Seems legit. Mohammed? It's not spelled Mohammed, but maybe it's supposed to be. That's what I said, but I'm like, it's actually Mahmoud. Ahmed. Reference is made to the certain warrant to purchase. Made to that certain warrant to purchase Series A convertible preferred stock is initially dated February 7th. Amended warrant issued by Bet Beyond the company HBC Investments. Capitalized items not defined herein shall have the meaning as set forth in the warrant. So they're changing it. Effective as of time. Both the company and the holder shall have duly executed and delivered this letter for the period commencing 9 a.m. March 20th through and including 9 a.m. April 3rd. The holder hereby waives the occurrence of any price failure. That's where I see that they're waiving the price failure, but that has occurred or may occur. So it's already occurred once. Been below $1, right? Or is it 75 cents? Anyways, or may occur during the limited waiver period. For the avoidance of doubt, the limited waiver shall cease to be further force in effect after 9 a.m. So in this last sentence makes me think it's still in effect till 9 a.m. on April 3rd. But overall, it seems like they've gotten rid of it. So this is just legal. And this bottom paragraph, this might be referring to this 8K itself, or maybe it's referring to another, the entity that's holding the warrants. They are now able to publicly disclose what was non-public information prior. Call me Mo. All right, Mo. Thanks, man. Thank you. Well, he needs to get over $1 to avoid this mess, but I'm not. I thought this is getting rid of that need, basically. At least until, at least for that agreement until April 3rd. Thanks for the gifted sub, Ace. Appreciate it, man. Who's that for? Kitty Daddy? Kitty Daddy, click on the box. Become a member. It's free. Ace gifted it. Hey, Julian. Somebody shouldn't be worried. They were. Primary holder JAT that merged with Zura. Zura ran 300% after that merger completed. I mean, that's if there was a merger. On you. There you go, Kitty Daddy. Thank you, Ace. Appreciate it, man. No gray man left behind. I'm doing good. Yeah, BY's up 3%. So sure. I'm doing good regardless. Stupid stock market. GME's basically flat. Market kind of rejected breaking that 400 level. $100 million invested yielded $3 billion. That is neat. The filing that released this morning, that BBBY filing, seems to me that it's more evidence that the holder of the warrants is not out to just take a little profit and let BBBY go bankrupt. I don't know. It seems bullish in that sense that it's a good actor that has Bed Bath's interest is aligned with their interest as far as being a successful company. But I could be wrong on that. Yeah, no, Cosmo's looking nice. And I mean, that said, when that finally came out, the market's reaction also was bullish, so yeah. But some interpretation of it must be bullish, because this wasn't with GME or SPY or anything, so. Yeah, I like Box D for sure. It was looking good yesterday. Volume's good. Don said this was on them trying to file for bankruptcy, so I don't know. Might be a really sketchy play, but the chart looks nice. We have a RSI divergence. Got a lot of volume here on these last two green days. The rally might just fully get squashed though if they go bankrupt, I'd imagine. But the chart looks good regardless.
Jets. I mean, we saw orders on the rise in February. Achilles, we saw Japan Airlines now with orders. Today, there's news. This is maybe a smaller deal, but U.S. Defense Agency, something with Boeing today. So they're getting the orders that they need to keep them on top. It's just the profits need to continue to follow.
Yeah, absolutely. And it's going to continue along this trend. And there's going to be a lot of resistance going forward, probably anywhere between that. Once we get 2% or 3% higher from this point, we're going to see some significant resistance, as he was saying. And at the same time, we're going to see a nice move to the upside. But we have to break through those resistance points, and we may retest the low before that happens. So you got to be aware of that.
Right. Okay. And as you said, you know, just like Apple, you said buy on the dips. You probably would do the same.
Absolutely.
You had that range for a name like Boeing. We turn our attention now to Amazon, which is sitting at exactly $100 today. Your thoughts here?
Yeah, anytime this drops under $100, this is screaming a buy to me. You know, this is one of those trading ranges. We get in there at 98, 8.99 and we could sell out 10 points ahead, or we sell out at 12 points ahead. But we're the long-term investors, so we're thinking 12 to 18% in an 18-month time frame. We feel that the stock is poised to move towards the upside. We're way before Christmas when we start seeing real money coming into the company. But on a consistent basis, they've been doing really well with their recurring revenue. The only caveats that we have for this, the competition. You know, are they starting to catch up? Are they starting to get a foothold in Amazon's business? We say not so fast. So it's one of those 18%, but with the caveat that you are going to face resistant points going forward within the 5 to 6 month time frame.
All right, okay. What do you think? As he's expecting this upside, we're comfortable with a 12 to 18% move in the next 18 months. Rick?
Well, I can definitely see the resistance points that we're discussing here. And this, in the broader picture, chart has been pretty much just down and to the right for the past year. We're down about 41% since our yearly intraday highs near the 170 level. So it's been kind of a tough go for this stock. But more recently, we've seen, once again, a range establishing. We've got our lows here near the 82 mark, our green dashed line, and then we've got a pretty significant level in the 103 mark, this red dashed line here. That's a point where price has bottomed out several times all the way back here, and also topped out here. It's where we had our high point after that gap. We did break above a little bit here on earnings, but it was quickly smacked back down. Then we had a downward channel that started to form from that point. Now, within the past couple weeks, we're breaking up to the outside out of that channel. We're crossing above our 2 shorter-term moving averages. We're crossing above our volume profile point of control. Our moving averages themselves are starting to shift from a downward slope to an upward slope, which is a sign that the trend could be changing here. But those resistance levels are going to be important. As I said, the 103 level is the first hurdle to jump over here. Then we've got our long-term trend line just above that. And then finally, in the shorter term, the next one that caught my eye was right here. It's the 113 level. That's our 252-day exponential moving average, roughly in confluence with these old highs from earnings right here. So that's the point that really, I think, would suggest if we break through that, we would be in more of an uptrend once again here. So look out for that.
Understood. Thank you. Those were great highlights that you did, and you showed us way back that line, how it was support, it was resistance, it was, you know, it goes back and forth. What a great demonstration. The one time it broke out, got smacked back down. I liked that, Rick. That was good. He certainly painted the picture properly. Final thoughts here.
Yeah, Rick said some very good things about the resistance points. Spot on. We're definitely, once we're past that 103 level, we should see this stock start to run up, and then we'll be talking about 118, 120. So that's the spot that we're looking for personally. But we're definitely going to hit some resistance before that, and not to load up, because there are going to be other opportunities for this to drop under 100 again.
Yeah. Achilles, thank you so much. It's always great to have
SPY
you
rejected
in
that.
person.
BBY looks like it wants to move up right at BBY here.
People love to follow really closely, so it's great to hear that you're optimistic, because a lot of people hold these. Achilles Larrea,
GME
founder,
holding
CEO
on.
of Larrea Wealth Management. Thank you. And our own Rick Ducat there, doing a great job on the charts. Thank you both for the big three. Okay, coming up next, we're going to spotlight the bond market for you. Should investors be looking for signs of this credit crunch? What it really means?
I'm going to sell one more of my calls, actually.
From Morningstar next.
Well, the price might go up more. I'm just not sure how much these calls are going to go up more, so just kind of keep legging out. I sold. Actually, I didn't sell any of them yesterday, but they're basically at the same price as yesterday. Well, I guess not. They're 100% down, but from the very, very high. But this is what they were trading most today. Right at open, they were higher, and then I think here. And then I have the short call in one of them. Do some more short calls. SPY is coming down there. Okay, I closed one of my calls. I only had 3 of them, so. But I have until April 6th. And $5. PayPal? Yes. PayPal. Pays 22%. One might be due for some rally. Osm looks good. Bonnie. Fanny Medical. Oh, Poppy. Hey, Poppy. Box D coming down a little bit. Oh, never mind. Bouncing off that 50. Trade Bitcoin and PayPal? I didn't know you could even trade on PayPal.
Other Model 3 vehicles, they are expected to retain access to the full tax credit at this point in time because they are sourcing those batteries from their Nevada plant as well as their Texas and California plant as well. So you would not even know that this news is in the marketplace at this point in time because the stock is still up about 3% as we are seeing this broader market rally. But this could be a significant impact when it comes to demand for that.
Oh yeah, the EV credits.
Because that tax credit, once again, it lowers the price for the consumer. So at the end of the day, Nicole, obviously this is going to be developing as these new tax credits and the laws themselves are still being clarified by some officials to be able to make sure that car companies are complying by the new standards. So this is going to be evolving here over the next couple of months.
No, I mean, I think it has a high short interest, and
thank you for all
you know, the price has been suppressed on there.
It's at 197 today. Kevin Green, an important name and important story.
Yeah, if you have a catalyst, like them fighting naked shorts or whatever, it's gonna get squeezy. But that's pretty common with penny stocks anyways.
What were your thoughts? I mean, as someone who follows what's going on,
whether it's because they've been heavily shorted to get to that price, or just for some reason because they're a penny stock.
So yesterday was certainly one of the most consequential
low
Fed
floats,
meetings we've seen in a
low
long
market
time.
caps, probably part of it.
The Fed is really walking a tightrope, as many say, between balancing financial
I guess
stability
Jimmy's brokenness was
and
just the
fighting
cycles.
inflation. So yesterday, the
I don't know if
markets
this thing's
priced in
actually
about a
trading in
25
cycles.
bips rate hike, which is exactly what the Fed did. But other than that, all we're
Investing in
seeing
help is,
that
I
the
would say,
market and the Fed
it's a good
are
idea
at
if you
odds
like
with
it
each
fundamentally
other.
for long term.
And we're
You
not
like
sure
the
when that's
business
going to
model.
stop. Yesterday, we saw the Fed use
Even though it
dovish
could definitely get
tones in
squeezy
their
with
press release, moving away from
news,
language about ongoing rate
them
hikes
fighting shorts or
to
whatever.
a much more softer, dovish stance
Kind of
about
same for
additional
GNS though.
policy
Like
firming might
this one
be
to me, it's just a
appropriate.
full-on
So when you combine
speculative
that
on them
language with the
going
dot
after
plot,
shorts.
you'll see the
I
Fed
don't
is
know about
ultimately
this
saying
company
higher for
necessarily at
longer,
all.
but markets disagree.
Yeah, so I'd like to hear, and we've been seeing that for some time, where the markets were telling us one thing, particularly the bond market versus the equity market. What are we learning? When you look at the bond market or the equity market, I mean, what do you surmise when you take a look at that?
So we're always looking for clues, and it's hard to say who will be right and who will be wrong in this scenario. But one thing we are looking at is that the inflation
any platform that you have margin on, they should let you short.
Views might make sense
what I was talking about was probably the futures.
There's the differential on the long tips index between the
Trading
long treasury
the
index
ES futures,
just above 2.25%.
futures on the
so what
S&P
this is
500.
telling us is that the longer term market
And those you just go short or long
is pretty
with
close
margin.
to where the
Basically
Fed
like shorting
is
shares.
aiming it to be, signaling that higher for longer may not actually be the case. And just one final point on this, Nicole, is that it's often said that the Fed won't cut rates until something breaks, but the threat of financial instability is looming so large with the SVB fallout, the recent rescue of Credit Suisse, all with potential for
you can make money on those rips A's. It's just
to the financial system.
If they stop happening, then you're stuck with this big position
market are really showing that the threat
of a company you don't care about or believe in.
Right, understood. So tell me about the charts that we're focusing on. You have the inflation break-even rate. You talked about that. And what other charts are you following most closely?
So we're also looking at the performance of the U.S. Treasury bond index and how it's reacted to the, the financial instability, the recent rate rise.
Gas coming
so we have a
back
chart
down here.
showing how the U.S.
Morningstar
U.S. Treasury bond index has performed over the last couple of weeks, as well as the yields on that index. And what you see here on this chart is that yields have dropped more than 80 bips since the start of the SVB crisis, now down to about 3.8%. Including yesterday's 20 bip drop. That's pretty big in response to yesterday's FOMC meeting. But I think there's really two positive notes to look at in this chart. Is first, the value of treasuries in the investor's portfolio has risen really sharply, emphasizing how treasuries can play an important role in times of turmoil. So the index, which started the month in negative territory, jumped positive 3% in a week's time and is still trending upwards. The other thing, again, in between the lines, is the spreads between the U.S. short-term Treasury bond index and the long-term Treasury bond index have narrowed significantly since the start of the month, which, considering the lingering inversion of the yield curve, can actually be seen as a positive, healthy development for the bond market.
At the same time, we saw all that volatility when we started to hear about the regional banks, and we've seen inverted yield curves, and you've seen a lot of people investing in the short-term trade because they're making a lot of money. What's your outlook now? Because a lot of people who have moved from cash into treasuries because the return is pretty nice. Any outlook or thoughts on 2023 now for investors?
So my outlook is that this is going to be a bumpy road this year, and investors should expect much more twists and turns with new macroeconomic data coming out. Today, we saw that jobless claims inched down, showing the labor market is still tight. New home sales actually grew slightly, which says that the Fed still has work to go. That said, we have not seen the full impact of the liquidity actions that the Fed has taken to help rescue the banks, which could act as a form of another rate hike. So with all that in mind, our advice is really to maintain that power of a diversified portfolio. Treasuries can and will serve as that asset in tumultuous times, and to just be on the lookout for clues across the bond market of where things are heading.
I think you make a great point because there is that lag time, and we haven't fully seen the full effects of all the rate hikes just yet. That's a great point, too. Katie, nice to see you. Thank you for being on the show today. Katie Binns of Morningstar. Appreciate it. Coming up next, the disruptors. If you've been watching Coinbase, well, we'll dive into this name, the crypto stock. It is down 11% as we speak. Having a hard time. What's going on here? Let's get all the details.
What do you mean what's going on with Hellbiz? Hellbiz CEO seems like a troll? Oh, because they said they were going to fight naked shorts? They actually did announce like a dividend or something, didn't they? A while ago? Or was that? The stock didn't react at all. I was really surprised. Regains compliance. That'll definitely cause it to rip. I'm kind of waiting for something like that on birds. Unless they don't regain compliance, I guess. Yeah. No, it's I thought they announced like a dividend or like a coupon. Where is it? Yeah. Hellbiz announces plan to issue digital dividend coupons. That was February 7th. And the stock didn't move at all from it. So maybe the shorts called the bluff on that, or I don't know. Yeah, look, that was right here. I don't know. Seems like they maybe did, because I haven't heard anything about it since.
Investors not happy.
Yeah, not happy at all, Nicole. I mean, there's certainly a divergence going on between, let's say, Bitcoin itself as a coin versus, transactional and brokerage services that Coinbase provides. They also provide things like collateralized lending, and we know that that's one of the challenges that Silvergate Capital had. The other thing is exchange custodial services and transactions have been down significantly over the last year when it comes down to crypto trading, particularly in the altcoins. There seems to be a lot of demand now for cold storage of Bitcoin, and so I think that's been a challenge overall for Coinbase. But at the same time, there's a lot of regulatory overhang that still needs to develop here for companies like Coinbase, based upon, again, the fallout that we saw with FTX. But the company did receive a Wells notice from the Securities and Exchange Commission. Now, it's essentially an intent to bring an enforcement action. It's not actually a lawsuit, but it really brings into question what's going on with the what's called spot market or staking services that Coinbase provides, essentially like its own essential token, whether or not that token has to be registered as a security by the Securities and Exchange Commission. These are all legal issues that need to be sorted out, and I think right now, based upon the Wells notice, which again is not necessarily a legal injunction or a civil penalty per se, but it is an enforcement action that is taking upon on Coinbase on whether or not the securities that are registered or unregistered securities need to be registered on their platform. And this is essentially a way to protect, of course, consumers and traders who utilize their platform, as well as lenders who utilize their tokens as collateral for loans. Again, and that was part and parcel of what happened with Silvergate. And then the other questions about their own tokens. And this essentially was one of the challenges that FTX faced prior to its insolvency and eventual bankruptcy filing. So if you look at the stock, I'm going to just looking at it objectively, just from a standpoint of sales in the last year, down significantly. If you look at 2021, the company generated over $7.1 billion in sales, and in 2022 it was down to $3.1 billion. So that's about a 60% decline in sales. And at the same time, in 2021, they generated as a company over $3 billion in operating income, and that swung in 1 year $5 billion to a $2 billion loss. So just that alone, alongside transaction volumes down, and the fact that the company's still not expected to earn any money this year, with revenues expected to still be down about 24%, those challenges, financial and endogenous challenges, also don't bode well for the stock at all. Not to mention, of course, regulatory action. And it's not just Coinbase. We know that there's a lot of regulatory overhang, even amongst the regional banks right now, especially those that are tied to crypto collateralized lending as well as VC lending.
And I see some downgrades that are happening, and I just wanted to go over those numbers again so I could get them correct. And that is that as I look back, and I had the theme right, I just didn't have the numbers right. It was over $400 back in April of 2021, went down to $31.
Coming down here, Beth.
That's
got
what
a
left
food.
the investors not happy.
Still holding up,
nice
66%.
But again, pulling back
pop
double
up
digits, so it shows the volatility and the
kept
uncertainty.
rallying.
I think the regulatory environment, everybody wanted more regulation, even the folks in crypto, so they could have more clarity. But now, how does this sort of trickle through the system? Some of the other names that are invested in crypto?
Well, I think, right now, especially a lot of these brokerage services that still haven't proven themselves, let's say over multiple years, Nicole, are still going to be challenged. And I think
let's get nuts.
You just have to
Thanks,
look at
Big
the
Hogs.
operating
Appreciate
losses.
it, man.
If you have an operating loss as a company, you basically have a negative earnings
Appreciate
yield.
your dono.
Negative earnings yield puts pressure on your stock price. So therefore, my
Going
point
good.
is that this is a tough
Fat
one
blue
to
peach,
even
man.
value. And if you look at Oppenheimer, for instance, today, they've got basically a market perform from an outperform, but they even denoted they don't have a price target. And so that gives you an idea that it's a very challenging environment to kind of gauge where the expectations for Coinbase is as a company stock, as well as its business, which again is going to be facing regulatory scrutiny. And so it's all done to protect, of course, investors.
That's not a bad looking chart.
Which again is part and parcel of what's established or challenged or going to create more confidence, if you will, in their platform. But at the same time, the environment is really challenging right now just because of the nature of what's going on in the financial system, the banking system, and of course, here you've got Coinbase in the middle of it, utilizing crypto assets as collateral, as well as transaction volumes that are down. So just outside of the Wells notice alone, there's going to be stock price pressure because of the negative yield that the company faces.
I see. Thank you for that description and explanation. Appreciate it, George. It's not just the Bitcoin story. Thank you very much, George Sillis. Appreciate it. Coming up next, our panel ready to take a look at the restaurant stocks. Checking on a name like Darden, for example, after its latest earnings report. That and all the details next on Trading 360.
Mara, AI 13%. AI is breaking out there. One of you guys was going long on AI yesterday. I'm like, wow, it's getting its move. Tops. Get back down to VWAP. Verbs holding up nice. Netflix still 9%. Microsoft still 2.8. Apple almost 2. GME still flat. Oil's up 1.5 today. Dollar's down 0.25%. Everything you need to see for a rally. Hourly 200 moving average. Yeah, it's had a pretty smooth climb up here above that 9. Very true. Got some resistance kind of at this level back here where it's at already. Look at that RSI tick up on the daily. Wow. SPY moving up here a little bit. Still way above VWAP. Look how low VWAP is on the SPY. Bank of America? Still looks bearish to me. I mean, it's like a bear flag of sorts, right? Big drop and some consolidation at a low. So level's at 27.71. Kind of bouncing around this resistance it had from the COVID bounce. I don't know. I'll probably wait for some signs of reversal to go long on it if you're going long. I don't think the bank contagion is over either, so you have kind of a little RSI divergence there. Not great though. Just looks like consolidating at a low or more lows. Yeah, Ulta it's on its way down, it looks like. Slowly rounding the bend. Yeah, but that's the point. They're at their support. They didn't like bounce and show reversal signs at it. That's the thing. All the banks have similar charts to ever seen it. Hey, wow. SPY's moving up here. Oh, that's right, Pablo. Yeah, I was keeping an eye on BABA. It's doing well. I mean, lots of stuff's doing well today, but yesterday it looked good too, so hope that trade's going well for you, man. Yeah, and that next drop
sort of
through that support is
margin expansion that we saw during COVID.
Be quite
the firm
large.
took a scalpel to costs, and we looked at really what we thought were artificially low marketing expenditures. We basically saw those fall by 67%, by 2/3. Now, as we're kind of 2 or 3 years into this, we're finally giving credit where credit's due. So to see the value proposition resonate the way that it has, for sort of the four-wall profitability to improve the way that it has, allowing management to continue to invest behind the brand, we actually expect to raise our fair value estimate by about 15% as a result of earnings. That would sort of leave shares trading in a range we'd consider fairly valued at this point.
Oh, so you are likely to
Never goes
move it
down.
higher at some point.
Yeah, AI rip too.
That being said, when you
No,
look
I still don't like that
you
chart. I
said,
think it's just
consumers
risky
are
taking it
spending,
along.
exceeding the trailing 5-year figures. So
but yeah,
it
you got
seems
the
like
move
there's
so far.
some people want to get
I don't
out
know
and they're
how much more legs
spending
it
on the
has.
restaurants. So you like the spending, Sean, that you've been seeing.
Yeah,
Tell
Mara
me
was
about some
kinda
of the
hitting
other
a top.
names. Do you have buy ratings on some
I
of
think
the
this
other
might
names?
break
And
out,
if so,
though.
which ones and why?
Yeah, pretty challenging industry backdrop right now. Obviously, we've seen the inflationary pressure that we've seen, and I'm not sure that the market has fully priced in how that's going to play through in terms of sort of new unit development. So, by and large, the industry trades at about a 4% premium, about 4% expensive relative to our intrinsic
Eyeball options.
valuations. But we do see pretty good value
You're not holding on to Baba?
in Domino's. It's been disproportionately punished for the pressure in the delivery business, but still has the best unit economics of any operator in our coverage. And then also in Wendy's, which is very quietly strung together about 10 years of positive U.S. same restaurant sales growth, has compelling unit level economics and has inked a couple of franchise development agreements in Asia Pacific. So sort of Domino's and Wendy's are our top picks right now.
Yeah. Lee, as
Let's
I
see
was
what
going
GME
through the
did on
performance
Monday.
of all the names
Yesterday's
here,
pop?
I know you have some of the
No,
negatives here,
yesterday's-
and obviously
no.
inflation has been tough for so many of these companies.
So
but
yesterday's pop put
so many
options in the money that
winners,
expired
right? Like
this
Bloomin'
week.
Brands and Chewy
So
and
if
Brinker.
GME holds up
Brinker's
these levels,
relatively flat. But what really caught my eye
depends on where
was
it closed
Dutch
at the end of the
Bros
week.
and how that's down 50% over 1
It
year.
closes at what,
What
24,
are some of the
October
negatives that are
24.
facing some of these
And
names, or
all
Darden
these
in
options from 24
particularly?
down to like 18 that were out of the money. Now
Right.
in
Well,
the
I
money.
mean, there is intense
So
competition
a percentage of those are
in
going
the
to exercise,
casual dining segment. I
and
mean,
that will put pressure
I
on the market
think
maker to
that is
go
again
buy
just a
shares,
little
and they
bit
have to have them
weaker.
delivered
I would also say that
into
looking at
settlement
Darden
days, which is
vis-a-vis
Tuesday.
the
So you're looking at
competitors,
next Tuesday for
their PE is significantly
a
above
rally from the options
the
expiring
other
this
ones. I think
Friday,
Bloomin'
not last
Brands
Friday.
is around 9 or I think 8.5 times earnings. Dine Brands is like at a 9.7. So you got a much higher PE on Darden. Now there is
Wait for that to
some
break
talk
retest.
that maybe Darden should be valued more like a premium
Sales
consumer
growth by
brand,
wage
like
number.
a Pepsi or something like that. So the PE
Those
would
make it
be
1940.
lower. I mean higher, but still it is
It's
significantly
pretty
higher
bearish,
than
man.
its competitors. Then of course the economy is the
That'd be a
factor.
pretty
I mean, if
severe
we really
drop
do go into a hard
if
landing,
today's
then people are
Thursday.
going to cut back. So that could be a negative too.
Yeah. I mean, and buybacks, I mean,
think
that's
it's gonna
something
close
that could be, at least some people like that. Sean, final thoughts on this group, or Darden in particular?
Yeah, I think Lee hit it on the head. We're walking into a very difficult 2023 in terms of pricing, in terms of the pressure that we see with the consumer. So far, Darden hasn't seen any evidence of trade down into those lower brands or out of the category entirely, but that's definitely what investors should be keeping an eye on, we think, as we move sort of into the back half of the year.
Yeah, and surprising how more and more people still going to the restaurants in person. Thank you so much. Wonderful to see you both. Thank you, Sean Dunlop and Lee Bull. Great to see you both. That's going to do it for us here on Trading 360. Thanks for being with me every single weekday, 11 a.m. and 2 p.m. Eastern Time. So I'll be back at 2 for the watch list. Join me then, but keep it right here because Fast Market is next.
Bad hombre. You're welcome. I have 42.5 shares and I'll get $85. Dividends $2, you get $2 per share. $2.80 per share. I went and bought more BBBY. It's like you went to the store to get them. Just kind of consolidating up here. That's 3 daily candles. GME is now down 1.5, just below VWAP. This is a 180, so it's close. Yeah, it might not rally. I'm just thinking crypto's rallying, Riot's rallying. I mean, I guess it is up 13%, but whoops. I think it'll keep going with more bank contagion stuff going on. I don't know. General Motors is up 1%. GME coming down below VWAP now. Yeah, banks are fine. That's right. I forgot. We're bailing them out again. We choose the poor's insurance to insure the rich. Already in the hole. Might as well average down. Yeah. I took the 8K this morning as being bullish, but there's not clear consensus on exactly what it's saying. So, but the market did too, and we had that rally up, I think, from when that 8K went out.
Bob, welcome to the show, Joe. We've got quite a bit of a rebound here.
2.5, 24
and I think one of the things that stuck out to me after the 25 basis point hike was that everybody kind of got that
kind of consolidating, trading around its range up here.
The Fed's done. Inflation's starting to come down. They're going to pivot. We're going to start cutting rates by the end of the year.
That's like today's low.
But that didn't happen, right?
Yeah.
No, and if that was the thought, then I think investors need to kind of rethink that, because, look, nothing from Powell's speech gave me any indication that rate cuts are starting anytime soon. What I did hear, and I think, maybe some of that initial optimism, and maybe that's carrying forward a little bit today, but I mean, is the idea that maybe the Fed is almost done, right? So if you look at kind of the dot plots and taking us to that 5.1, between 5.1 and 5.2 range for kind of our terminal rate, we're basically almost there. It could be maybe one more 25 basis point hike, but yeah, I didn't get any indication that the Fed is going to be cutting anytime this year. The Fed is still on its path to get to inflation down to 2%. One of the things I would have liked to have heard, and maybe this isn't part of Powell's game plan right now, is just maybe a recognition that maybe 2% might be out of reach for a while. Maybe we need to kind of reconsider what that range should be. But otherwise, some of the other things that kind of stuck out to me is that the Fed's acknowledgement, and almost beyond acknowledgement, just the statement, right, that we don't know what the weakness in the banks and the credit crunch that is currently underway. We don't know what kind of that long-term damage might be, and so we're taking that data appropriately. I would have liked to have heard a little bit more of a response, as opposed to, yeah, we don't know, we'll have to wait and see. I guess it was honest, but boy, I was looking for a little bit more optimism from Fed Chair Powell that that the Fed is fully aware of it.
You see GME filling the gap before more upside? No, I don't think
if
so.
You look at what happened after.
I mean, might fill it some.
You kind of pull in.
I don't think we're going to fill this gap though before.
Saying we're not going to provide a unlimited backstop. That's when the market really started to roll over.
I think it'll hang out up here, but most likely maybe new highs.
In my opinion, what
the gap fill, I'm not
seeing
that anytime in the short term,
unless
the market just crashes,
it's not
which it could.
A solvency issue. I don't think that's
more likely we won't fill that gap when the
question
market
at all.
crash.
It's a liquidity issue, which has led to investor sentiment.
And even if it does,
I think we have to
might not fully fill that gap.
Investor sentiment drives markets, right? There's a psychology.
I don't know sport on GME. I mean, we have
sentiment, and if that starts to dry up fairly quickly,
2250 was kind of the low there today, so it's kind of building support.
The credit markets,
pull it back to.
Yeah, and I think
like
a lot
here,
of the banking stocks are getting dragged down because of this contagion type effect that sometimes happens when you have a few bad actors within a specific sector.
Well, I was saying 22
but we'll have to wait and see.
No, that's not a bad
I agree with you, Joe.
area.
I think the biggest thing yesterday, the takeaway
22,
in
the
the
bottom of
slide
that
that
wick.
we saw the last 15, 20 minutes of the day was based on what Yellen was talking about. As far as
it looks like
FDIC,
nice consolidation, even though it's come down a little
putting
bit.
that backstop on depositors and insurance basically for investors at this point. I think that was basically the key. But one of the names that's taken a hit today is Coinbase. Got served a Wells notice after the close. Let's bring in Caroline Wood, senior markets correspondent. Caroline, came out after the close yesterday. 2 words no company wants to ever hear, and that's Wells notice. What do you got for us here on Coinbase?
Hi there, Tom. Yes, and it's certainly weighing on shares of Coinbase right now, off the lows, but still down about 11.5% as this potential SEC battle brews. But yes, a Wells notice isn't a formal charge or a lawsuit, but basically it's a precursor to one. It's typically one of the final steps that the SEC takes before actually giving formal charges against a company. This relates to violations actually that we don't really know the specifics of these potential violations, but Coinbase says they relate to an undefined portion of its listed digital assets, as well as its staking service, Coinbase Earn, Coinbase Prime, and Coinbase Wallet. They're calling it a cursory investigation, so a hasty investigation. Coinbase said it asked the SEC to identify which assets on its platform they believe may be securities. That's obviously the age-old question. They declined to do so, claiming at no point in this investigation has the SEC told them that there's a single specific concern about an asset on its platform. They also say they've provided multiple proposals to the SEC about registration over the course of past several months, all of which the SEC ultimately refused to respond to. In a blog post, Coinbase said they are confident in the legality of its assets and its services, and they assured customers that products and services will continue to operate as usual. They say this notice does not require any changes to its current products or services. Meanwhile, CEO Brian Armstrong was tweeting that while we understand that this is all part of a journey to reforming our financial system, we are right on the law, confident in the facts, and welcome the opportunity for Coinbase and by extension the broader crypto community to get before a court.
SPY chart indicating.
So the potential civil action may seek injunctive relief,
Bought a put, you plan on
disgorgement
closing
or
today.
giving up of profits or civil penalties.
Seems just like kind of
weighing on
we're
shares,
up
as
1.5.
I said,
I'm not expecting too much of a move. I guess more from
already
here.
off the lows, but interestingly enough, not having an
hard to
impact
read,
on
though.
Bitcoin or Ethereum. Both are higher right now.
I still see kind of actually
Right,
upside
that to
on
me
the longer
was
time frame.
fascinating to see that that's not kind of spilling over.
Intraday, it's
into, the two big leaders in the coin space.
yeah,
My
not a
question
great
is
not a
really,
great setup.
Does this set the stage?
Might
for
come back down to
potential
VWAP, but
registration
I don't know how
down
long
the
to wait for that.
road for altcoins, not only altcoins but altcoin platforms. Is that a fear that's building a little bit within the space?
I mean, I think that this sets the stage for really just a complete, if there is regulation here, the regulatory backdrop changes, I think it can have really far-reaching impacts. Dan Dolev over at Mizuho was talking specifically about the impact on altcoins or tokens, aside from Bitcoin, mostly how it relates to Coinbase. But he said even if there's no near-term disruption, altcoins may ultimately require registration, and risk of application denial could significantly weigh on Coinbase's ability to generate revenue. He actually estimates for Coinbase specifically that at least 25% of applications for altcoin registration could be denied by the SEC, and he calls that a conservative estimate. So he thinks that and of course potentially lost staking revenue, could lower revenue by as much as 20%. So he reiterated his underperform rating on the shares and $30 price target, which if you look at Coinbase, shares are up, almost 100% this year, trading around $68. So that would cut Coinbase's share price in more than half. I mean, obviously the big question is, are digital assets securities? Waiting for an answer on that. If they are deemed to be securities, then the regulatory landscape completely changes. And just the unhealthy regulatory landscape is what led Oppenheimer to downgrade Coinbase as well. The analysts there downgraded to perform from outperform, no price target given. But he says, while we remain highly supportive of blockchain digital asset development in the U.S., under this unhealthy regulatory climate, we are increasingly worried about the fairness of the enforcement actions and the ability for the ecosystem to grow with seemingly limited and shrinking support from the banking system in the U.S. So another underperform rating for Coinbase there. So obviously a lot that we need to see if it plays out, including if there's an official SEC charge. But it's certainly interesting times for this space. And as you can see here, definitely weighing on Coinbase, not so much some of its competitors.
Yeah, and it's not weighing on Bitcoin at all either. That Bitcoin's up over 7% today, right near those 9-month highs that we hit just a couple sessions ago. So waiting for this to play out, and I think regulation is going to be the word of the day in this space moving forward. All right, thanks to Caroline Woods, senior markets correspondent here on the network, breaking down the Coinbase news. Joe, I wanted to kind of go back to that the conversation that we were having, basically that late day sell-off that we had, that double whammy, as I like to call it, between Fed Chair Powell saying that we're not going to cut rates we're not anticipating cutting rates this year, and then Treasury Secretary Yellen coming out saying we're not going to backstop deposits here above that 250K. Didn't really get into details about that, but that's kind of what hit the market. And then, you get jobless claims that come in again, another solid number, but it's not what the Fed wants to see.
A bit here.
What is the market getting wrong here, Joe, where they anticipate rate
actually
cuts?
not a bad,
does this mean that the economy is just going to really break down towards the end of the year?
I'll tell you what I'm looking at, Tom. I am looking at the unwinding of that 2-10-year yield.
Yeah, I would be exiting probably at BBBY if it hits there.
Just a few weeks ago.
Right.
Between the 2s and the 10s, and we've really started to see that unwind. I think what that tells, or what that should be telling you from the fixed income market's point of view, is that they see some economic weakness down the road.
I don't like the trade right now.
Right? I mean, if you've seen those 2-year rates come back down to about sub 4 after being at above 5 earlier in the month, this is the type of volatility in the fixed income markets that's we don't see very often. I mean, this is 40-year type of implied volatility and movement, standard deviation, like 10 standard deviation moves. I mean, this is pretty crazy times when you're looking at what we're seeing with the yields markets. When I see that unwinding, to me it says that the 2 years predicting that the economy is probably going to be at a weak point at some point later half of the year, and in turn, or that could kind of force the Fed's hand. I don't think you're necessarily going to see the Fed cut unless you see a real severe market sell-off, or the credit crisis continue to widen. I think an asset crisis, right? Like we saw last year, where you see the markets pull back 30-35%. You didn't see the Fed blink at all in its path along that. It's going to be if it's a credit crisis, if we start to see banks really pull in on that lending, which I think we've already started to see quite a bit.
Yeah.
If we see that access to capital becomes extremely difficult, that's where you might see the Fed pivot. But right now, hey, they're standing firm.
Yeah, that 2-year yield down under 4%, 3.88%. That 210 spread that you mentioned, Joe, that was above inverted by over 100 basis points, now down to about 43 basis point inversion on that. So that's come in quite a bit. You have to look at the Treasury markets, I think, for maybe some direction for equities. But, Joe, when you look at the NASDAQ 100 leading to the upside, and it's led by all the major tech companies here.
Spies flushing down there. There you go.
Apple,
Hold your
Nvidia
butts.
up nearly 90% so far this year. Some of these other names.
Support.
It's hard to break or get that optimism that the markets got into itself today. It's hard to break that when you've got the such big components of the major indices leading the way today.
Still consolidating that support range, though.
Is, we've been looking
Box
at
D, 98%.
We'll look at, we call it the quilt, right? It shows kind of the sector rotations. And normally we look at a month-over-month basis. Liz Ann Saunders, my colleague, she put a report out earlier in the week where she was actually looking at on a week-by-week basis because of the fact that we've seen such rotations in and out of the sectors recently. And you look at the big winners the last couple of weeks been information technology, communication services.
These right here?
These were the sectors that got beat up the most last year. They're outperforming because
yesterday's support
to
here.
a certain extent, investors maybe saw some opportunities at the beginning of the year, January, February, where there were some
resistance up
undervalued names within those sectors. I think
here
now more than likely
was
though
a
it's
pre-market
probably
high and the high up the other day.
A certain extent of moving towards companies
that
have
one,
the balance sheets
made
that they're
sense.
looking
This
for,
one didn't
that
really
cash
affect.
flow generation.
This one kind of worked
a
too, so the
return to
resistance
growth
here. So
because of the underperformance of the
one down
cyclical.
here,
So what they're seeing
pre-market
right now
high.
is they're seeing the
also the support back
the
there.
healthcare's underperformed. They're seeing financials underperform. They're seeing where can we rotate? And
pre-market
they're seeing that
low there.
outperformance. And I think at this point it might be getting a little bit extended. Only time will tell. But there's also a little bit of that fear of missing out trade I think you're seeing as well too.
So
yeah, you got Meta Platforms up over 70% so far this year.
Didn't really
you're seeing that
this
pop
was
in
kind of
Netflix
lower.
today, leading the S&P 500 at this point. So that might be some concerns. But Joe, when you look at the market leaders at this point, it seems like financials are still lagging a little bit. Communication services, information technology leading the way. There we've got that chart of Meta up there. Pretty robust moves, but. Are some of these firms kind of outside the box of what people are looking at as far as volatility and perhaps maybe pushing into these tech companies because they can maybe potentially weather the storm a little bit better than maybe some of the other sectors?
Yeah, no, I would agree with that. I think a lot of that has to go back to the cash on the balance sheets, and I think that the free cash flow generation is one of those critical factors that you're seeing, and these are the companies that have historically been able to do that. Kind of go back to the kind of the 07 playbook a little bit, the 2007 playbook and 2008 playbook. Not by any means saying we're looking at the great financial crisis again, but you do want to look at maybe some of those rotations that you saw. I mean, back then, when you were looking and saying, okay, well, let's look at this from a PE standpoint, a lot of the names that outperformed were names that you wouldn't look at in terms of price relative to earnings and say, well, hey, this is a cheap company. I think what you should be looking at is something like a cash flow yield, because some of these companies are generating really good cash flow relative to their current market price. So maybe that is a factor you should be kind of keeping an eye on. Maybe that's a factor that the market is looking at right now. In bidding up some of these names. But I mean, look, to be honest, when you look at some of even just the technical factors, if are outside of some of the fundamental factors, some of these names are extended. And when you look at RSIs, 75, 76, pushing up to 78 for some of these names, remember they can stay up for a while. But at some point, here we go. We got earnings, basically starting next month. We'll get a peek into whether or not those runs that we've seen have been justified by earnings. But one of the things that I'm kind of keeping an eye on is, what are the analysts doing as we're heading into earnings? They've been cutting a lot of the earnings expectations for some of these names, and the stocks continue to move up. So at some point, something's got to give. Either the analysts are going to say, no, we're wrong, or the stock's going to have to give up some of those.
Looks like it might keep
definitely.
flushing out.
I think earnings season is going to be key, especially with that guidance moving forward into the second half of this year. With some people out there saying that recession's coming on the coming down the pipeline. And if you look at some of the yield spreads, maybe history will, basically repeat itself. We'll have to wait and see on that. All right, Joe, let's take a quick break. When we come back, we're going to take a look at one of those winners in the tech space. That's AMD, which is up over 50% so far this year and hit 2023 highs. Fast Market's coming right back.
GME not really moving down with this SPY drop. Box D breaking out some more, 120%. Jeez. It all started with that RSI divergence. Still holding your put, Gene? You're gonna see a VWAP move. Awesome. Oh, getting a little wiki there. %. Nice. Nice. I believe in your scalping and writing momentum capabilities. Abilities. SPY's getting a bounce there. Wick's pretty hard on the downside. Foxy having a hard time. Yeah. Will be a rip after hours? Not without news, I don't think. Yeah, Gene, that's kind of the lure. That's like the pulling the slot machine and figure out the math on how you could win and do it. Unfortunately, it just doesn't end up working like that. So can't consistently make a percent every day. People are successful day trading stock market, but it's like 10% of the people. So good paper trade it for a while, see how you get a track record. Seems doable, yeah. But yeah. How do I trade then? I just lose money. That's how I know. I don't day trade SPY options. I've done some future trading and it's had varying success. I'm down right now on my futures account, but yeah. I see selling premium as a good way to make money in the market, or just investing long term. The rest of the stuff is very speculative and short-lived, most likely. After enough time, you most likely give your money back. Oh, you lose. Yeah, I mean, you have some winners and some losers. It's like a casino that never closes. That's the thing about gambling, is once you're up, you can actually leave, but when does it end? Because if you go back next weekend, and then you're down, and so, yeah. I mean, some people are successful with it, for sure. It's a very small percentage. Yeah, that is one of the challenges, small gains consistently.
Take control of your financial future. Next
yeah, you gotta. And oftentimes, beginner traders get lucky their first however long. I think because they just go with their intuition and they're not overthinking stuff, and they haven't had bad experiences to burn them yet, and those crazy big highs to make them too greedy. So that's not uncommon, actually. Not to say you shouldn't try and go for it, but it makes sense to have a track record of being successful with a paper account before ever playing with real money. Even though it's a little different with money since you have emotions involved, but if you can just make it muscle memory with a paper account, then transfer that over. It's so bad with paper. Yeah, the last like 2-3 years have just not been a normal market environment to the upside, and downside's been maybe more normal than the upside. Okay, this bear market's been maybe more historically normal for a bear market. We're still missing the crash, but might not get it. Netflix rip? I'm not sure. We had a lot of the mega caps ripping. Yeah, I mean Netflix almost 9%. Microsoft 3%. Apple 2%. Definitely part of the push here. Oh, FRC ended up coming down 8%. Yeah, these are going to break through these lows, I think. A lot of these banks. Market's just held up by mega caps, seems like, solely. SPY's kind of bouncing up there. It bounced off that 50 moving average. Kind of this support we had drawn here, 39.7, 37. Yeah, you can do it with just a small amount, that's true. That's another good good lesson to have, having a plan and sticking to it. On Netflix 2014. Nice. Is your brother selling covered calls in that Netflix position? %, really?
But when you look in total, I think that the move, people's move from sit-down restaurants and more expensive meals to something like a McDonald's or fast food is somewhat telling that the consumer is getting significantly stretched here.
Yeah, and Andy, when you compare it, you mentioned Chick-fil-A leading the pack there, probably as far as happiness goes, but then you've got Wendy's, and you've got QSR, which has the Burger King and Popeyes franchises underneath it. When you look at happiness of McDonald's, I always feel like you mentioned Walmart. It's compared to Walmart a little bit. McDonald's seems the same way. People go there for the convenience, over 40,000 locations, right? It's a global footprint company. But at the same time, is it due to just the necessity, or maybe the location of McDonald's, as opposed to, hey, we're really happy with McDonald's, I'm going to keep going back?
Yeah, I think it's a mixed bag. I think that there's obviously, McDonald's doesn't have, like a Chick-fil-A or, Five Guys Burgers type of consumer response when people actually eat the food. But people are happy with McDonald's consistency. It's something you can count on no matter almost where you are in the world, that the experience, what you're going to get, on the menu what you like and what you don't like and what you can tolerate. And it's pretty consistent across the board. So I think there is a level of happiness with that consistency, even though the food itself, the experience itself, may not blow your socks off.
Yeah, definitely consistency, I think, is what people enjoy, and the convenience here going into this. Now, they don't have earnings until like the 27th of April, so we're a far ways there. But according to your data, we're starting to see an uptick. What kind of earnings score would you have on this company if you had one today? Yeah,
we would be just slightly bearish. We're concerned about that overall ticket price, the amount of money they're making per user coming through the door, I think that the risk for the stock is probably a little bit to the downside from here. But from a long-term perspective, again, best of breed in a field that has an emerging tailwind. So like it long-term, but a little concerned short-term.
Yeah, I think that, it plays both ways in that aspect that, hey, it's convenient, but then lower cost entry point. And if inflationary pressures continue to ease, that might expand their margins a little bit too, even if the traffic diminishes a little bit. All right, Andy, great stuff as always and great data. Have a good day.
Thank you, you too.
All right, that's Andy Swan, co-founder at Likefolio. Joe, give me your breakdown here. McDonald's, it's only up 2% for the year. I mean, I can say it a million times. I don't go to McDonald's anymore. I mean, I live in a big city. There's really good options here. It's not that I don't eat garbage food. I just don't go to McDonald's. Give me your take here.
I just wanted to know, I mean, I look like Times Square to me in the video shop. What McDonald's actually has somebody smiling and bringing you your food at the same time? Well, I haven't seen that in 30 years.
Right.
Look, McDonald's itself has totally evolved, right? I mean, it's basically now using the app, using the screens at the store. It's really all about kind of a time and efficiency as opposed to that service. There we go again, that service with a smile. It's not a destination place like it used to be, right? It's not bring your kids so they can play on the play tops there. It's really get in, get your food. It's kind of the same model that we saw with Starbucks when they really started to adopt the app. Now people go in there, they pick their stuff up, and they get out. McDonald's is kind of the same way. Now, one of the things that I think is going to help them, I think you talked about this a little bit, is the dollar pulling back, right? It's going to help with some international sales. That trade down effect from this whole year of 2022 where everybody said, hey, we've been caged up at home for 2 years. We want to go out. And so they moved up that price scale. Now they might be moving back down. I would say they're even tightening their belts to a certain extent, as they kind of shift down to that fast food convenience. Let's get in, let's get out. We got to go to a soccer game, things like that. That is where McDonald's will thrive, potentially in 2023. If they can get those headwinds from the dollar to kind of pull back, I think that helps them out. If they get the trade down from consumer, I think that helps them out. And if they can continue that the adoption of McDonald's app, I think that is something that could help the stock out going forward.
Yeah, you mentioned the dollar down at 6-week lows. That's definitely going to help them because that was the major headwind for them in 2022 because comparable sales grew over 10% as comparable guest counts grew 5% due to promotions and due to price increases. So the lower dollar was the only headwind. That signals to me that it should only get better because the dollar, as I mentioned, is at 6-week lows. So I looked at a strategy here, Joe. That's a low-cost entry point.
There's
you want
SPY
to kind
continuing
of avoid
on
that
down.
earnings event because that
Look at
could
that VWAP,
add
man.
some additional
Jaggedy
volatility
and
here.
weird.
So I looked at a call butterfly to the upside. It's unbalanced, so you only have one break even. But I looked out in that April monthly cycle that expires on the 21st of April ahead of earnings. Buying the 270 call one time, selling 2 of the 280 calls, and then buying 1 of the 280 2.5 calls. So in essence, you're buying a $10 wide call vertical and then selling a $2.50 wide one. And you're paying roughly about a $3.75 debit. That's your risk, $375.
Well, yeah, if you could maybe just make it a muscle memory.
But it just takes advantage, Joe, of a grind higher up towards 280, which at this point is only about $9 above the current share price. And you've got a month in this trade. Joe, give me your take here on a unbalanced or skewed call butterfly here to the upside.
So when I looked at your trades, now I immediately kind of went to the charts and said,
What type of word is kiosk?
Because we've been in this tight range, really basically all the way going back to November. If it breaks up above this kind of 271, 272 level that it's really at just basically right now, if we can get up above that, that kind of breaks that downtrend that we've been in, almost like a declining wedge. If we get up above that, this thing potentially has some room to pull back up to that area that you were looking at, that 280, 281, where we were at right around the end of October. And if it can do that and build some strength and kind of slowly grind up towards that, this trade will work out well. Because remember, anytime you're looking at a spread like this, a butterfly spread, you want to go to your short strikes. You want to move from your long strike to the short strike. That's where this thing will maximize in value. And what I like about the way that you have this constructed is, should it continue to build some momentum upon that and continue to break out, this trade won't lose money up above your short strike. What it'll do is it'll get back some of those gains, right? There's no free lunch. I'm gonna use as many bad puns and analogies as I can when I'm talking about McDonald's here. So if we get up above that 280 and then break up above your long strike at the 282.5, you can still continue to make money on this trade, and it has that nice kind of bullish sentiment built into it, and it's a fairly low cost way to do it.
Yeah, still nearly a double if it gets above that 282.5 strike. And Joe, I love that we're thinking on the same levels as far as the technicals go, because that all-time high just above 281 at the end of October was the level that I was looking at. Just as an example, if you think the stock is going to grind higher into those earnings results while still avoiding earnings on this one. Your break even on that one, 273.75. So we're only a couple bucks away from that right now, but a good look at a slightly bullish, grinding higher type of example trade here in McDonald's. All right, taking a quick break here, Joe, but when we come back, we're going to take a look at Block, which is down sharply after a short report was published today out of Hindenburg Research. Fast Markets coming right back after this short break.
SPY keeps edging down, but has these big wick bounces. But it's making its way to VWAP, just fighting. GME just basically flat today. BBBY is coming down a little bit more here. There's your move to VWAP. You even got a little, the VWAP is a little lower. BBBY actually started barcoding. XD holding up. Did come down from where it was. GME's coming down a little bit, down 2.5%. XD still consolidating though, pretty nice above VWAP. Discord is buggy. Discord's been weird. Yeah, Bitcoin's up 5%. Putin has aggressively tried to make China his ally because Russia is running out of ammo in Ukraine. What the heck? There's no way that's okay.
So
I mean, it might be true, but like,
sort of a Twitter-esque,
did he tell you that?
In other words, how many of the
I'm aggressively trying to make China my ally because I'm running out of ammo in Ukraine.
He's probably going to report the best of those user numbers based upon
John Kirby said that.
They actually see, but the manifestation of how many of those users are actually accretive to the bottom line are in question, and that's what Hindenburg really is trying to bring to the table with their short reporter acquisition. But I will say this, you know, outside of this accusation by Hindenburg, you have to look at the objective view of things from the standpoint of the business. If you look at the
they have
sales
hundreds of workers at 5 e-commerce
based on
fulfillment
last
facilities.
quarter's metrics, the company did grow about 14% sales growth, but unfortunately the earnings growth contracted by about 20%. And they actually denoted as a company very large operating expenses, over 53% year over year. So that's been putting pressure on the shares.
SEC has just said those offering crypto asset investment services may not be complying with U.S. laws. They added that crypto firms offering proof of reserves may not provide assurance that entities hold adequate assets.
Multiples. It's trading around 45 times forward earnings, which might still be rich considering the fact that their sales growth is expected to decline and the aspects of their traditional
EU regulators to rethink liquidity after Credit Suisse
subscription-based
unravels.
payment services
European Central
franchise,
Bank
which
is said to likely
effectively is about
increase
32% of their
scrutiny
sales.
of bank
They're facing a
funding.
lot of competition from Shopify, from companies like Stripe, which those two companies actually partner together. And that's creating some headwinds
We'll
as
have
well.
a significant number of more banks that will not exist 12 months to 24 months from
They're all
now that exist
allegations
today.
at this point. The
That's
stock's
Man Group
down
CEO.
significantly. I think that's one of the concerns here for a lot of investors moving forward. But you have to wonder
The
about the
30-year fixed rate
execution
mortgage,
from
6.42%, March
because
23.
a lot of people don't have confidence in Jack
Come down a little bit
Dorsey
from 6.6.
after he left Twitter in kind of ruins at this point also. And he's focused more on crypto, which has done really well, which has helped Square this year, but now getting pounded.
Yeah, I think you have to sort of diversify or separate, if you will,
U.S. Defense Secretary Austin
blockchain itself
says,
or crypto,
"See visit
Bitcoin,
with
for
Putin
example,
sent very troubling
or
signal."
Ethereum versus a lot of the companies that are in transactions for the underlying coins themselves. I'm going to use Coinbase today as an example, Square or Block today as well.
We have a self-induced crisis by irresponsible fiscal and monetary policy over the last decade. Did not forecast the SVB issue, but I did have a few that were heading into a crisis of some kind. And we're seeing it.
We don't know.
That's Leon Cooperman.
The ecosystem of crypto trading that really Block relied on, especially for their Cash App business, has been detrimental to the shares over the last year. So that's going to pose a challenge. But I think also the merchant services business is showing lots of competition and decelerating gross payment volume as well. So that's also a challenge. And if you look at the
that's a lot of books.
The 45 times earnings, and I'm just going to use the sales numbers. Looking at 9% sales growth. If you look at PayPal, it's expecting about 9% sales growth, but it's only trading around 18 times forward earnings. So PayPal looks like a better value on a relative basis to Square. But nonetheless, Square has caught a great bid this last year because it's not as fruitful from an earnings standpoint than companies like PayPal, and it's also got caught up in the Bitcoin push that we've certainly seen earlier this year. But at the end of the day, the fundamentals are going to matter, and I think that's what we're seeing manifest in the price action today.
Right. All right. Great stuff. As always, George, thanks for breaking down this news story here. That's George Tillis, Senior Markets Correspondent. Joe, I'm going to go right into the example trade I got here because I think a lot of people are trading this. Volumes are exploding today, not only on the stock, but on the option side.
57% profit's amazing.
I looked at a strategy because I know a lot of people on pullbacks like this, they want to get into a position. So I set up this
always
example
scale
trade
out, scaling in.
based on that. But it's the don't be a hero type of strategy, Joe, that I'm looking at. So I'm looking at going out to the April monthly cycle, avoiding earnings at this point, and just selling an out-of-the-money put vertical. If you want to take that neutral to bullish stance, selling the 60 strike put, which is just out of the money to the downside, then buying the 155 or the 55 strike put. So $5 wide short, neutral to bullish put vertical. Collecting 140 on this risk profile, but at the same time, it's moved up a little bit higher. You might be able to collect a little bit more. But that takes your break even down to basically 58.60 on this one, Joe. So you're giving yourself that cushion, but you're staying risk defying. Your thoughts?
You're taking advantage of some of that volatility explosion today, right? I mean, that's exactly what this does. And the key to this trade, Tom, is that it's risk defined. If you're flat out wrong and this thing just continues to crater and starts visiting that $50 low that we saw last year, yeah, this thing is going to widen out to its max loss, but that max loss is $5, per or $500, for the trade. So it's something that, if you're willing to kind of dip your toe in, I think it's a way for people to trade this, take advantage of that move if they think that, one of two things. It doesn't have to be a bullish trade. What this can be is, hey, I think the selling is overdone. And I think that's key with this trade. It doesn't necessarily have to mean the stock goes back up to $70 where it was coming into the day, or above $70 where it was coming into the day. But all it needs to do is find a little breathing room at this level. It gives you a break even that's still $4 below where we're currently trading. And even if you get a little bit of a bounce, if you do start to push back up towards those $70 levels, the thought is that some of that implied volatility will come out of the options, which would help this spread because it is short vol.
Yeah, down pretty significantly today. This type of strategy, you just need some consolidation at least and remain above that 60 strike. You've got about, per spread, you've got about $3.60 or $360 per spread. Got some assignment risk on that short 60 put that you are in this particular position, but a good look at a strategy that takes advantage of maybe some
you didn't miss anything.
consolidation, maybe a move higher. You just want it to remain
SPY came back down to VWAP.
level. All right,
GME has been settling. It's down 2.6.
Market. Stick around right here on the
Box D
network,
kind of
though.
broke
Next
out a
Gen
couple
Investing is
times.
coming up next.
So it's done well. Up 94% at this point. GME kind of breaking the support there. It's down 3.2. It's moving down with SPY some. Sorry for your loss. That gas popped up a little bit. BBBY came down some. Bet does have a gap. Little gap down there to fill. Staring to the sun. I hate bright phones. You're too handsome. Party City, our bankrupt company, 22% up. Open Door, still holding up 17%. Granholm says it will take a few years to refill U.S. oil reserve. Spot gold up about 1%. ECB Centeno. Inflation was and still is too high. Yeah, FRC is down 9%. Down now. 7. Canada budget to include 30% investment tax credit for equipment used in critical mineral extraction and processing needed for electric vehicles. Whoa. The backstopping of bank deposits by the Fed, the FDIC, many equity investors are asking if this is another form of quantitative easing and therefore risk on. We argue it's not, instead represents the beginning of the end of the bear market. GME's coming down a little bit more here, 3.5 or 3.25. Most vulnerable U.S. banks lost $1 trillion in deposits in a year. Canada's population grows 2.7% to 39.6 million, the fastest expansion among advanced economies and on par with many African nations. Fastest expansion among advanced economies and on par with many African nations? Where's that? It's all those COVID babies. That's crazy. I didn't realize how thinly populated Canada is. 39.6 million? That's like the population of LA. LA. Not proper, but like Greater LA. Let's say 3 million. Greater LA. Oh, never mind. 2021 it says 9.8 million. What's 30? Is that New York? What the heck? Why so far off? $22 million. Well, that was in 2010, but maybe it's gone down since 2010. 20 million.
Who knows where this will all go? Obviously, it's a long line of headlines, and this is just the latest one, but I'm going to say downvote for Coinbase. This is just one of those situations that the reaction seems to meet the news, and there's just too much unknown left to really have an opinion, I think, one way or another, unless you're super in the know.
Right. I think this is a space right now where you have to accept that you'll be facing additional risk, just with the risk we've seen in the banking space, but also some of the risk overall in the Bitcoin cryptocurrency space. Our next name today, though, getting a nice lift on the back of strong quarterly results. That is KB Home, after they did report results that topped analyst expectations, also providing an upbeat outlook. Their revenue did total about $1.4 billion, which did beat estimates, but was essentially in line with where they were at year-ago levels. Now, their homes delivered decreased about 3% year over year, but the average selling price increased 2% to a whopping $494,000, which to me feels awfully high. That's the average selling price at this point. But they ended the quarter with a backlog of roughly 7,000 units worth of $3.3 billion. This is down from the backlog they saw a year ago at about $5.7 billion. Gross orders also fell almost 30% from last year, but increased 55% sequentially, which management did note in their earnings call, saying that as they've entered into this spring season, they began to see an increase in demand, and they have seen strong net orders already in the early weeks of March, signaling the fact that we will continue to revise up from here. They did also announce a $500 million buyback program, so lots of good news for KB Home, a name that's up 26% this year and seeing relative strength even in this home building space, which has been on quite a tear so far this week.
Yeah, really impressive looking chart. Obviously, no secret that the home builders struggled the early parts of last year as rates were rapidly repriced in terms of expectations, in terms of what the Fed may or may not do. And we've seen just a tremendous lift off of zero in the space of interest rates. That's put a lot of pressure on mortgage rates, and that's put a little bit of a I guess, damper on demand for these home builders. But KB Home's really impressive report. I'm going to say upvote. This is a big move. This is the pace setter of the group here today, up almost 10%.
Yeah, no kidding. I mean, nice move higher and seeing collective strength in these home builders to follow. Now, our next name today is Chewy. Now, Chewy is a name that's all over the place. We are seeing a lower reaction to its fourth quarter results that were released yesterday after the close, but Chewy did guide for a flat to declining adjusted margin in the fiscal year amid continuing declines in their active customers. They did report a surprise holiday profit, but that shrinking active customer count and guidance that disappointed, which overwhelmingly controlled this narrative today, with shares down over 7.5%. Now, their revenue did grow to $2.7 billion from about $2.4 billion a year ago, easily surpassing expectations, but active customers declined to about 20 million from just over around 21 million a year ago, which was much sharper than the street had been anticipating. They said this reflects the continued softness in discretionary spending across the broader economy, as well as the residual impact of attrition from their 2020 and 2021 cohorts. Following this news, we did see Deutsche Bank downgrade shares to hold from buy, also trimming its price target to $35 a share from $41. Evercore ISI did maintain an outperform rating, but lowered its price target to 53. Needham with a buy rating, $55 price target. And so really what I'm seeing is the fact that analysts are still hanging on to some upside with their price targets. The lowest actually was Deutsche Bank at 35, but a lot of these price targets, even the reductions, still imply, I mean, $20, $15 worth of upside.
Yeah, this is a popular name, especially for those who have pets, maybe live in urban areas. We've talked about that countless times, but Jenny, just because a service might be a good one, just because an experience can be strong, circumstances can change. And when you look back to 2020, particularly going into 2021, and just all the things that were going right for this company that just were one-off sort of events, or not necessarily something that could just go on forever. We had unprecedented pet adoption taking place at that time, more people spending time at home, wanting to have a companion there. You had unprecedented kind of movement towards commerce, going to online e-commerce stores, of which Chewy, of course, dominates the pet markets. But a lot of that's normalized now. You don't have that unprecedented demand for pets, and there's only so many you can have. At least I can say for me, one is enough. And when it comes to just the amount of things you're buying for those pets, it ends up being relatively stable. You get the toys and discretionary spend from time to time, but for the most part, you're buying things like food that you buy pretty regularly. So it can be both a viable company potentially down the line and a successful company down the line, but that growth that was really leading to the tremendous upside performance in the stock just was not something that was sustainable. And just like so many of these post-COVID winners, it has come back down to earth after just a tremendous run. And it's just about valuing this company for what it is and figuring out where it's going to go from here.
I completely agree. And they have a major stocking issue because, as a consumer that does have to buy various pet items, whether I want to or not, Chewy is always out of stock of everything. So then I go to competitors like an Amazon, or you can now go back, obviously, to physical stores. So that to me has always been a concern if you can't keep the products shelved. I mean,
which along that line, Jenny, is the fine line between having too much inventory and having literally no inventory that you aren't making any sales. So we hear about all these retailers who have had too much stuff, and they have to discount. That's not good. But if you don't have anything, well, it's like now you're doing nothing. Now you're not selling anything.
Right, then you lose a loyal customer. So that's a concern, obviously. But unfortunately, we are still buying for our pets, and it's getting awfully expensive. Our last name today, there was another name that's been hit by some inflation, but perhaps we as the consumers are also paying for it. That's General Mills, getting a 3.5% lift on the back of its quarterly update, as they did say their revenue rose about 13% as consumers continued to buy their products despite these higher prices. They said the sales gain was primarily driven by these increased prices, which General Mills, as well as several other food companies, have been pushing to then offset their higher costs. They said the amount of food sold globally was flat, which they saw decline specifically in their North American market. But for the full year, they are now forecasting organic sales to rise between 10 and 11%, slightly higher than the outlook they previously gave, with earnings also expected to rise about 8 to 9% on an adjusted basis, also a slight beat. So the CEO mentioned that they've been able to handle some of the supply chain headwinds quite well. They are seeing this shift where consumers no longer want to go to restaurants as much, and they want to be then going to the grocery store. But Alex, I'm having deja vu because we did talk about this pre-market this morning when you were on futures, and Darden restaurants would tell you otherwise, their results. So I do think there's a bit of a mixed picture. Consumers are trying to save money, but are they necessarily, only going to the grocery store? No, of course not.
Yeah, and I think this is one of those situations where, both these things can be true. We can be going to restaurants less, but the times when we go to restaurants, maybe we're going to places like Olive Garden, depending on the market that you're in. And the store buying, the stuff that you're buying in the store can be General Mills products. Like, both these companies can be winners at the same time. I think both reports were pretty impressive. General Mills, for the most part throughout the day, had, with the market, only been strengthening, but it does look like over the last half an hour or so, it's given back just ever so slightly some of those gains. Could just be sort of the intraday profit taking, so we'll see what happens. I'm going to say downvote for this one. I think the Chewy story is a little bit more intriguing to me, and I'm interested to see what Rick has to say, both on the chart for Chewy as well as KB Homes, because KB Homes is just on a tear here today.
Yeah, and two very different charts, so we'll dive more into the technicals on KB Home as well as Chewy, like you just said, coming up next. We will also be looking at some example trades. Stick around. Next Gen Investing. We'll be right back. You're looking for some upside from here. You're looking to continue to, believe in the home building space, and you believe that we'll continue to see trends improve. Taking on an optimistic approach, what are you thinking for the example trade?
Yeah, and you throw in the anticipation of potentially leveling off of rates or maybe even lower rates into the future. That can, in theory, only benefit the home building space, as those mortgage rates are obviously a huge hurdle as well for new home buyers. But one thing that I think, and this ties into some of the levels that Rick pointed out, one being that 41 level. It's hard to ignore that. Obviously, it was sort of the spike high that didn't hold, and we're making that second test at that level. And so I wanted to structure a trade that would benefit if there was a breakout above it, but also if it did stall out and kind of run into some resistance at that point, as long as it held onto the gains, this one could still at least break even or even make a small profit. So we're looking at buying a call vertical. One strike in the money, one strike is out of the money here on this, and looking at the April 38.43. And the other very, I think, interesting piece in how this ties together with what Rick was pointing out is that third channel standard deviation being up at 43. Well, that's where this one peaks out. So in the event that you get that breakout and potentially hit that upside resistance target or price level target, that's where this one peaks out. So it's not asking for the stock to do something absolutely tremendous. It's somewhat, within a line of reason here, and it gives us a little bit of time duration, a little bit over 4 weeks till that expiration. And looking at a 250 debit, that would mean $250 in risk to make $250 in max profit. Break even is at 40.50. That's about 50 cents higher than where we're currently at, so somewhat in line with the current share price and that 1-to-1 risk-reward ratio we talk about all the time with these type of trades. None of that accounts for transaction fees, of course, but I want to highlight, where is the risk? So you talked about that price target average sort of being around 39, slightly lower. Obviously, it's making a big move here today. In the event that this stock does turn south again and works its way lower, well, this one is capped out in terms of its downside below 38. So if the stock falls below 38 and stays there, that's the max loss potential, which we know going in, which is the debit spent. It's $250.
Yeah, now Chewy is, I would imagine, a less clear trend, at least in terms of the price targets on this name. They're all over the place. I mean, even the analysts that lower their price targets, 53 all the way to 55, I'm seeing on the back of those quarterly results. So, Rick, walk us through the technicals. Chewy's volatile. Chewy's now lower on the year, but we've since recovered our intra-sessional lows. Actually, we're back up around $1 from where we were just an hour ago.
Yeah, this has been an interesting one here because we had this long, kind of gradually sloping uptrend that took us upward for most of the year here. We bottomed out here several times here, and then things started to get messy more recently. You can see we had several excursions to the downside below that trend line. Ever since we hit these yearly highs near the 53 mark, we've been trending downward. We're down about 34% from that point. We took out all three of our major moving averages that we follow, our yellow 21-day, orange 63-day, purple 250 2-day moving averages. We also fell below our volume profile point of control, this thick red line right here, near roughly the 40 mark or so. Now we find ourselves below this long-term trend line, and we've got this new shorter-term trend line established here, trending lower. So the 34 level was interesting to me as well. It stood out because that was where price bottomed out here back in December. That was our lows, so we stopped pretty much on the nose at that point. So that's a key support level to be looking at for this stock. Consider as well that our three moving averages are all trending downward here. That's not a good sign. They're diverging further apart from each other, suggesting that this downtrend could be strengthening now, especially after we had this earnings event that seems to be kind of the straw that broke the camel's back in terms of the uptrend that we were seeing. RSI, not doing too terrible in terms of it didn't cross into the oversold area. At least that would be another shoe to drop if it did. We're hanging on above that 30 threshold there on the RSI, so look for a move below the 34 level on price and a move into the oversold level at the same time. That would be some greater confirmation that we're in for further downside here. If that were to happen, around here, these lows around the 32 level, that would be a point to be watching going forward. To the upside, look here. We've got the confluence of our two trend lines pretty close to our yellow 21-day EMA. That would be around the 39 level. So look for some potential resistance there between 34 and 39.
34 key level here, Rick, and puts us pretty much in line with actually what Deutsche Bank lowered their price target to at around $35 a share. And some of these price targets feel so far away, they're almost outlandish, but they are right around, I guess, their 52-week highs. So just goes to show the volatile nature we've seen in Chewy, with shares now down still over, 50 or 34% from its yearly high.
Sorry, guys.
Appreciate all of your
Tied
technical
up with
insight,
these
as always.
phone
Rick,
calls.
we've had our chart master. And
Pretty big
Alex,
flush there on SPY,
trading
though,
this
huh?
name, I think we have to
Made it
consider the
through
fact
the
that
WAP.
we've seen this volatile event. Earnings are behind us, but this name moves. And so say
Box
perhaps
D
you were
holding up
looking to get into
strong.
this name, but taking on a more neutral stance, which we always say is still a conviction. It's just, perhaps looking to capitalize on shares staying more where
We
they
did come
currently
down.
are.
It's close to retesting at 2250, but bounced a bit with SPY there.
Conclusion from looking at the Deutsche Bank analyst downgrade to hold, $35 price target. Stock's currently exactly at 35. So it made this conversation very easy for this particular trade illustration. I thought it was kind of a fun
chart
way
is
to,
just
to
crazy
show
big
this
candles
one,
and gaps
from
and
a,
chop.
from a learning standpoint. So going ahead
Ugh.
and say you buy into that, the logic behind it was that the user growth, while it might turn positive this year, is going to be
Oh, talking about
tepid
Chewy again.
at best, I believe is the words they use. But for whatever reason, you think this 35 level could be sticky, and that Chewy will hang around this level over the next, let's say, 4 weeks or so. I looked at selling an iron butterfly, which really consists of selling a straddle and then buying wings to define the risk. If you went ahead and did that at the 35 level, then bought $5 wide wings, well, this is a strategy that really, really benefits from the stock basically not doing anything. And so, as you said, neutral can be a strategy, and you can benefit from simply a stock just doing nothing. And so with this one, because it's done for a credit, and you'll see that it's pretty hefty
flush.
credit, 325. It's a reflection of the volatility in this name. As you pointed out, it does have that capacity to move quite substantially. You go ahead and you add and subtract that from the 35 straddle, which is the crux of this trade, that middle portion where those short strikes are. You get down to 31.75, and you go as high as 38.25. Risk on this trade would be a move outside of our wings, those $5 wide wings, and that would be $175 in risk. But when you're looking at this, though, it basically forms a symmetrical looking triangle there, where the more accurately we're able to project where this one ends up, or the more likely it is to stay around 35 in this case. The best case scenario is that you would just keep that entire credit. Not the most likely of events, but the closer you're going to get to getting the most of that credit as you can. As you get further and further away, there is those theoretical break-evens, but you can make less and less. So it is very linear in terms of how it performs at expiration, and this is one that really benefits from a lack of movement and time passing, all else equal. But with this, it's got the benefits of the straddle, looking to take advantage of maybe heightened implied volatility and limited movement, but it's risk defined. So in the event that there is a massive move, we're not going to be exposed one way or another beyond the price of this particular trade. So 325 credit, subtract that from $5, you're left with 175. That's the risk. It's defined, you know it, and if these options are in the money and they go through assignment and exercise, that's all that can be lost.
I think that's really well put, and also, of course, important to keep in mind for both of our example trades, they do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk, like unanticipated exercise or assignment. Now, coming up next, it's time to talk a next-gen favorite that has been Meta platforms all week long. We'll look at its move higher in reaction to the TikTok CEO testifying. We'll dive more into that news coming up next.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. In the Options for Volatility course, we explore what implied volatility is and how it can potentially affect the price of an option. For example, let's say an option trader wants to take a bearish position on a stock. but isn't sure whether to buy a put or sell a call. Both strategies are bearish, but looking beyond direction to consider the impact of implied volatility could help the trader choose between them. We also introduced strategies designed to harness changes in implied volatility. For instance, time spreads like counters and diagonals are designed to benefit from increases in implied volatility. Iron condors, on the other hand, are designed to benefit from falling implied volatility. After learning about the strategies, you can take the final assessment to test your knowledge. Head to the Education tab on Thinkorswim for the full options for volatility course and a whole lot more.
Opportunities can be hard to find, like catching lightning in a bottle. In uncertain times, it's tempting to retreat or simply wait and see. At CME Group, we empower those who act. We deliver tools to help manage risk and capture opportunities in every market climate, across every major asset class, to seize each possibility at precisely the right moment. CME Group, opportunity is everywhere.
If you have questions about retirement planning, then you don't want to miss Investor Education Day hosted by TD Ameritrade. It's a full day of free insights from TD Ameritrade education coaches and experts who can tell you all about honing your retirement strategies. And the best part, it's all online. So technically, you can enjoy the webcast from the comfort of your retirement pants, also known as sweatpants. Register for Investor Education Day at tdameritrade.com/education day.
Time for developing stories. TD Markets correspondent for the TD Ameritrade Network, Kevin Green, is here. And Kev, this is kind of one of the stories of the day, I would say. Obviously, one of the movers of the day. We're looking at Block, formerly known as Square. Stock ticker is still SQ. If you watch volatile names, particularly ones with big market caps, this one's popped up on your radar today. It's down almost 15%. Let's just call it 15% to make it easy. 14.97, that's close enough. There's some news behind this one. What is it?
Yes, definitely. So the famous short-selling group Hindenburg actually released a report today that's impacting the stock block, and then also probably impacting some trap houses across the globe here at this point in time. Based on their research, they are saying that Square or Block is inflating their current user count, and they're also potentially allowing criminal activity on their platform due to their lack of compliance measures, and that could actually lead to identity fraud, unemployment, and pandemic fraud, and even sex trafficking. They actually cited several different items where criminal activity is potentially occurring on this platform here. Even with utilizing hip-hop songs, they actually provided a video compilation of like 15 songs that reference Cash App and illegal activities here. They even tried opening up their own accounts and then naming these accounts Donald Trump and Elon Musk, and they were easily able to send and receive money, just showing that Block is not allowing or does not have good compliance measures, if you will. They also say that Afterpay product offering that they did acquire a couple of years ago here is also not providing their consumers the best available means for financing. They do believe that the company is charging exorbitant type of fees, late fees in particular, that could amount up to 289% APR on those lending structures here. So overall, this is not a great report. Once again, though, we just have to just keep in mind, Alex, this is a report that came out from another firm that does like to short sell stocks. So we can't confirm or deny any type of this activity that they are citing, but it's very interesting how they completed this research over 2 years by talking to former employees, former executives, as well as doing a little digging themselves by looking into rap songs, which I found pretty amusing, actually.
Yeah, there's definitely some headline grabbing kind of things that were done, utilizing a Donald Trump or Elon Musk to kind of illustrate a point is clearly done by design. But obviously there's some pretty serious allegations here. Some of this anti-money laundering or lack thereof standards that are basically being said that they aren't there. I mean, this is pretty serious. This is stuff that can get a company in pretty big trouble with regulators. So I'm not going to touch those allegations. They are what they are. The one thing, though, that I think is, it's not just limited to Block, and this is really an internet company issue in general. I would argue it's an epidemic, and to the degree of what it is remains to be seen, and who knows if we'll ever know. But there's fake accounts on all of these things. Log on Instagram and click on a popular post, and you're going to see like 1 million comments from, I'm just going to go out there and say it, not real accounts. I mean, these are bot accounts posting random crypto scams or something. So this isn't limited to Block. This isn't limited to Square. This isn't limited to PayPal or any of these companies. They all have the epidemic of inflated user counts and bot accounts. It's just, how big is that? And this is one of the things when Elon Musk was taking over Twitter. This was the big spotlight that I think many of us were hoping we might get an idea of. We haven't heard anything since, so I'm not sure where that all stands. But there's potentially more dominoes to fall in some of this down the line if we get bigger idea of what these numbers look like. Any final thoughts on this particular story, though? Because I see names like RBC Capital weighing in, saying that just sentiment alone from this type of story can have lasting impact. And so bear that in mind when you're looking at stocks that are falling 15%.
Yeah, definitely. But once again, you kind of hit the nail on the head here. We also want to be able to see and make sure that, if these allegations are true, I'm sure they should have forwarded these over to the authorities for them to look into. I'm sure that they are aware of the things that go on Cash App and even some of the other platforms like you're talking about right now. So I would say, if you're a viewer, do not open up accounts
if Jimmy breaks this support here,
Donald Trump's name to try to test these systems. That is also another risky area here, Alex, that I found very interesting that they kept in this report.
Pretty weak
that
here.
Could also be
still up 0.8
an
though.
issue for Hindenburg at this point in time.
Big
here.
range.
You're talking about Twitter. I actually tweeted this
US
story
still green.
earlier today, and I got a retweet. And guess
I
what?
think
The retweet
Jimmy's
was a
still
bot,
good.
That was trying to advertise for Cash App and make $200.
50% up.
The problem on
4%
Twitter
down,
is
not
still
bad.
there. He hasn't gotten it fixed at this point.
Yeah, and the question is then down the line, I don't want to get too far
Holds,
off track,
Jimmy?
but we are going to talk Meta in just a second here, so I think it does tie in. Look, if I'm selling ads,
I have some
and that's my business,
Jimmy options.
Be it on Twitter or Instagram or Meta.
Sorry, Ryan, I
tell
was on the phone.
the potential company
8K this morning, that was the 8K.
Well, I need to
The
know,
last
are those
paragraph in
accounts
that
real potential
was not
customers, or are they
referring
just
to a new
bots that just
8K.
watch these videos?
I don't think.
And that
It was either
matters.
talking
And I think,
about
ultimately down the line, I don't know
some
where this will end up,
one of
but
the
if
warrant
it's 5%,
holders
if it's
can now
0.01%, those are significant numbers when you're
publicly
talking about,
disclose what
potentially
was
billions of users
private
on
before,
something like Facebook. But Kev, appreciate
or
as
it
always.
was
We'll see what happens with,
just talking about that
Block
specific
going
warrant
forward.
being
Big move
released
lower
before
here today.
9:30. Or sorry, that
15%
specific
is
filing.
nothing to sneeze at. Let's bring back in Jenny. Let's talk some Meta.
Kind of confusing.
This is
but
a stock
I think
going
that's
the
what
other
is
direction though today. So no worries about users or how many are real or not. At least in terms of today's session, because
Close
one of your
below
big
23.
competitors in the case of
I don't know.
TikTok just might not be a competitor anymore.
I think that we have to cool it on that sentiment.
Close high tomorrow.
Totally
yeah, you could
why we
see
were seeing shares
some
rally.
price
I mean,
action.
We're also seeing a nice lift today in Snap. But I think that there's
the
an
options chain
overblown
wasn't super
expectation
loaded.
that TikTok could go away. But after
But,
listening actually to the CEO,
could still be some action next week from
today,
it.
I would say that's not necessarily going to be the case 100%. But here to tell us now more on this story, I'd like to welcome in Caroline Wood, senior markets correspondent for the network. So Caroline, I'm curious your thoughts. Curious if you're a TikTok user, because I tried to tune in and I'm thinking that perhaps things are a little bit overblown when looking at this reaction in Snap and Meta today.
It's interesting, Jenny. From
She says she's a TikTok
myself
user?
tuning in, there is bipartisan agreement that they don't like TikTok, and they certainly didn't even really want to give the CEO Shou Chew a moment to speak when he did speak. So a little bit up in the air. It's interesting. You talk about Meta. Shares are up 3% today. Dan Ives over at Wedbush was out with a note just a bit ago saying from Meta and Zuckerberg, as well as Snapchat and Google, today's hearing was like eating popcorn, watching a good movie.
He even
as the
told made a
social media
movie.
disruption from
Made a move.
TikTok will clearly benefit Meta and Snap
Said eating
front
popcorn,
and center
watching a
in
movie.
the eyes of the street. So just to kind of lay it all out there, TikTok CEO is testifying before Congress.
Not
He's
bad.
trying to prevent that potential ban of TikTok in the
Got
U.S.
that bullish
And this
MACD,
should
green
just
over
give
the
you an
9.
idea of how it's going.
Oh, this
It kicked
rounding bottom.
off with the chair from Washington State, saying the American people need the truth
Don's
about
trigger on
threat
this is what,
TikTok
like
poses to our
4
national
million
and
volume
personal
or something?
security. We do not trust TikTok.
Maybe just the
will
TA
ever
though,
erase
not even looking
American
for volume.
values. Your platform should be banned.
Volume, of course, is nice.
Chu
but
faced similar criticisms from both sides of the aisle, focusing on data security,
invested
especially as it
in
relates to
about
China,
insurance in the
obviously
walls.
owned by ByteDance, which is a Chinese company. Also misinformation,
How they can
protecting
inform them.
children online. Chu argues that these are industry-wide problems that are really falling on TikTok, but really at the heart of it is the fact that it is owned by a Chinese company. There are 150 million American users, monthly active users, and the concern is that China has access to their data. Chu denied that it shares U.S. data with with the Chinese Communist Party, but he did say at this point ByteDance employees in China still may have access to U.S. user data. So I think that's causing some concern. He says that won't be the case once Project Texas, which is its risk mitigation plan,
Haven't missed a
is
whole lot.
complete. That's a $1.5 billion plan.
Spy's
that
gone
really
up,
is
Spy's come
meant
down.
to migrate the data here to the U.S.
Other stocks have done the same.
with the help of Oracle.
Like BY's trying to fill this gap a little bit.
Operating that cloud infrastructure.
Up almost
but
1%
a lot
still,
of
but
skepticism about that.
GME's come down a little bit.
Facing
Down 3.5.
the company are industry-wide, but a lot of times he didn't even really get a
Some
chance
support
to
here,
speak.
but so
And
is the
when
Spy.
he did, he said there's, let me get back to you on that. I have
Or
to
the
get
Power
back to you on
Rangers
that.
series?
So there's still a lot of uncertainty there.
That
Dan
might be
Ives called
epic.
it a disaster testimony day. It says the stage is set for a ban or a sale, Jenny. He says he sees a 3 to 6 month period ahead for ByteDance and TikTok to work out a sale for a U.S. tech player. He says a spinoff is less likely because it would be extremely
whole one
complex.
green. Sell
He
it.
said if ByteDance fights against this forced sale,
Oh,
TikTok
you're
will likely be
bank
banned in
puts.
the U.S. by late
Yeah, I noticed FRC was coming down.
Definitely seeing it benefit other social media stocks today. As we said, Meta up about 3%. Google, which is the parent company, or Alphabet, the parent company of YouTube, up 2.5%. Snap is up 3.5%. So there definitely could be broader implications for these companies as well, because it would mean regulation. It would mean, the government cracking down on
Schwab, yeah.
data
We were
sharing,
talking about that
data
yesterday.
selling, but also influencing what people can and cannot see. So
Yep.
there
So
could
it's about to
be
break through that floor.
wider implications for these tech companies as well. But
That's why what's
right
pulling
now
the
they're
SPY
just
down
focused
on
on
these
the fact
banks.
that this doesn't look too good for TikTok here in the U.S.
Okay, and Caroline, that's really good
Microsoft's
context.
still up.
I think I was looking at this with maybe too much of rose-colored glasses, and I was feeling
Apple's
sort of sorry
still up
for him
pretty
because he
good.
couldn't get a word in. He seemed awfully nervous.
I never
so
saw the World of
I was
Warcraft
perhaps
movie.
too optimistic on this whole testimony, and I think that's really, really important information, especially from Dan Ives, as I do think he makes really good points in this tech space. But we will leave it there. Appreciate all of your insight, as always, Caroline Wood, Senior Markets Correspondent. And Alex, when trading this name, so aside from this TikTok news, which
Bear
is
flag?
benefiting, now we see
Yes.
Meta shares.
Mm.
Meta is on a tear. It's up over 70% year to date. So walk us through what you're thinking for an example trade.
Look, yeah, this is all really politically charged, and let's just go down the line of saying it has to be forced sold or even potentially banned. It's unclear to me how that benefits a company like Snap that has its own struggles, and it's been not just because of TikTok. But let's even say it has to be sold. There's only a few companies that have enough money to potentially that are even big
kind of
enough to
enticing
potentially buy it, of
with
which
this
Meta
chart.
might be one. But also Meta might be one of the companies that would benefit from an outright ban more clearly as those user bases could shift over. But nonetheless, let's just say you're optimistic on Meta because Meta's been on this year of efficiency, and you just want to see this continue as they pivot away from their new name and maybe back to more of their old name in Facebook. But
SPY
looking
bouncing
at
up
my
here.
call calendar,
Your
looks
op's
like
pretty
the
low still,
more
though.
recent highs of a move from yesteryear was around 225. So I wanted to look for a strategy that would target around that move. Selected the 225 strike, April-May calendar spread here. Quite expensive though, $6 debit on this one, which would mean $600 in risk, Jenny. But with this, because it's a good, let's call it 10% higher than where we're currently at, it's going to need that move. This gives it a little bit of time for that move to happen. But of course, like we said, it's sort of getting to that area. It doesn't have to perfectly pin 225. But it does got to work its way there. If it moves lower, if it overshoots it tremendously, there's risk in both directions.
Yeah, and Meta shares now, I mean, having a really nice week and a really nice month, so continuing to see this momentum, as I think we've discussed Meta on the show every single day at this point. But that does it for our FOMO segment. Now, coming up next, we will do a complete 180. I sat down with Carrie Schwab Pomerantz to discuss tax preparation, a topic that is, I'm sure, on so many Americans' minds. We'll dive more into that coming up next.
And that's certainly good for not necessarily consumers, but it's good for businesses like Bellring's brands that can actually pass on prices to those consumers. So overall, the aspects of the business seem pretty strong. They're expecting double-digit sales growth as well as double-digit EBITDA growth on a forward basis. And the company's actually been buying back shares. Out of the $4 billion in market cap, they actually bought back $50 million worth of shares, forgive me, back in December when they reported their late Q4 earnings. So the company is well positioned to grow its brands. I think the aspects of its financials look very compelling, and they're able to pass on prices. And I think that's been very accretive to not just this particular food company, but also all the other food companies, which we've seen up about 30 to 40% this last year.
George, the story of this company to me is one thing. It's not the products, it's not the brands that they sell, but in fact, it's where they're at. They're in every grocery store. They're in every convenience store. So it's just simply that. It's convenience. If you're not, hyper into this particular space and it's just something that you do because maybe you read about it or you want a quick snack or a meal replacement, you just go to Target, you go to Walmart, you just pick it up there. You don't think too much about it. This is such a saturated space with countless brands, but I don't see most of them. Heck, I hardly see any of them anywhere but particular nutrition stores. Yet this one's in Walmart, this one's in Target, and that's what makes it. That's what makes it a $4 billion company. To be quite frank with you, George.
You're exactly right. I mean, that's the thing. It really comes down to two things: nutrition and convenience. That's effectively what BellRing Brands brings to the marketplace, and so that's value for the consumer. And then, of course, the selling points and places they sell. It's just everywhere. Convenience stores, gas stations,
consolidating down here at the lows.
Their products, and that's essentially very powerful in
Thanks,
terms of
J-Pal.
distribution. And people recognize
It's also 19.
the brand. The
It's not a bad idea.
Shakes, for instance, are their premier.
Thought about that too. Now the
brand,
IB is a
and
little
people do
higher.
Recognize them. They trust them.
Seems like a pretty safe stock to sell premium on, honestly.
Easy to go kind of substitute for meals. And
But
that's
yeah, I'm
something
gonna
that people
wait a bit
always
for it
go
to. If it
And,
comes down, I
overall,
guess.
their market share has been
Pretty-
growing steadily. It's not a
Pretty levered up
hyper-growth
into
company.
BBBY, anyways.
It's really a growth at a reasonable price-based business.
Gas.
Compelling from the standpoint of earnings per share on a forward basis.
If we just get like a
Forward
Arctic
multiples of
blast.
25 times earnings, which is about 1.5
Nice
times
spring
its EBITDA
Arctic
growth on a
blast.
forward basis. Price to sales is less than 2 times earnings, and its price to free cash flow is around 10 times. So it's a really stable financial business from a financial standpoint, but also you have to think about pricing power and inflation, but also the elements of value and nutrition and convenience all combined.
Yeah, and George, I
Blackberry.
do think for that reason exactly, we do see this name have a degree of
They have
pricing
earnings
power.
coming
As
up?
I know so many people that will pay a high premium for different protein supplements and some of these
Oh,
different
weird.
power bars because
People doesn't
it's
usually put
easy,
earnings.
It's healthy, and the prices are ridiculous as they already
Oh, it's
are in the
estimated,
grocery
but
stores,
still, they
and
don't usually
people-
put earnings in
people will pay
the
them, but we'll leave
future.
it there. Appreciate all of your insight as always.
Supply
George
is
Charles,
looking
senior
weak,
markets
yes.
correspondent for the network. That also does it for Alex and myself for Next Gen Investing.
We're kind of in an uptrend,
Coming
though.
up
I
next,
mean,
we have the
a
watch
longer
list
time
with
frame.
Nicole Petalides.
Market seems a little undecided on how to decipher what Powell said and wrote because they seemed a little conflicting. Blackberry leaps. Like leap puts? No, I'm just kidding. Yeah, I don't know if I'd be bullish on this thing. I don't know anything about BlackBerry having a future. Palion and banks, all conflicting. Yeah, I'm assuming you meant calls. IV's pretty low, that's nice at least. Like SPY might make a new low here. $393.70. Yeah, a little gap fill. Seems maybe the case, yeah. It almost looks like little head and shoulders here on the hourly too. Bounced pretty hard on that 50. See if maybe it does that again. Seeing a bigger inverted head and shoulders setting up here. Head, shoulder, shoulder. What else? Volume in the last couple weeks. This pump is too strong. BBBY looks like it wants to go red. No. Oh man. It would be good if it held yesterday's low. I don't know though.
It's at 39.65. It's up 28 points. Had been around 4,000, right? The Dow 32,187. It's up 160, up a half of 1%. The Nasdaq 12,772, up 1.6%, and the Russell's a little bit lower now at 1725. For some of the biggest stories in the markets, we welcome in Kevin Green, senior markets correspondent here on the TD Ameritrade Network, taking a look at a couple of big ones. The first is Block. Some reports that are really worrisome. You know, I don't know how much truth there is or is not to it, but the stock is certainly telling the story for today.
Yeah, definitely. We are seeing the stock down about 14%. And this is after the famous short-selling firm Hindenburg Research released a report today that is alleging several different items against Block at this point in time. First and foremost, they are alleging that the company is inflating their user count by fraudulent accounts.
I don't think it'll move up
accounts, that could
necessarily
to investors. They are also
without news. However, I think it is still stuck in this
activity
cycle.
By having
So I think this pattern will repeat.
Compliance group within the
It's been
organization,
repeating,
and they are saying that
which I don't know if
some
that's
of this
June
activity
or
include identity fraud,
19 bars from
unemployment
there
and
to there.
pandemic fraud, as well as even sex trafficking, which is pretty significant to say the least here, Nicole. And what's actually very interesting, the report did a pretty deep dive, significant deep dive into
19
the
bars
company,
puts
but
it
they
out.
also kind of cited not only some
June.
former
June
executives,
for a rally.
but also rap songs and things of that nature as to some of these claims. The research firm also
I feel like we'll probably get news before then, though, with how fast stuff's moving with it.
Trump and Elon Musk for their account names.
And now that filing this morning, if it is releasing basically the restrictions that the party had on disclosing information to the public,
and they actually received it.
we could be hearing from
so just trying to
one of the holders. I would think anytime.
The firm may have here. They're also alleging that Afterpay is really involved with some predatory lending, that the fees that they have associated with this particular offering could be as high as 289% on the APR. So very interesting report. Now, Block did respond in the last 30 minutes. They do say that they're intending to work with the SEC as well as exploring legal options to go against Hindenburg Research, and they do believe that the report was fraudulent fraudulent and inaccurate. And they're also saying that they are confident in their products, reporting compliance programs
BBBY
and the controls
testing.
that they have in place. So
Flirting with
a
that
lot of activity
7999
on
level.
this name today, and we're going to continue to probably see some news trickle in over the next coming days and maybe even months as to the remedies to this report that was released.
Yeah, and I'd like to hear from the company a little bit about some of these things too. I mean, I'm sure the company has plenty to say about this because there's a lot of allegations being thrown around, and you know the stock is really reflecting that, and the shareholders not happy with that.
Move like Revlon.
How about Coinbase? Now, this is one that has run up this year, at least year to date, well off the highs.
I think this this has more retail sentiment and probably had get more momentum than that.
Yeah, definitely.
I don't know what the options were like on Revlon, but options traffic volume on this thing is crazy.
Crypto assets that are out there, but you are right. We are seeing a disconnect today. There was a report that they actually acknowledge that they received a well notice from the SEC, and they do believe that it is in relation to some of the listed digital assets that they have, as well as their staking service, Coinbase Earn, Coinbase Prime, and Coinbase Wallet. And they do believe that there may be some potential
back at the
civil
lows
action that may be
from
taken here,
February,
which could
a month ago.
include potentially stopping
Why didn't I take
particular
profits?
product offerings, maybe even paying any type of
Hopefully it
civil
bounces here.
penalties. And they are, they also made a statement that they are prepared for a disappointing outcome when it comes to the potential charges that are going to be levered against them. That's really what a wellness notice is. They're pretty much letting Coinbase be able to respond to the SEC before formally filing these charges here. But they are asking the SEC for more legal guidance as to these product offerings, because it has been very murky here when it comes to staking and some of the other products that have been offered by not only Coinbase, but some of the other crypto exchanges. And we have seen earlier this year several exchanges getting civil fines because of some of the products that they offer. They consider them to be securities and things of that nature. So an interesting development. Once again, we are seeing the stock down about 13%.
Down 4%.
Let's see
Holding
if
on
that
so
move
far.
is going to continue. And what's actually very interesting, Nicole, is the impact has not actually gone or flown into Bitcoin or some of the crypto assets. They're still up for the day.
Yeah, and just the language of when someone hears Wells notice, they, that already has the negativity sort of put with it. Kevin Green, good to see you. Thank you so much. Appreciate it. Now let's take a look at the bigger picture. Timothy Chubb's with us, CIO, Gerard Division of Univest Wealth. Thank you for being here. Your thoughts on the market? We've had this back and forth action. What we're seeing right now is while sectors are higher, we're losing the rally of the
23,
day.
yeah, maybe it'll push up to go up.
Yeah, well, I thought yesterday
hour
overall
to hour,
the report in aggregate was fairly dovish, which is why the markets are up today. Ultimately, the Fed acknowledged that the bank turmoil is
a little
likely
flushy
to
here.
depress
GME just broke that low.
and some of the forward guidance was also softened in the
New
statement.
low.
But Powell's comments that sent the markets lower
22.53
yesterday
is the low
about not
from
seeing
today.
cuts later this year, as well as Janet Yellen's comments during the press conference. Obviously had markets concern really related to not seeing that broad increase in insurance. The deposit insurance. So, overall, equities are really hard to, I think, be really excited about here from a valuation standpoint, given the economic backdrop. And I think, the tightening that will likely continue to, unfold in the U.S. economy now, not from necessarily, monetary policy tightening even further, but from the banking system.
Wicked back up, but
Understood.
I think it wants
so at
a
this point now, the banking
test down
system
here.
is front and center. And, we see the regionals are down again today. You have the concern whether or not, the concern is that taxpayers are going to be on the hook to save everybody's bank accounts. At the same time, you really want the backstop of the government. You shouldn't have to worry about if you
Yeah,
have
50
a
moving
deposit
average on
in a
it
bank,
is
right?
20 right now,
We're
basically
sort of,
1990.
like in a tough place.
Yeah, well, this is everything that's been communicated thus far is not necessarily going to be impactful to the American taxpayer. It's going to be handled through FDIC insurance. But the concern by not backstopping the uninsured deposits as they did for some of the banks that are insolvent is that you have this concern that ultimately moving money around to get under that $250,000 limit and a lot of challenges from a deposit standpoint, especially in a digital age where it's so easy to move money back and forth.
Buys filling this gap a little bit more. 390, 381 is the bottom of it.
So what's the takeaway here for investors at this point? What do you advise for 2023?
Well, I think we're really getting into sort of the beginning of the end of the economic downturn, and we'll likely see in the next couple of months the unemployment rate begin to tick up. I think we'll likely see in jobless claims some although the number was really good this morning, that start to pick up as a result of some of these severance packages unwinding. If again, unless you're in the state of California, you're not able to collect unemployment insurance and have continual severance package be paid out. And so I think we're going to start to see the weakness in the labor market. I think the U.S. consumer is going to start to wobble a little bit here, and overall it's going to make the job, I think, a bit easier for the Fed as far as what the path forward for rates is, and also make it easier for them to get a better handle on what's going on in the inflation picture. But
supports and resistance is going to get thrown out
this year. Before today, it was about 3%.
But yeah, 119 is pretty far down there.
Apple, Meta, Amazon, Google, and Microsoft,
118,
those 5 companies are up 19%.
Pretty solid support.
The S&P's flat. The other 495 companies, and so I think going down market cap and moving beyond some of the big cap tech names, although we're very much attracted to them and in many cases still recommend them to clients, I think there's a lot more value, especially as you go down in the mid and small cap range within the equity market. Just given that valuation is largely priced in a hard landing as opposed to large caps, which are priced in a soft landing thus far.
Right. Okay. So, and that's the difference there. At the same time, there was a lot of criticism on the Fed. They were late to start raising. Now they're raising too much too fast. And, raise until something breaks. And that was something that you noted in your notes at this point now, saying also further interest rate increases could be counterproductive. Explain that, and because we are likely going to have what
BBBY.
says. One more 25 basis point hike.
0.80.
I mean, whether we see another 25 basis points or we see a pause, moving forward, I don't really think it's any more than just really a nominal difference. But we're really seeing the impact of these long and variable lags of tighter monetary policy. And remember, last year the tightening cycle that we saw was the fastest we've ever seen, and so now we're finally starting to experience some of those negative impacts in the U.S. economy. Make their way through the U.S. consumer, obviously the banking system, and like you said, it's hike until something breaks. Well, we've had a few things break as a result of the woes with regional banks, Credit Suisse, and otherwise.
BBBY now flat on the day.
I think moving forward, the banking system is likely going to be tightening their belt a little bit as far as extending credit, and that in and of itself will be deflationary as well as a headwind for the U.S. economy, and I think make the Fed's job a bit easier as far as the path forward is raising rates and continuing quantitative tightening.
And as the S&P and NASDAQ are basically looking to clock in some back-to-back weekly gains, you mentioned that large caps are pretty much pricing in a soft landing. Does that mean, and I think about some of the names that you mentioned, like those FANG stocks, and would you tell people on dips to be buying the market in that way?
I don't know about these
I
stocks.
think we're still in selling on rips mode right now, and again, we saw some meaningful earnings revisions take place over the last 6 months or so. Actually, the fastest that we've seen earnings revisions come down since the global financial crisis in March of 2020. But I'm afraid they haven't come down far enough.
GME down 5%.
Earnings season was decent, but it was a very low bar, coming into this quarter. And we heard a lot about companies starting to see some of the weakness, especially in the retail space recently, as a lot of the retailers have reported. So I'm cautious, and I think we're still buying on dips, we're selling on rips at this point.
New low on Bed Bath & Beyond.
I'm glad I asked that last question. Timothy Chubb, good to see
79.30 is the low. Broke yesterday's low.
Thanks, Timothy. Later this hour, we'll be joined by the founder and CEO.
I guess the day before we had a lower low.
Rang the opening bell, the Nasdaq. They'll begin trading, and so we want to hear more about the company. And
ENS is down 3.5. XXII down 7. Still holding above that support. I'm not liking XXII. That's a serious flush today. Yeah, might be getting out of this one. That was kind of my line. I even gave it a little extra room. Might get a bounce in it tomorrow, but I'm not too stoked on it breaking that support. Yeah, I close those shares. Like I said, it'll probably bounce. We're not have to think about it or look at it. But yeah, I'm not liking that. Probably do a GNS where it, or a HKD where it rips the next day. HKD's at $7. Glad I got out of these, man. There's a flush. BBY down 2% now. See if it holds the support from the other day over here. Yikes. Rob has said that it has sufficient liquidity to cover 100% of the bank's deposits in the event of a crisis. GME kind of at that low there. Any support? XD hanging out high. Volatile hanging out the highs. Hey, Mark the Shark, what's up, man? Awesome coin puts, yeah. Yeah, that news definitely sent it. A nice little double top, was well played. Good to hear, Drew. Up. 78. BBY is just like kind of flushing here. News? This is interesting. It seems like there's news. That's a pretty serious sell-off. Ching is like a super bear. Yeah, if GME pulls that support, breaks that, probably just this 22 level, 22 even. Around here. SPY's coming down, new low on SPY, filling that gap to the downside. What happened? I don't know. BBY came down though. GME's came down. It's come down. SPY's also come down. There's a bounce on BBBY. I don't know. Yeah, I don't see any news or anything. Not sure what the flush is for. Yeah, no news. Crime. Yep, crime. 1950? Yeah, that's a historic support on GME, the 1940. 1940 double. If it makes it there, yeah, it could be a good buy. It holds, bounces. Volatile. Almost a new high on the day. SPY flushing down. Cosmo, little cup here intraday. Birds flat. FoxD flat up 90%. SPY filling the gap. Still up 0.5% on the day though. It was up what, like 1.8 at some point?
unique environment where we're actually raising interest rates during a period of stress and not cutting them. We're actually seeing the money in terms of currencies tending to favor non-US.
Interesting. Dollars coming down with the SPY.
Yeah. And as I was thinking about 2024, and we go into an election year, but then they'll be cutting rates. And so we'll have a lot to talk about for 2024 now, too, as I think ahead. Jeffrey Kleintop, I'll be here. I hope you'll be here. We'll have a lot to talk about. I won't even put you on the spot. Thank you, Jeffrey Kleintop, Chief Global Investment Strategist of Charles Schwab. Jeffrey Kleintop and I have both been around for a long, long time, so I'm willing to bet we'll have plenty to talk about ahead. Coming up next, we'll be joined by the founder and CEO of Near Intelligence. Rang the opening bell at the NASDAQ this morning. We'll begin trading tomorrow. We're going to learn more about the company, and that's all next here on the Watch List.
SPY just a couple points away from filling that gap. Keep averaging in. There it goes. SPY just flushed through. 393.12. Next level there. Already 200 puts for April 1st, 21st. I feel like I could go a little bit higher. Not to say I'd go long, but might have another day of averaging. It's got a little bit more to really hit this resistance. Might not, but I mean, this is just getting silly up here with all these tiny little bodies, wicks. SPY is flushing down now. 393.12 is this next level I have. No, you can't say that, Gene. This is why you can hold some, though. You can scale in, scale out. The great lesson to learn. Timing the market's difficult, so the less you can do it and still have exposure, the more successful you are. All investor conference enter today? Yeah, that's makes sense. Maybe it won't rally more. Oh, if you're just doing one, then yeah, not much you can do there. But you have to look at why would you have held it. So you need to find a reason why you got rid of it. Whether it's a price target, a VWAP, an indicator. Just say I should have held it. Doesn't help you for next time. If there was no indicator that was reversing or that, you know. Dude, look at how ugly this chart is.
using, it's almost like AI, right? I mean, you're basically following consumers and understanding what they do or don't do, what some of their habits are, their behaviors.
Versus down
and
8.
its behaviors mostly
This thing was
for
up
what?
pre-market, wasn't it?
What they do for work,
Yeah, it
how
was up
they
like
shop,
10 pre-market.
or anything.
Yes, I think the behavior around
SPY broke
places
through that
mostly.
393.12.
So you could look at,
maybe going to
and
yesterday's
you can
low.
learn a lot from that, right? So to your point, it could be, where do people live? How do they go to work? Where do they shop? Where do they buy groceries? Where do they play? All this behavior is important for
GME
brands to
broke
understand,
that level
like I said, because
from
today,
yesterday,
more than ever, the
or today
reliance on
actually,
data is very
broke
crucial.
below that 22.44. It's down 6%.
So what are some of the big takeaways? I mean, I see
Like
all
how
the
this guy
different
has a
companies that you work with
side
here.
posture,
What have
giving her
been
a
some of the helpful trends that you have
high school
since
portrait
found out post-pandemic?
position.
Yeah, I think most of these companies that we
Classy.
work with is already sitting on huge amounts of data. The challenge is they don't
GME
know
19
how
cash
to
crypto.
derive value out of this because most of these companies aren't data
Yeah, I
companies
love that
themselves.
word.
We've been doing this for 10 years.
BBBY IB has been elevated for months.
When we work with them is, there's challenges around privacy, there's challenges around security, and of course, most importantly, sort of what are they doing when they're not in their premise or property, right? What happens when you walk out of the door? And that's where NIA comes into picture and say, okay, when someone walks out of your door, actually they go to your competitor this many times. This is where they live. This is where they
cash you could put
sort
on
of shop
GME.
and all these things, which helps retailers, restaurants, real estate companies, and tourism organizations who work with us with insights that is not available to them before us.
Yeah, I mean, you're working with some really huge companies from what I see here. You can correct me if I'm wrong. But the addressable market, the potential?
The potential we are looking at around, the total TAM that we're going after today is around 23 billion. So we have a suite of products that is designed to basically be sold on a SaaS basis. So customers would typically license this on an annual basis.
Shut up.
And then get access to this insights and analytics and further data.
And then you do
No new
have
8K.
the issue. I mean, first of all, since you're going to find out in the physical world what I'm doing as I walk out.
Lost you. Sorry, if you can hear me, I just lost you.
Yeah, Deutsche Bank up.
I hear you.
Slaughtered.
Maybe we'll just give them a moment. 1, 2, 3, 4, 5. I was really thinking about how people can get in like a Ford, or do they get in a Tesla, or do they go for coffee, and how they get to work and what time they come home and everything like that. So it certainly seems like NIA is putting together some really important data for so many companies. And as he noted, and Neil Matthews noted, the addressable market for this $23 billion total addressable market, largely untapped in his words. And he also told us this was one of the best days of his life, ringing the NASDAQ bell today. So you can look for that stock tomorrow. And
I guess I do have buying
IR is
power.
the ticker symbol. And Neil Matthews, founder, CEO of NIA Intelligence.
Get some bank exposure.
Still ahead in the second half of our show. We'll talk more about the Fed and how you should be positioning your portfolio. You want to hear about that. And as we head to break, the S&P 500 still holding on to a gain. Check it out.
How many options by the time? Oh, there's no way to say. I mean, I don't know. Sometimes one, sometimes hundreds. It depends on the strike, expiration, how much the underlying asset is. A cheap stock like BBY, your option is going to be way cheaper, so you're going to buy a lot more of them. Something like SPY, yeah, you might only buy 1 or 2 or 5, or depends on how much you want to allocate. And it's nice to have more than one just for scaling, I guess, but you're also paying a little bit more for fees. Not a big deal, but once you get to a lot, though, it's kind of annoying. Once you get to like the hundreds and plus, then you end up paying quite a bit. That usually doesn't end well. I know, I would like to also. I just feel like I have enough exposure on it. I don't want more risk. SPY is still weak down here. Looks like it probably is going to hit that at 392. What a range today. Maybe. Or we're getting an inverted head and shoulders here. A little bounce there, a little reversal double doji candle maybe. BY bouncing up a bit. Didn't make that big of a move, it just looked big for how flat it's been. But BAT's only down 1.6. SPY is bouncing up here. GME is down 5.95. SPT. SPY. That gas new low. Hopefully it's triple bottoming here. For Jason's guidance. Jason's secretly whispering you guidance. FRC long? Dude loves dip buying anything. Yeah, inverted hammer. It is a bit bearish. Is that a mistake? You're lying. Bank on the brink of collapse. Do you realize what you've done?
Observations from a relatively novice industry outsider who is not familiar with standard operating practices and principles within the fintech industry. KeyBank pointed out that Block is subject to numerous laws and regulations as a financial services provider that they trust they are following, and they believe that Block fully complies with the regulations and laws that prevent the maximum amount of fraud possible within a business that they did admit is inherently subject to, while not immune to, any instances of fraud. Block did then say in response to this news, they are working now with the U.S. SEC on legal action against Hindenburg.
We'll probably get a bounce before close. Maybe even make that a green candle.
Report, they said, regarding Cash App. They said they've reviewed the full report and they believe it's designed to deceive and confuse its investors. And Block said it's a highly regulated business and they're confident they fulfill all compliance and regulatory requirements and standards. So it's been an evolving story.
Continuation here to the downside.
I do think it's very, very interesting, but
no reversal necessary.
Shares
just gonna keep going.
To decline. I mean, down over 15%.
It's only up 0.10. It's gonna go red.
This move today then puts it lower on the year, down
big
over
intraday
17%
move
for the month. We're down about 60% from our yearly high, although still up about 19% from the yearly low. So it definitely has done some damage to their overall technical picture on a year-to-date basis.
Yeah, and this is what we were talking about when you say about the run on the banks, and this is how it all started with one person saying something on the internet, basically, right? And everybody reacting. And the truth of the matter is, even though KeyBank has come out and said we stand by our expert research, even though the company now is plans to work with the U.S. SEC, as you said, on legal action against Hindenburg for inaccurate short seller report.
I feel like Bitcoin keep rallying.
Stock
Crypto
is
in
still
general.
at the lows of the day.
banks
basically.
falling
I mean,
out.
I'm talking pennies off the lows of the day.
Right.
So the
Not the reason for the rally so
doesn't
far.
help this stock at
Only
all.
the banks
and
are over.
That's the issue too. So we'll see what
New
happens.
low
tomorrow.
there on
Jenny
GME.
Horn, thank you for that.
22.31 down
Appreciate it.
6.5 now.
Appreciate it. Okay, let's welcome in Ty J. Young, CEO of Ty J. Young Wealth Management. Ty J. Young, so what were your takeaways from Jay Powell and his commentary yesterday?
Well, I thought it was very interesting, and it just leads me to believe that that we're going to continue to have rate hikes, and those continued rate hikes likely will push us into recession. I think it's a medicine that we have to take because the spending that we've had since the pandemic, we've been spending like drunken sailors, so we have to continue to raise rates to get inflation under control, but not a medicine we want to take, that's for sure.
Right, understood. But at this time, I mean, do you wish he didn't do anything?
In the environment that we're in, no, I don't. I would rather he continue to raise interest rates to get inflation under control, because if we don't get that under control, we got a bigger problem than we have now. So, I think we should continue to raise interest rates, or he should continue to raise interest rates and get this inflation under control. And really, sooner rather than later. It's not a medicine that I want to take, as I said, but I think it's a necessary one.
Right, understood. And really, as we were talking earlier with our own Jeffrey Kleintop, he was noting the ECB, the Swiss National Bank, the Bank of England, and others that have continued on their path of raising rates. So he would be really the outlier, the one who didn't do it. And if the
SPY broke through that low.
Rear its head again in a big way. We're
Low from yesterday's Powell. It's now negative.
And you mentioned the word recession. So with a recession possibly looming, in your opinion, how do you tell folks and investors to position their
It is getting
portfolios?
wrecked finally. Probably the SPY just going red.
We just released our
Yeah, there you go, starting to come down.
Security ebook.
Oh, I didn't really look at the chart on
Go
Bitcoin.
to tyjyoung.com and
Divergences
get a
though.
copy at no charge, or just Google Ty J. Young ebook. But in there we talk about
Yeah,
the
that-
three
that
secrets.
flush on
First
SPY.
one is Warren
Through that
Buffett's
low.
number one rule for investing: don't lose money. Have your money in a place where it's safe, protected against market loss. Second rule: grow your money so you can stay ahead of inflation. And third, keep it simple. The more simple the plan, the more likelihood of success. Very, very important. And in there we also talk about, and there's videos and QR codes they can scan, tons of education, but we talk about when you work with one of our advisors, you
It's
get a
sticking
winning
off.
portfolio that has offense and defense. Offense to grow the portfolio, to support income, and then
Banks down
defense
Fridays.
to protect you against the market downturns that we know based on history are going to come. That's what a winning portfolio looks like. And Nicole, you wouldn't believe how
Still
many portfolios
flushing
we
through
see
new lows here,
coming
down
from other
0.10%
firms
now.
that don't have defense.
Huge
And they
intraday
have
move.
offense, but they don't have any kind of defense really
Right,
built
and
in to
yesterday.
protect against market losses. So a winning portfolio has offense and defense.
Right, understood. I mean, at this point now, it's very hard not to lose money at all. I mean, what would be more of a safe play versus a risky play in your mind?
Well, we actually have 7,000 clients in a product called a fixed index annuity. And I love this product. You and I have talked about this before, because you put your money in, you're completely protected against
A's
market
better.
losses. When the market goes up, you make the first 10 points, the first 10% of what the stock market does, or the S&P 500 does, or the index does on the best products right now, and they lock in. And when the market goes down, you don't lose anything. So you go up with the market, your gains lock in, market goes down, you don't lose anything. So you can have the safety that you want and need. You have the growth that you want and need. And it's simple. It's just something that you adjust once per
Tesla,
year.
man.
We love the product. As I said, we manage it for over
Rejecting that
7,000
200
clients.
today.
And it works out very well. So
That was
it's
yesterday.
not for everybody, but
And
if
today.
you want safety,
Ooh,
you want
everything
that
just hit
peace,
its
you
top,
don't
it
want
looks
to go
like.
backwards, and you're okay with a cap of 10% gains per year, not a bad place to take a look. And you learn about that in the ebook as well.
Yeah. I mean, just the near term. I know you have to be big term and long term and sort of stay the course. In the meantime, yesterday we had a sell-off late in the day, some jitters following Janet Yellen's comments, and today we started to bounce back. In fact, the Dow Jones Industrial Average was up 450 points or so. I don't know where it was exactly at the top, but the point is, you get the point. The point is every single
Doesn't
sector
look
was
to
in
the
the
last
green, and
half hour.
now completely different. I mean, I see a few sectors in the green, and the Dow has turned negative. It is down 85 points. What's with the selling at the end of the day? I mean, the markets seem to fizzle out.
You know, that's the thing. You know, I don't know. I mean, at the end of the day, we're guessing as to why that's actually happening. But that's the thing we talk about to our clients about. They don't want risk. If you want risk, you want to have to get whipsawed in the market up and down, which is what seems to be happening. Up one day, down the next.
Might be bouncing on that level we have.
Direction. We're not
getting
any
level,
leadership out of Washington. So you look at all that. Some people just want to be secure and know that it's going to be smooth sailing for them. They're going to ratchet up with their money never down and have their income secure on a monthly basis for as long as they live. We do all those things for our clients, and that's the most important piece of the puzzle. You know, why the markets go one direction one day and one direction the next. A lot of people speculate on, but not that many people, or not anybody, actually really knows. It comes down to long-term, as you mentioned a second ago, long-term, making sure you're going forward with your money, never backwards, up and never down. That's the key for our clients.
Yeah, and thanks for telling us about those 3 financial tips that you have as well. Ty J. Young, I know you said you have it there on the website available to people. Ty J. Young Wealth Management. Good to see you. Thank you very much.
Good to see you, Nicole. Thank you.
Still ahead, we'll bring in our panel to discuss the housing market. We've gotten some pretty good numbers overall for home sales. We got new home sales. That was a slight decline. Existing home sales saw.
But Bath, pretty unfazed by this drop, really. I think this was isolated. Yeah, Excel's back here. This whole move, BBY was flat. The beeps and bobs, yeah. Real life trader. Bing, 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 bing. Is that bounce real? Oh, that's ugly. XMD. That's ugly. SPY's making a new low here, I think. GME also. Yeah. Yep, new low on the SPY. GME filling this gap. You sold is taking long to settle? What do you mean? Yeah, I took a reverse today. A rerun. A reversal. Oh, glad I sold this thing so long today. Thought it was lower. 1835 is the gap. Sorry, 1772. but 1940 is a pretty solid support. Yeah, I don't know what it means. Sold shares when my brokers yesterday. Oh yeah, it'll take 2 days. You're not on a margin though? No margins available immediately. We broke 391.20. I hit 390.92. We're necessarily there for a good bit. We just bounced there. We bounced there here, here, but the big bounces were here and here. I was just bear flagging, consolidating down here at the low. Guess we're gonna have to draw some more lines. I don't even know, man. Kind of a long ways till the next major level. They're like there. They might end up being a big day. Yeah, if you have margin, you can trade with the cash right away. Yeah, just buy. I bounce in a little bit. Same with GME. GME hit 22.20 as a low.
About the real estate market being a safe play, you know, for as long as we can see in the future.
Right. And what about building permits, Daryl? That's something you were watching closely. And there's the different kind, you said single family starts and multifamily. And these building permits sort of give you a glimpse into the future, right?
Yes, and building permits were up last month. Builder sentiment is looking good. So it's nice to see that that is filling a bit of the gap with the lack of existing inventory. Builders are now focusing more on multifamily housing, which makes sense given how much land values have gone up in the last couple of years. And people want that affordable starter option, so multifamily housing makes a lot of sense.
Right, and you talked about that a little bit, some of the starts in the Northeast. I wanted to talk about the regional sales in the Northeast were down. In fact, I just want to really double check this before I say this out loud. Yeah, this is right. Sales in Northeast were down 40% from January, 55% year over year. So it shows that Northeast has not been hot. But Daryl, to your point, you did see that the starts are showing. Are they showing any improvement or no? Starts
yeah, I've been seeing some funny quotes about the banks.
Is there any part that's showing improvement? South, probably, right?
South and the West is where we're seeing a lot of new construction. No, California has passed a lot of legislation to make it easier to build multifamily housing or additional dwelling units, so that's helping in the West. And then the South is just really popular. People still want to move to Texas and Arizona, and it's easy to build there.
Yeah, because here it says starts rose in the Northeast and West, fell in the Midwest and South. Look, the truth of the matter is it's really hard to pinpoint. Rogers, you've had a long career. How would you sort of quantify what's going on here now? And the takeaway, this is a lot of people are left scratching their heads.
Dollar's starting to rally.
Home builders.
Yeah, it was coming down earlier. Oh, yeah, there you go.
These products out that they've been
yeah, we're gonna
for.
flush, I
But
think.
home building stocks have done pretty well for the most part, especially compared to some weaker parts of the market.
Yeah, thanks for calling me.
Yeah, they're
old on
both
live
coming down
TV
before.
For one. I agree. It's been a long journey. These are real estate wrinkles, folks. If you want to go and be stressed, get into real estate. I'm just kidding. I'm mature. I've got tenure. So look, I think at the end of the day, look at things very, very black and white. And when we see people that are going to go and be the next generation of home buyers, and we have a lack of inventory, that means that they're going to have to go build inventory for these people that need a place to live, whether it's a rental or whether it's a purchase. So I think that another reason the Northeast is going to see a slowdown is because there's not a lot of land left. You come to places like Arizona, Texas, Tennessee, Georgia, all these places we keep talking about as far as the safest markets, because we have places to build. Even in a place like Dallas, which is the unicorn city for real estate across the world, there's still tens of thousands of acres available for building. So, I think all signs, again, point to real estate not being the reason that we've been in a recession for the past 6 or 8 months. Real estate's going to be the hero here, and thankfully, we have job security.
Yeah, and home builder sentiment did rise for the second month in a row. In February, we'll continue to follow that. I think
Starlink,
it rose again
Sounds
on
good.
the 15th
Starlink's expensive,
of March,
but yeah.
so that was the third month in a row. And as we use that as a barometer, it just makes you feel like people, you mentioned, Daryl, that people should just bite the bullet. They can get an adjustable mortgage. They should get their place, and they can adjust it later.
It really depends on each person's appetite for risk. I mean, if you're willing to take the risk of interest rates potentially going up, then you can take on that adjustable rate mortgage. But there's so much volatility. I think we're in for a couple of up and down swings with mortgage rates. It's not going to be a clear path down.
Yeah, Rogers, I had a friend who once said, you always buy the house in
the American Dream in Mexico.
fun spot, and
Other
in
Americans
your
doing it.
primary location you
Mexico,
should rent.
Costa Rica.
In his case, he was saying, look, you buy in Nantucket, you buy in the Hamptons, and you rent in New York City, because the outlier one will double or will do
low
better.
there,
Is that
390.54.
I'll tell you what is true is I want to be friends with your friend, because it sounds like they have a way more fun weekend ahead than me. But yeah, look, I think that, again, another saying is you buy the house and you date the rate, or you marry the house, you date the rate. But again, real estate doesn't have to be a simply emotional play, and it also doesn't have to be a financial play. I think you got to do what makes you feel great about something. And if you can afford to go and have 2 properties, that's not a problem in my book. That's a great thing. That means you have the luxury to go and make decisions, probably quicker than most people. So yeah, find a property that feels like home, and then once it feels like home and you're just bored with it, you call someone like me to help you find another place for the weekend, even if you want to lease.
Good plug. I love it. Spoken like a pro who's brand new to the market, not old at all.
Yeah.
Nice to see you both. Wonderful to see you both. Daryl Fairweather of Redfin, Rogers Healy, the Rogers Healy Companies.
Oh, never mind Redfin.
Thank you both very much. Thanks for being with me, friends. I will tell you, markets are now at session lows. Glad you're with me. I'm Nicole Petalides. Right now, the Dow's down about 100.
Hour, 3 minutes.
Keep it right here. Market on close is next.
There's a bounce on SPY. Got a long ways to view up. Puerto Rico. Yeah, I know Puerto Rico would be sick. Or at least having a residency there. House in Florida. Have a amphibious plane. Yacht. There's your bounce. Big old bounce. Holy smokes. Violent. Even bouncing BBBY. Always interesting to see Bed Bath move with the SPY sometimes. Because it seems like it usually doesn't. This bounce is getting everything awake. Whew. Oh man, dude, those the calls there on SPY.
See the Russell's underperformance. We saw also a couple pretty big moves to the downside still in First Republic and Pac West. Those right now are basically the two we're watching as potentially under some threat, at least judging by the stock market's perception of their fundamentals. Those two charts are pretty ugly. Generally though, up until the second half of the day, it's been a pretty strong market. Right out of the gate, we saw a major high beta risk-on rally led by NVIDIA, essentially one of the key stocks right now. Netflix had an extremely powerful move as well, but for me, chip makers are more important. And so NVIDIA leading that group throughout the session here and staying pretty strong is definitely one of the more bullish events that you can ask for if you're looking for further upside in the market and the NASDAQ. The SMH ETF that tracks those semiconductors, I think is at a pretty important level. Maybe. I don't have a ton of confidence in this line, but Kevin Green also saw it too, and he's a great chartist as well. So I think that it's definitely worth considering here with the chip makers as trying to break out. You can see that about a year and a half ago, the chip makers spent quite a bit of time trading around this 250, 260-ish level before they popped to the upside and then kind of vacillated here also around 260 before breaking down. So let's see if NVIDIA can lead the group past this level with some conviction. I think that's about the best situation you can ask for as a bull, is for that to happen. Hasn't quite happened yet though. Look at what's happening in DC, not just for Janet Yellen, but also with the TikTok and the social media scrutiny happening as the CEO of the app doesn't exactly convince anybody, I don't think, really, that there is a big disconnect between his business and the Chinese government. Meta shares have been strong. Snap's been having a good day. I think there's pretty good reason to think the strength in some of those social media stocks has been attributed to the possibility of a TikTok ban or some sort of regulation. A side story, perhaps, amid everything else happening right now, but definitely an important one. And I do think that with our focus on banks, our obsession with the Fed. We have certainly lost a little bit of the news flow when it comes to America's main economic adversary, which has been China, tightening relationships with the Russian government, and now tension in the social media world, something we probably want to keep in the back of our mind as news flow around banks and central banks, if it ever dissipates. I think China comes back into the forefront. For the most part, we've been thinking about China as connected to the reopened trade and what that means for certain sectors and inflation, but right now, we've definitely been a little bit myopic in our bank focus here to miss some pretty big stories out of China. Just kind of a wild card thing to consider here. I do think, though, that generally the focus on what's happening here domestically with the central bank and its response to the regionals is still, of course, the number one story. Look at the way bonds are rallying as First Republic Bank just is an awful-looking chart. You could argue this is a descending triangle type of situation, but it's basically just a free fall. It's essentially a crash. You're just not finding any buyers of any reputability here as any type of balance in these companies keeps fading. Now, in the last half hour, it doesn't show up on this 10-day chart, but we did get about $1 tick higher, as I think the market is trying to extrapolate what might happen with the Treasury Secretary's commentary today. But even if Janet Yellen and the government do backstop depositors at these banks, is that really a panacea for the banks as a company and as a team of management leaders who have made decisions over the last 3 years to either not hedge properly their long duration assets or not diversify their client base enough? There continues to be a very strong overlap, both regionally and client-wise, in the banks that are under the most stress. Silicon Valley, PacWest, LA-based, First Republic, California. Do not forget, this is at its core, a tech bank collapse that is exacerbated by extreme bond volatility induced by the Fed. Takes two to tango. A lot of people like to leave out whichever part doesn't fit their priors here. Also, speaking of sticking with your priors, look at the ARK fund down 2% today. Big day in the crypto world. I mean, huge. Caroline's going to take us through it here in a moment. It's not showing up in the price of Bitcoin because Bitcoin is a very Fed-centric high beta trade, but it is showing up in the stock pickers who haven't seen the writing on the wall with the government's aggression into crypto institutions like Coinbase, with the SEC filing, and then also the Hindenburg short report on Jack Dorsey's block, which they say they're going to. Let's bring in Caroline. She's got the story for us. Caroline Woods at the New York Stock Exchange. Okay, so big day in the crypto world, Caroline. I mean, these are some huge stories.
They certainly are, Oliver. So I don't even know where you want to begin, but let's start with Block.
Okay.
Let's start with Block. I think that's a good place to start. I mean, both Block and Coinbase are both just getting killed today. Block is down about 15.6%. As you said, Hindenburg out with a short report making its position on Block very well known, claims that Block inflates user metrics, lacks strong compliance controls, calls their compliance controls the Wild West, essentially, and facilitates crime on its Cash App. Hindenburg, of course, noted short seller, started this 2-year investigation.
That's why giving up that bounce a little bit. Thank you, Ace Ventura. Appreciate it. Yeah, Jing, you've been here a bit. You're due for membership.
In fraud or were additional accounts tied to a single individual. They actually tested theories that
get it on all the accounts. Thank you, Ace. Appreciate it, man.
Anti-money laundering rules.
I'm moving back up here a little bit. Thing is with the if GME does on the 10K has a merger acquisition, some kind of news like that where they've spent a lot of cash, I think that would probably actually bearish for GME. I could see it selling off with that news. Share buyback might be bullish, but not necessarily.
It's down about 15% right now. There's an SEC battle.
So with that 10K, I wouldn't get your hopes up with GME rallying from that. Maybe another company rallying from that, but
violations of U.S. securities law. So a Wells notice is
not
not a
necessarily
formal
GME.
charge. It's not a lawsuit, but it can lead to one. In fact, it's kind of one of the final steps before the SEC formally charges, issues a charge.
Jane,
so
did you get
one of the final steps.
the pump with some
Coinbase
calls?
said the charges
bad.
relate to an undefined portion of its listed digital assets, as well as its staking service, Coinbase Earn, Coinbase Prime, and Coinbase Wallet, calling the investigation cursory, so pretty hasty. In a blog post, Coinbase said they are confident in the legality of their assets and services, assured customers that current products and services will continue to operate as normal, saying this does not require any changes to its current products or services. Shares down regardless, as I said, down about 15%. Also seeing some analysts weigh in.
It almost made the VWAP just on that wick right there.
Perform from outperform, citing an unhealthy regulatory environment. Dan Dolev, who's obviously a friend of the network,
consider selling covered calls, dude.
He kept an underperform rating and a $30
IB
price
is
target.
up.
So if you take a look,
Just try it.
Coinbase is currently trading at
$66.
So his price
Go to your
target
options chain.
cuts the
You don't have to select your shares or anything. You can just sell calls in the same account that your shares are in.
Altcoins may ultimately
Wouldn't do
require
dailies. I would
registration
look at like
and risk of application denial could
April or just
significantly
April.
weigh on Coinbase's ability
You
to
want to sell
generate revenue.
$24?
In terms
Sell
of
calls at
other
$24 or
stocks,
$25.
well, you know, we can talk about crypto. You
Lock in
mentioned
that profit if it rallies past
higher,
25.
having no impact
You didn't
there.
sell your
Same
shares,
with
you're good.
ETH. You said those are more Fed-centric.
But you would have sold them at
But we're
25 if
looking
you let
at,
it just
Riot
expire. So
Blockchain actually up 14% today. MicroStrategy up 4% today.
Okay.
Marathon Digital up 6% today. Robinhood was higher initially. It is lower now. So it's interesting that it's this mixed picture, despite the fact that
let's
it seems
see.
like
Let me
there
give
could
you a
be
little FOMO
an
here.
SEC battle. There could
So
be,
let's say
you know,
24
more
because you say if it moves back up, you might sell. That'd be
so there's
23
a lot of
even.
uncertainty
Let's do
here, but not
23.
weighing
You say
on
23.
all stocks across the board.
Let's turn over something else.
Just on these particular ones, but really.
Let's say how many shares? What, 5,000 shares? No.
Yeah,
Is that too generous? I don't know how many shares you're going to sell.
Remaining very focused on the macro.
Say 1,000 shares.
shifts
You just want to sell
that are
1,000 shares.
happening, And it did fade with the rest of the market
23.
here today pretty substantially from 3-4 hours ago. But to your point, still higher, and also just kind of with the broad market, this ability of the crypto world to kind of silo off Coinbase and Block, particularly Coin, to me is
Ace,
pretty
$2,000.
mind-blowing, given that all this stuff is
If you
just going to
sold
make it harder.
just 1,000
for
shares worth
everyday
of calls.
folks to be interested in institutional investors
$2,000
to
by
take
next,
part in this. So seems like this has been kind of the natural
by
eventuality since FTX blew up.
April OPEX,
Speaking of
OPEX.
which, that the government would come down harder.
That's just on 1,000 shares. You did 2,000 shares, it'd be $4,000.
Token that was part of the waterfall that eventually cascaded down to FTX blowing up Do Kwon.
And if it goes up,
apparently he's arrested. Is it really him?
it's a win-win. You would have sold them for more than
That's what
24
the Wall Street Journal report is saying.
or 23. You would have sold them for 23 plus that premium.
Of course, as you said, created the failed Terra USD stablecoin. He allegedly or reportedly has been arrested in Montenegro after months
Nice, Gene.
of
Hope you
being
got out of that
hiding.
call.
He was detained in the airport
Got a lucky
with
bounce
false
there. Nice.
documents. So
I mean,
local
not lucky.
authorities
Timed
in
it right.
Montenegro are
But that was a
apparently
big bounce.
trying to decide if it is in fact him. So yeah, there's
Still
so
keep
many
the shares,
crypto
yes.
headlines. The other
If
thing
by
that
the
we
end
should
of
talk
April,
about, we
or
obviously we're
OPEX at
talking about
April,
the SEC. They actually were
which
out with an
is
investor
21st,
alert today, warning
it's below that
investors to
23,
exercise caution if they
then
are
you
in
keep the
fact
shares.
investing in crypto assets.
You keep the money, you keep the premium no matter what, the $2,000 on the 1,000 shares.
Offering crypto asset investments or services may not be
So you make $2,000,
with
and then
applicable
if
law,
GME is
including
above
federal
that price
securities law. Investments in crypto asset
on the
securities
21st
can
of
be
April,
exceptionally
then
risky and are often
you sell the shares for that
also
price.
saying fraudsters, warning about fraudsters exploiting, and they also, basically say to have an investing plan and understand your risk tolerance.
It's
given
basically like a
the
limit
amount of
sell.
risk. But I think, the big
But you make
question
money.
at hand is, are digital assets actually securities? And that's what we'll have to see if the SEC actually gives us an answer to this with this notice for Coinbase.
Okay. A lot going on. Thanks for keeping us up to speed, Caroline Woods. Good stuff.
My head is spinning.
Yeah, I know. Well, that's the crypto
Huge
world,
drop into the
really.
weekend.
Head's always spinning.
Market's pretty uncertain and pretty
Thanks a lot,
choppy.
Caroline.
I would
Rebecca
just
Walzer
take whatever
joins us here at
profits.
the top of the show, president at Walzer Wealth Management. Rebecca,
The shorter term here is
yesterday, obviously the
sitting up
highlight
pretty
being
bearish.
the Federal Reserve
Little head and
past
shoulders.
week here,
Right under the
big
9.
fall.
Bearish
Now the
MACD.
crypto world has got some pretty wild stuff going on. What's
If
most
it's
important to you?
tomorrow's expiration.
Well, obviously, Oliver, it's a mixed bag, and we're just trying to navigate these really crazy circumstances. But, we have known now for probably, I would say, at least 8 weeks that the federal government was really going after the banking of crypto.
If you're up 80% on daily or even a weekly,
like Silvergate and things things like
your,
that actually
your
are banks
mission,
that will
your
convert,
strategy is
your crypto back
scalp
into
or day
US
trade.
dollars, then it
Yeah,
makes,
you gotta take
unless
those
you
profits.
can use crypto directly to buy things, it makes holding crypto a problem if you can't
Back
get it
like a
back into a
beast.
domestic currency. So we've always understood with the launch of the digital dollar FedNow platform in July, which is obviously
Well, I got
the central
15
bank
minutes.
digital currency of the Federal Reserve for the United States, that, they were going to go after DeFi. I've told my clients for at least 3 years, everyone's always pressured me, what is your opinion about crypto? And I said, look, I like decentralized finance, I like the blockchain, but the problem is we don't know how the federal government's going to treat it, and until we do, it's going to be a regulatory concern and a risk factor. And so all of this that's going on with Block, with Dorsey, everything is all a coordinated effort. You can see the SEC
How's
going
your
after stablecoin
mini
Coinbase
account
now.
going,
You
Dink?
can see this coordinated effort, Oliver, to really
Day trade account.
focus on
Pretty
the
successful?
DeFi world, so that we can really, and they can bring forward their solution, which is the central bank digital currency platform.
Certainly is a lot of very intentional government pressure right now, as we see with the SEC and Coinbase, and global regulators as well, going after folks like the Luna founder, Terraform.
The thing is, Ace, you don't have to come back later with the vengeance. All this, you can scale out of your GME position by selling covered calls,
themselves? I mean, it
and
seems
get the
like
experience
when you
and get
hundreds of millions
great
to
exits.
Michael Saylor, who's buying Bitcoin 60% higher than where it was. Like, isn't that just a ticking time bomb?
I'm not defending them. I'm not defending them at all.
I know, Dink. How's it going, though?
You still have to have, obviously sound financial, economic, and financial banking principles to run a bank. I totally agree with you, but it's just interesting how it's a very consolidated, coordinated effort on these different platforms.
Do you think as investors, how do we kind of classify this sector, this crypto world, within the context of growth themes, tech companies? Because this week, people are really trying to buy all this stuff hand over fist again, and expectations the Fed's going to slow down.
Yeah. Anytime you see NASDAQ to the positive while the Dow and, the S&P is still to the negative, you know that the market is pricing in rate cuts. You know that the market's pricing in pivoting and going back to cheap money and even stimulus. So I don't think we're going to be there. I don't think it's going to happen. I think the Fed is definitely going to pause, maybe. Sorry, a little tickle in my throat. But I don't think, Oliver, that this is the end of the road and that we're back to, quantitative easing and really low cost of capital. We just can't. I mean, look at the Fed balance sheet, right? And we're talking about, they're saying the analysis is like $2 trillion to potentially backstop the big banks, $1 to $2 trillion, another $2 trillion if we're looking at the regional banks. The Fed can't do anything to take on another $3 to $4 trillion when they have a balance sheet above $8 trillion, which is the largest ever in history since coronavirus. So what we have is a problem of too fast of a correction of rates, too much stimulus post-coronavirus.
That's awesome, Dink. Good to hear, man.
Inflation in the first place.
Mostly
and
just
now we're going to come
SPY
back and
dailies,
fix
or
all of that with printing more money. That does not make sense to solve a problem with the same solution that created the problem. So this has got to actually go through gyrations. It's going to take a few months, and it's not going to be pretty. It's going to get ugly.
I hear you. So pause, but we would, I guess by that logic, have to have something real bad to happen for them to actually cut where the market expects them to later this year.
Well, I just think that if Powell indicates a cut, what he's saying is we see systemic problems that don't work themselves out without modern monetary theory, Keynesian economic, let's print and print and print and print, and that eventually will end, and it will end with a bad collapse. And so that's what we're talking about here, just staving off the collapse a little bit longer, pushing that can down the road. But you cannot solve a problem with the same tools that actually created the problem, and that's all. Those are the only tools that the Fed has.
Fair
That's
enough.
it.
Yeah. Rebecca, always a pleasure catching up with you. Thanks a lot for being here.
Thank you.
Absolutely. Rebecca Walzer. Okay, when we come back, we've got some options that Tom's going to trade for us. We're going to discuss some more.
Buys coming down here, not lasting that bounce. I think I'm going to sell my call here. Yeah, I was hoping for a little bit more bounce in today, but not seeming like it. So still have one more call, but I have a short call on it, which I might roll down. Maybe I'll just close the whole thing. Okay, close those. I know it's at the low. Should have closed it yesterday. I did. I scaled out. Too slow. I wasn't planning on closing all of them, actually. Market looks weak. I don't have time for GME to come down here and bounce and do all that. Too much decay. Next day. Buy moving down. GME made a new low there, 22.18. There we go. Got rid of all my green stuff in my account. Ugh, that was making me sick. Too much green. Back to red. Hold on to the red. Sell the green. That's how I win. AMD puts. Nice. Thanks for coming by, Mark. Always a pleasure. GME's down 7%. New low there, 22.5. Okay, close those. Hold on to that one. On the red wicks. Futures is it's a derivative. Trading S&P, you're trading shares or options. Futures is just another derivative. Next day has less decay, for sure. Yeah, I might even open up a... hate to say it. Little bounce there on SPY. I've got about 30 minutes to close. I'll wait. Whew. Fine. Bouncing around down here. 340 BBBY at the flush. See, FRC spike. Let's do it. That little guy? Just that was a move with the SPY, I think. SPY related. Sold your VXY early. The conclusion on the sorry, I think no conclusion. It seems like yeah, that last paragraph was maybe referring to that filing itself. Some other speculation. Jan was saying that was releasing the authority, not authority, but releasing the the authority of basically the parties that had to be private with the information, releasing that
day for all right,
requirement so that they could then disclose of the non-public information. So the warrant holders potentially are now able to basically speak freely to the public about what was private. Could be that, or maybe it was just specifically referring to that filing itself. I guess if we hear from one of the parties that holds the warrants, we'll know that maybe that was what it was. He's in the bong and marijuana cigarette. Marijuana. No, I don't smoke the weed. Don't smoke the devil's lettuce. Okay. Way more deeply than I thought. That does tend to happen. Yeah, I stopped averaging in. I'm kind of waiting for that momentum still. I haven't opened up any new cash secured puts either. Just keep rolling this. What are these? These I have. These are 1.5s. Yeah, keep rolling these 1.5s. You do coke, of course. Every good trader does coke. Once you guys get good enough, you will too. It's pretty short, Dink. You could have read it in like 5 minutes. So I don't know. You can see what you think about it. To me, it seems like there's a good actor holding some keys to BBY and the warrants, and because they're dropping the minimum price that they had on it, and I think the market was showing that too this morning, how it was rallying. BBY was up like 11% pre-market. To coke I wanted. No, I don't do coke. I'm a straight edge. The straightest of edges. This is looking pretty weak for SPY coming to close, just consolidating at the low. We might be getting a red Friday. I have time to do a recap video. I should probably do that. It's been a long time. I do Pepsi. Pepsi Cola. I need to do a recap video. Thank you guys so much for your donations today. Thank you, Ace, for the new member. You guys went ham on those donos, Ace, and it doesn't even show me. I remember you guys. Big hugs. I think you hit it up. freaking Mohammed, all y'all. Thank you guys. Yeah, I'm gonna do a recap, show my positions, some TA, BBY. I don't know if you can even call it that. There's nothing there. It's just news-oriented moves. But yeah, thanks so much, guys. Thanks, big hugs. Thanks, Daisy. Thanks, Steve aside. I haven't seen you in here. Thanks, Gene. Thanks, Ace, and John, and Dink, Bungie, Ryan, the 63 likes. You guys did well. I appreciate it. Tomorrow, I don't feel like it'll be too eventful unless if that 8K releases someone's obligations to stay quiet and now they will talk. That could be interesting. But yeah. Thanks, guys. Appreciate it. We'll see you on the recap video. See you on Discord. Sub up, like up, comment down. Happy money sticks around. All right. See you.